Get out of your way.
All right, thank you, Greg. I appreciate all the help. Cool. Good morning. My name is Jeff Gibby. I'm going to kick us off and kind of help make sure everything runs smoothly today. It's good to see you. Oh, hold on. Your fingertips. That's not supposed to happen. It's good to see you. Thanks for coming. Appreciate it. If you have any questions, make sure you ask. We'll be watching the questions. If you have any comments, if you're joining us on YouTube, like and subscribe. And if you haven't yet, we'll be giving away prizes. In fact, I need to pull a list of potential winners, a list of registrations. So if you want to go to metastock.com/traders-conference, which is a comment that Metastock is about to put in the chat room, you can register. You'll be on that list and eligible to win prizes. So it's good to see you. I'm going to go ahead and kick off by reading a legal disclaimer, and then just kind of talking a little bit about our sponsors. I'll go really quickly. We have a lot of really good supporters and sponsors at the event this time. Let's get started. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of any security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. I hope you enjoyed that. I do want to be really serious for a second, though. Anytime we talk today, I hope you learn some stuff. As we go through the day, we're not really going to tell you what you should be buying or what you should be selling, or trying to give you specific advice, but help you maybe understand and learn more about using technical analysis in the marketplace. It's always been kind of the goal with the traders conferences, and I hope it's something that we kind of deliver on. So with that being said, I do want to thank some of our sponsors. We'll start with the AAII, the American Association of Individual Investors. They started their nonprofit organization in 1978. They're a great partner of ours. We love them. I'm sure you've heard about the AAII sentiment surveys. They also create stocks. They also do newsletters. They also have watch lists that you can subscribe to. Great organization, hugely well respected. AAII.com for that one. Also want to say thank you to Stocks and Commodities Magazine for sponsoring the event. They've sponsored us forever. Like, I think we're going on 12 or 13 years of these big events that we do. And ever since the very first one, they've been on board with helping us with the event. And we really appreciate that. They've created, they've been publishing a magazine since 1982. I still get it delivered. I love it. They've got 1.3 million subscribers. If you have a subscription to Stocks and Commodities Magazine, you have access to all 17,000 articles. You can find more. You can sign up at traders.com if you're interested. Okay. We also are starting a new, a partner community. And we should go up there. It's really cool. There's basically, you can join us. We talk about the markets all the time. We do live chat. We learn about the markets. There's a lot of education up there. It's designed to be a community where you can kind of hang out, talk about what you're interested in, learn about the markets, and it's at the tradersforum.com. So I hope to see you there. I want to say thank you to the CMT Association. The CMT Association is another nonprofit, has a lot of respect. If you manage money, or if you're interested in managing money, having a CMT designation is awesome. It's going to be something that's going to be extremely helpful for you. You can find out more about that at cmtassociation.org. And last but not least, Trade Thirsty. Trade Thirsty has been a partner of ours for a really long time. The people that run it, we absolutely love. They have an ETF that you can go up and sign up for free, or not an ETF, an ETF ebook that you can go and get a guide to, tradethirsty.com/free. They have a big stable of different educators that have different analysis views on the markets. Just a great group to work with, tradethirsty.com/free. We're, of course, Metastock. We're going to talk about Metastock all the time. It's been rated #1 in its price category for 31 years in a row. We talked all day yesterday about scanning and finding the right opportunity at the right time is helpful, testing trading ideas. the patented forecaster. Well, actually, we didn't talk about that much last night or yesterday. Real-time alerts, commentary signals, all of that. The offer that we're doing for you is if you want to try out the software that's been rated #1 for 31 years in a row, if you subscribe for a month, it'll cost you $75 for the end of day version and like $265 for the real-time version. If you buy a month, we'll give you the second and the third month for free. That'll allow you to run the software until February. And you can do that at metastock.com/conf-promo. If you want to get some more information, if you have questions on kind of the capabilities of the software, let us know in the chat. Or you can call us, visit us online, metastock.com/saleschat, 800-882-3040. So I want to say real quick, again, thank you to all of the sponsors that kind of helped make this event happen. Thank you for being here. Thank you. It's all appreciated. Our first guest today is a friend of mine, Rahul Mohindar, who's actually been a partner of Metastock for as long as I've been an employee of Metastock, and maybe a little bit longer. The method that he'll kind of talk a little bit about today, the Armo method, is actually the very first methodology that I traded my own money with. I really love Rahul. He does a really good job about talking about the markets. And he's been a contributor and a guest on CNN, CNBC. Sorry, I'm going to shut this door in just a second, but I'm almost done. So all that kind of stuff. Rahul Mohinder is our first guest today. Rahul. Good morning, Neil. Good morning, Satish. We'll just do this real quick. Good morning, Vincenzo. There's one more. Good morning, John. John. Good morning, the other John. Good to see y'all. Feel free to kind of talk. Tell us where you're from, all that kind of stuff. Rahul, let's go ahead and get you started. How you doing today?
Good. Thank you. Always good to be back at the event. I mean, it's so amazing that you and Greg and the team tirelessly work to make sure that these events, go all the time, continuously, and a lot of commitment to the users. So really appreciate that, and always delighted to be part of them.
Cool. I can tell you that I can hear you well. I can see your screen properly. So I'll get out of the way. It's your turn. Go.
Thanks, Jeff. Thank you again. So, as I said, friends, the fact that you're here, I think you're here for a very simple reason. And that reason is, how do we become better users of Metastock, better traders, better analysts? Our goal is, of course, we all want to make money, but we also realize that the outcome or the final return all depends on the kind of knowledge and skill set that we hone within ourselves. That is something which we all need to look at from a very practical aspect. So today, when I speak to you, I have had the good fortune of looking at these markets from a very early age in my teens. So, safe to say almost, well past the 2-decade mark for sure, if not more. We are looking at the markets from a practical perspective. From practical perspective, in the sense as we're not just looking at numbers and statistics. When we look at technical analysis, we look at price. And I like to remind people that the one thing that we trade on is price. So what we really need to study is the price and volume action, nothing else. We pay a lot of attention into other components sometimes. For example, we look at fundamental data, we go on our gut feel, we rely on earnings, we look at EPSs, PE ratios, nothing against all that. But at the end of the day, all of these elements finally create price. And when you're looking at price, you're really studying the totality, because you can't trade the EPS or the PE of the stock. You can trade the price. So the fact that you're in this room, in this webinar, it's all because you want to become better traders. And that's a great first step. So thank you for being here. Thank you for making this happen as well. And listening to me, giving the time to me. I always like to, in a little short span of time, try and give you some important pointers that you can implement with immediate effect and see some results for yourself. Fortunately, with tools like Metastock and with the add-on that I'm going to talk about today, the Armo ATM, these tools are all designed around making our analytics fairly automatic, easy, and rule-based. Because we all realize the biggest component that attacks us when we get into trading and investing is our own emotion, is our own mind. And that's what often kills us. It's that intuitiveness that we often rely on. We start hunching about things rather than, getting mathematical about things. We start imagining and feeling rather than actually acting on a set of rules. So it's all about building a bit of a rule set for ourselves. And, this is how I do it. And, if there are any takeaways for you from the methods that I follow and, like to teach, it's great because I'm sure uh, these have helped me over the years. I'm not somebody who trades for other people or someone that gives out recommendations. I believe that we need to develop our own skill set and understanding on the analytics because good analysis is equal to good trading. And I want to take it from there. I want to, rather than I keep giving the example, there are people who are out there to just tell you where to buy and sell, whereas I'm not there just for that. I'm there to really help you understand what generates these signals, why are we looking at particular set of tools, and how are we going to trade using those tools on a rule-based approach. So I'm going to start with an introduction of the RMO. The RMO is an inbuilt indicator into Metastock. Again, the RMO stands for the Rahul Mohindar oscillator. That's why the name RMO. And the RMO aims at detecting the longer term trend of the market. So it's really trying to help you understand, is the market bullish or bearish from a primary standpoint, a primary trend standpoint, or a long term. So many people ask me, what is long term? And I need to kind of clarify that right out. When you're looking at a time frame, let's say it's daily, if you're looking at anything beyond 60 bars, that's 60 bars, which lands up being around 3 months of data, because we got 20 trading days approximately each month, then we're looking at that as the primary trend. So something beyond the 3 month marker on a daily chart or 60 bars. For example, if I'm looking at a 5 minute bar and I say my definition of long term could really be just the next 65-minute bars, which could be just 1 or 2 days. So his trajectory is very different. So long term could be defined very differently. Primary trend could be defined very differently for different people. So there could be people like, 3 months is no long term. It's got to be 2 or 3 years or more. Well, that's exactly what we need to understand. When I refer to the term primary trend or long term trend, no matter what the interval of chart you use, I'm referring to something beyond the 60 bar mark, right? So if I know something's bullish long term, I'm going to try and buy. If I know something is presently bearish in the longer term picture or looks bearish from here, we're going to try and look at how to go short. And I'm going to keep on citing why I built the RMO, how it helps you. And mind you, this is not to run down any indicator, but I like to look at stuff like this, where we've had markets that have gone up continuously. You can see prices have made new highs on these stocks, these indices. These are, dated examples. But even if you looked at some of your new ones, you look at the Bitcoin chart, the Nvidia charts, all the happening stuff in the recent months, you'll see prices have made newer and newer highs, but the RSI has been overbought and giving you signals of what we call a negative divergence. I realized in my old days that, look, by relying on the RSI and the MACD and other indicators, I was constantly being controlled or stopped from being trading. Because while the market is going up, you're constantly seeing a negative divergence. So, what is negative divergence? If you're new to it, where price is making a new high, but the RSI is overbought, which means above 70, and you can see falling tops on the RSI. So, price makes a new high. And each time, what happens is as the market makes new highs, you keep extending this line. And you know what? You don't ride the bull wave. You keep getting scared every time a new high is made. And really, we've been seeing new highs and new highs and new highs and new highs. Even in the current market scenario, if you trade the American markets, that's some of those tech-heavy stocks. They've done so well, and each time we think, oh, now it's too much, now it's too much, and we keep seeing them throttling through and through new highs. So You keep saying they're overbought, but remember, something's overbought for a reason, because maybe it deserves to be that much in demand. Maybe it's caught the fancy of traders. So let's not worry about terms like overbought and oversold. I think we've crossed the bridge. When I look at the RMO on the same chart, I am not worried that there's a negative divergence. I'm looking at the green oscillator. If it's above a value of 0, I see the long term's up. So this is a chart almost from 2016, for it's about 5 years of data. You can see right through that part, it's been RMO positive. In other words, it really wants you to just focus on buying, right? Now, within the RMO template, which is again pre-built, there's nothing that you need to set up. We've also worked upon the short-term trend of the market, which is depicted by arrows. And the third element that you see on the bars is a color. You see either a red color or a blue color, and that is the medium term trend of the market. So I wanted an indicator which can identify the long term trend. So that's being done by this histogram or the green oscillator on top. That's the RMO. And all I'm seeing is the RMO above a value of 0. So if that's above 0, that's bullish on the primary trend. And then the next thing, so that's how you apply the template. You right click apply template, use the pre-built one. So no settings, etc. that I'm doing. And the whole goal of that is to identify the primary trend and trade in that direction. Because if we trade in the direction of the primary trend, we clearly have better odds of winning, because we are trading in the direction of the stronger force, as I like to put it, the big picture. That's important. If something is long term up, you're not going to keep on worrying about where to short it. I mean, for example, I was looking at a chart of the Bitcoin, and that looked a very promising chart just on the count of the RMO as well as the ATM indicators. And if you and I were people who looked at that chart, that no, 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 it's gone up a lot. Let's find out where to sell it. Oh, it's got to correct. It's got to correct. It's gone up too much. And every day you see that it's kind of backfiring at you. So we're not trying to go against the current, against the tide, right? So if the river is going upstream, we go upstream. We're not going to try and top pick. We're not going to try and say, I'm going to try and sail downstream on it. Go with the trend. That's the whole focus, that trade in the direction of the primary trend. That's a core philosophy of the Armo. And the reason I say the Armo is largely a very nice automated hands-free system is because it's also detecting for you these arrows. These arrows are the short term. So if you look over here, the arrow comes first. The blue arrow comes right first. Then comes the blue colored bars, which is the medium term trend. So short term is the arrow, the bar color that you see in terms of red or blue. Now, some of you may like to use candlesticks, suit yourself, but I'm someone who uses bars a lot. So when I say bars, I really mean the candle if you're a candlestick person. So wherever you see a blue colored bar for the first time, that's the medium term trend shifting. So you may often have a situation where you've got a downward arrow. Look at all these areas over here. You got a downward arrow, but what's the bar color? The medium term trend is still up. The long term trend is seen by the RMO on the top, the oscillator on the top. So where is this whole construction of short term and medium term happening? We've built two indicators, the swing trade indicators, which are pink and blue, and those have been automated into experts to generate for you. So every time the pink breaches the blue, that gives you that sell. Likewise, when it crosses it, you get a buy. So the good thing is it's all automated. The expert does a fantastic job. In fact, I honestly don't even keep that on. The swing trade indicator is not required because the expert is pasting the bar colors and the arrows for you. So there's no need to get into a manual interpretation, because I'm not someone who's going to tell you draw divergence or draw Fibonacci levels out, etc. Right? So all I'm looking for is an alignment of where short term, medium term, and long term is there. So where you see this blue vertical line, friends, this is where you not only have a short term signal that occurred maybe 6 or 7 bars behind it, the medium term turned up, and then the RMO went from a bearish to a bullish. So when I say the RMO went up, look at the green histogram on top. It was below 0 and now it's flipped to above 0. That is also depicted on the axis at the bottom. When you look down at the x-axis, you can see somewhere between November, mid-November, from a bearish it moved to bullish. So that's marked as a ribbon for you. So if you feel that no, I don't even need to look at the Armo, feel free to. because the expert does the job of pasting where exactly the Armo is bullish or bearish. But the idea of keeping that Armo on is you sometimes know when you're nearing zero. Maybe you get that first hand pulse that maybe it would flip or could flip. So you get a bit of an early indication. You get some readiness that if this happens, I should be ready to take a trade in that direction, right? So to recap, I'm buying when I see a buy arrow, which is the short-term trend. The medium-term trend comes into alignment when I see a blue bar. And thirdly, what I'm also making sure is my long-term trend or the Armo oscillator itself goes above zero. When I have an alignment of these three, that's when I'm looking at going long or buying a stock. Which time frame to trade is another question I often get. And mind you, this is going to be a very different answer. It could be daily for somebody, it could be a 5 minute for someone, it could be a 30 minute for someone. But whatever you do, please stick to it. Do not switch or toggle between time frames. And the reason I warn users is you may go and use any of these systems and say, I have looked at the past 10 signals and I can see there's safely 6 or 7 out of 10 in alignment and giving me a fairly good move. But when I do it, it doesn't work. And that often is because either you're changing the stock or you're changing the time frame. Same stock, same rules, same indicator 10 times in a row. That's how you will know that you're 7 out of 10 correct or not, right? I'm not trying to suggest it'll always be 7 out of 10 correct, but I'm giving you some kind of a ballpark. It could be 6 somewhere, it could be 8 somewhere. Uh, but it's a great ballpark to have in your head that that's the kind of clock it does. But what's more relevant to you is that it gives you a fairly large move. Forget hit rate, the risk is to reward is fantastic. You can see the breakouts give you a breakout into a primary trend. So, one can't just look at an element, oh, I'm 6 out of 10. It doesn't matter even if it's 5 out of 10 correct. The point is if it can give me that first move, if it can give you the sign that that's the first short term, here's the medium term, and finally here you've got the long term also aligned in. That's a huge breakout. It's not a small breakout we're talking about. The second vertical line that you see, friends, is also uh, an RMO buy, and that's we call this a 3D or a three-dimensional buy. That's because it's got the three elements. The arrow, the bar color has already been blue, and the Armo is bullish. However, this comes on as an add-on or a secondary signal. I want you to focus on the first or the primary signal, right? So a 3D signal, which is the primary or the first signal, is always more relevant. The add-on, as it suggests, is more for an add-on. So I like to use that more as, okay, if I'm already in the trade and it gives me an add-on, I can lift my stops up. So, wherever I get a buy over here, so whenever I buy, I always say buy above the high of the bar. You may use the immediate lows. Look at the last 4 to 5 bars. Use that base point as a low. Lift your stops up to there and keep moving, right? So you can use these add-ons more for lifting the stop, because what I'm really focused on, whether you're even looking at a short position or a sell trade, it's important to look for the first breakout. So this, friends, from a blue we've gone to red, from an arrow negative we've gone to from an arrow positive we've gone to negative. That first signal is where I'm trying to help you focus on, not the add-ons. You see, I have multiple add-ons. There's an add-on here, there's an add-on here, there's an add-on here, and lots of them. We're not going to. So similarly, don't get excited seeing buy arrows or blue bars because the arrow is negative. We're not going to trade against the direction of the stronger force. So I always say use a trigger to qualify. I keep specifying, don't buy just because you got a signal, buy above the high. It's the simplest test of strength. So you got a signal, don't just buy above the high. And if you feel that, okay, instead of using just the current bar, high is not enough, I want to use the previous bar. Why this bar? You can see the buy arrow came, the blue bars came, and if you look down carefully on the x-axis, we've just moved into Armo positive. The high does not cross, and therefore you did not even buy. So that's what creates hell of a difference. So sometimes that's the savior. You get a sell, the low does not break. So when you're selling, it's sell below the low. So if you build in this rule set, you will be fairly successful at what you're trying to achieve here. Now, you can always look at more confirmations through other techniques, but this is a great baseline rule. For example, you can see if I looked at every red bar here which came and I marked that red bar, that red bar. What's the problem? The low of these red bars didn't break, which means the medium term trend didn't even get into any kind of weakness. But what's more important, even if it did, the longer term trend is up. The RMO is above zero. So this should not be our focus. Focus on the blue arrows, the buys. Don't focus on the sells. And that's where I'm trying. Now, you'll never have perfection. You can see over here, you've had a situation where maybe you went into a buy trade, right? What could probably block you from getting into this kind of a buy trade is the fact that you got to buy earlier on over here. But what blocked you out? The RMO blocked you out. It wasn't positive. Over here, you might feel that, okay, I'm getting another buy trade. Should I not? Well, one way is you could just say buy above the high. You may get tricked into that. But the other way is to look behind and say, should I just buy this high or should I wait for that pivot to get crossed, right? But even if you did, it's fine. I mean, you're finally thrown back into the correct buy signal, which is what's important. But there are ways to, take that notches up. Focus on first breakout, trigger with a filter, I meaning buy above the high or sell below the low. Stay disciplined with the rules. In other words, that also means stick to the same rules, same time frame, same stock. A lot of times we don't give ourselves a fair chance. We've not traded the same stock 10 times in a row with the same rules. We keep switching. We keep trying to look for the biggest move and jumping between different symbols. Use volume as a confirmation. I'm a huge fan of volume. Well, Fibonacci is a great guide if you're comfortable using Fibonacci retracements, well and good, but I don't have too much time today to get into that deep of a topic, but volume is a great aspect to look at. I'm going to talk to you a little bit about that. So we even have a scanner. So when you use the ATM is automated trend modules. This is an add-on which you can purchase. And this add-on does these scans for you. Wherever you have a new 3D buy, that would come up for you. You would also have signals like this where you got an RMO 3D buy with two arrows. The two arrows indicate that that's the first breakout. Just a 3D buy means it's an add-on. Okay, so what you're looking for is a 3D buy with two arrows or the 3D sell with the arrows. So the arrow symbols on that list. And in case you're thinking, how do you get to that? We have an application where you will, it's a desktop app you can always go to. I won't exit my presentation at this point, but once we're done, we'll try and jump to that, where you can clearly see uh, and add stocks of your choice, and this would automatically sort it for you. So, you can understand if I had a list of 30 or 40 stocks here, the vast majority is green, which means the RMO is above zero. The other 30 or 40% on this list of mine seems to be trading below the zero marker. Again, this is not live, this is old data. So just to more explain that point, you can add any number of stocks you want. It's a customized list. You can scan it on any interval of your choice. So for example, you can see here I put the Armo with a 30-minute. You may say I don't use 30, I use it daily. Plus, for those of you who are comfortable using the explorers and you don't want to use the application, you can go and manually go and explore that. So wherever there's an integrated buy and sell, and the integrated buy and sell is very relevant because that finds for you where all three have aligned. You don't need to separately look for a red bar or a blue bar. So the integrated buy and sell is definitely a lot more powerful. Again, this comes to you with the add-on. We also have a concept on the super filter. The super filter is a concept which we added because we felt that we could filter the same RMO. So if you look at the RMO over here, there are patches where the RMO has gone negative, positive, negative, positive. So you can see it's rolled up and down a few times when the market got a little choppy, right? So when the weather gets rough in terms of the trend, the super filter does an excellent job in being adaptive to it. So what goes into the super filter? Don't just believe me for what I'm saying, but when you look at the super filter, you can see the colors now are red and orange. So it's filtering out the RMO itself. So what does it do? For every stock, it uses a different value. So in other words, if I'm trading Apple, it may be that it's using a 5 period, but that does not mean that on a stock like say Citigroup, it has to be 5 period. Could be an 8 period works better. So it's custom fitting the indicator's values based on the volatility of that stock. So it's checking the price volatility and then adjusting the values and then pasting these bar colors on. So the super filter is really the bar colors. And mind you, this is now moving from just a simple red and blue. We've now got four colors. Four colors as in light blue, dark blue, and on the bearish side, we've got the orange and the red. So as you can see over here, the Armo flipped between positive and negative 3 or 4 times, but the color stayed steady as red and orange. Red, of course, is the deepest form of selling, and as red moves to orange, that means it's probably still bearish, but getting out of probably the woods. But at the end of the day, it's still bearish. What you want to wait for if you want to buy this market is dark blue is your best point to buy, and dark red is your best point to sell. So why this point? Because you can see the arrow has also come and the dark blue. Here the arrows come and the dark red. So the super filter template, it's called the ATM RMO. That's why I called it the ATM. So when you right click, apply template, ATM RMO is what will give you that. And that is a custom fit on the symbol you're trading. So all these areas, and I'm just comparing the inbuilt RMO. Mind you, I did the inbuilt RMO. I'm trying to think when, but probably it's been a good bunch of years, maybe over a decade, and version 10 of Metastock. So we're really up 9 versions from there. So the ATM is, of course, a lot new, and I keep updating, the latest update being this year itself. So when you look at the super filter, we've automatically got rid of this whole sideways patch. So if you'd seen dark blue and then you see the Armo flipping up and down, you can use rules, you can use filters, you can try and see where to buy and sell. But the same chart now, simple, orange, I'm not going to get in, right? So the super filter gives you a beautiful alignment. This whole part over here was dark blue and light blue, and this whole part over here is orange and red. So it's a filter of the Armo itself. So you're already filtering a very successful oscillator, right? So you're already filtering something fairly superior. And that dissects the market into those four phases of light blue, dark blue, red, and orange, right? So you understand the feel or the pulse of that primary trend also through these colors. So if you can train your eye to just look at this one screen, that itself, I think, is more than half the job done in terms of understanding the trend. So people ask me, okay, does it mean that the super filter is going to be a slow indicator? It's just a slower version of your RMO? No, it's not. It could be a faster version. As I said, it's a tailor-made version. So you can see here, the dark blue has come first. The super filter has given you a buy, but the RMO is still negative. So in this case, it's faster. But here you see the RMO has given you a sell. In other words, it's gone below zero, but here it's still not yet given you a sell. So it was faster here, but it slowed down here. So the beauty is it's accelerating and decelerating based on the volatility of the market, right? So rather than having the car move at a constant speed, it is choosing in which patches to speed up and in which patches to slow down based on factual volatility that the stock is experiencing. Now, I keep using the word stock because that's out of habit. But again, if you're someone that likes to trade an ETF, you like to trade a futures contract, or you trade an options contract, it works equally well there. I myself actively look at the futures segment. I like to look at various ETFs too, including the SPX, the QQQs, the Bitcoin ETFs of late. They're all very, very fascinating to me. So they work across the board. So the best part about the super filter is you're already filtering out a very solid indicator. And the beauty is we've got scanners for the super filter. So now when you look at that screen, that's the power screen application that you get, which is on your desktop. You get to see a light blue, dark blue, and wherever there's an upshift or a downshift that gets stamped. What does an upshift mean? That from light blue I shifted to a dark blue. What is a downshift? From an orange I shifted to a red. What's a down break or an up break? That the first time I got a new signal, right? And again, feel free, you can customize it to a stock list of your choice. to intervals of your choice. So you could be, customizing your list to any degree. Now, another favorite of mine is the SWI, and I'm going to be brisk at this because these are things you could get very easily and start using them to your advantage. The SWI, or Strength Weakness Index, automatically measures how volume is behaving with the trend. Now, we all have heard the statement that if price goes up with volume, that's a great sign, right? In other words, an increase or decrease of price with increasing volumes confirms the trend. So I married that same statement into the SWI. So in other words, I'm trying to gauge when the market goes up, what's the volume that's going up with it? Or if the market's going down, is the volume also inclining with it? That whole statement, rather than us manually trying to look at, oh, what's the average volume? Let's see, is the pulse of the volume going up or going down? I married that into one indicator and put it as a red dissector on the chart. A red dissector line, which is really going to cut through your bars and tell you, look, if the price bars are blue in color or above that SWI line, the red line is the SWI line, just on a volume concept. Mind you, this indicator does not use price. It's just volume, nothing else. It's pure raw material. Is how is volume moving with the price. So in other words, if that movement is that the price is going up with volume, and it'll see that the balance is in its favor, it will mark it as a blue bar. Similarly, if it's a negative volume move, it's a red bar. So the beauty is it dissects it in a fascinating way. In fact, let's give you a more updated example. I follow an ETF, one of your most popular ETFs for those of you in the US markets, well, all over the world, the QQQs. If you look at that, which represents the NASDAQ 100 index, really, this is a 30-minute chart, and this is approximately the last almost 3 weeks of data that I have up here for you. 30-minute bars, and you can see just on the count of volume, mind you, this is no Armo working here. This is just the ATM SWI, which is a measurement of volume. And you can see that the SW has done a fascinating job in terms of giving you that signal. You slip below that red line, you got red colored bars, we got into a weak market, right? Because right when you move into a dark blue bar over here, you cross the high of that, that's strong. Now you have these one bars which, flick below the SWI, didn't break the low. So if something doesn't break the low. So mind you, this is if you just want to look at volume alone, imagine combining this now with the super filter. Look at what you have a powerhouse. The super filter is looking at all the price elements, the SW is looking at the volume elements, right? So the beauty is the SWI does its pure volume analytics in terms of determining whether the market is bullish or bearish, right? Just on the count of volume. Because remember, volume is a very important component because volume is tantamount to saying the amount of money on that symbol, right? So volume is the driving force of any trend. You can't have an up move or a down move without enough money backing it, without volume backing it. So volume is a very important factor, and it's very difficult for you to manually try and study, oh, okay, it's falling, there's an incline in volume. You have to get very, 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 then you realize, oh, the price is falling here, but look at the volume is also falling. These analytics, these points of trying to look at this whole balance of volume, the SWI is doing that for you and stamping it on the chart beautifully. In fact, all of these studies that I talk about not just have automated expert advice on your chart, they all come to you with scanners. So if any of you is thinking, oh, that's great, how am I going to find new stocks which are just getting into the volume breakout? So you can set up the scanners, and I think this is a good time to probably show you the application. I'm just going to quickly launch that through. So the ATM Power Screener is a desktop app, as I was mentioning, and I'll just quickly connects to your data feed, which is in my case, of course, the Metastock data feed, which is the real-time feed. If you do use end-of-day data, you need to tell the application where your end-of-day data is downloaded. In other words, point it to the folder where your end-of-day. So don't worry if you don't have real-time data, but I'm just demoing it with real-time because that's how I like to look at it. So let's say I want to look at my US page, and these are some of the symbols which I've kept, and you can see immediately what's going to happen is it'll allow me to add, right click, add a column. I can add any indicator that I want. So, whether it's the RMO, the RMO super filter, counter trend, the trend decider. I've not even gone into these indicators as yet, the breakout catcher, and some of the conventional indicators too, like the MACD or moving average crossovers, the RSI, stochastics, candlestick patterns. So, I could, if I'm a candlestick guy, I want to see where there's a bullish Rami or a evening star. It's going to pull that up for me, and I could, edit that and say, okay, which column, what time frame I want it. So let's say I want it on a 30-minute, and I hit OK. So you can see all of these updates will be all in real time. And I don't need to even manually run a scan. So here I can see the super filter on the daily. And I might say, no, I'm not looking at daily. I want to look at something more intraday. And I will choose, let's say, 30-minute here as well. We even have voice alerts, which actually talk to you, tells you where there's an actual buy or sell. So even if you're not looking at the screen, it voices it out for you, right? So it's now going into all of the charts which you've got on the list here. And you can add more symbols. So let's say if I wanted to add one more symbol over here. So let's say I want to add Tesla. I can just key that in and it'll populate that for me as well. So it'll automatically populate various signals for me. The background colors come up, and as the price changes, that's all updating in real time. Now I'm not looking at a real-time market at this point because I'm at the stage of a webinar. But again, if you're someone that's using real-time data, you can surely have access to that. So let's kind of dive back into the slideshow. Otherwise, uh, so we were at the SWI, and these are the expert advisors. So the expert advisors also help you if you're a newcomer, if you're a beginner, or you're doubtful, okay, will I be able to interpret all this? Mind you, it's the ATM, it's automated trend modules. As it is, the whole design around the add-on is to be definitely automated, but the expert advisor commentary also interprets it for you. So it tells you at this point, what is the SWI telling? The ATM SWI suggests a bearish pulse. The RMO is negative. The ZD or the zone detector suggests we are in a fairly active zone, right? So you want to trade when you're in an active zone, not in an inactive zone. So all of this is well explained through not just masterclass videos which are available to you under your My Downloads, but most importantly, I've also got a manual that I've done, and that's updated this year as well. And that gives you a very easy, ready reckoner. And we, of course, back the product up with complete support. So when you do sign up, we can definitely walk you through this setup and help you through as to how do you set up your screen, how do you apply the templates, how do you quick and help on any interpretation. So all of that is there. Now, one of the newer tools which we introduced was trend flares, and I'm going to spend a little more time this webinar talking about it, because I've talked about the breakout catcher in various other videos. I've talked about the super filter in depth already. Um, let's look at the trend flare. The trend flare, as the name suggests, is this little orange flare that you're seeing. So the indicator on the top that you see, that's a flare up. Okay. If you see the flame going down, the orange color is more like telling you the flares are down. So if you see trend flares pointing in the downward direction, obviously the trend is down, right? So that's important to understand. The flares up are signs of the market going up. Flare downs are potential points below the low of that. So these flares are also marked as little diamonds. So if you look at the orange diamonds, those are flare downs. If you look at the blue diamonds, these are flares which are going to be up, right? So keep in mind that the diamonds are what you're looking for in terms of a breakout. So you may call that as a trend flare. I also refer to it often as the SS or the sweet spot for you to buy a stock. So sometimes when you get the sweet spot there, you want to buy above that high, right? So we are looking at now, what's this green line that you see over there? That's what I call a baseline. So the trend flare has two modes. It has a normal mode and a slow mode. I'm using the normal mode, but if there's someone who says, I don't want so many signals, I want later and fewer signals, something a little more confirmed, if that's how you'd like to put it. But also that would mean that you're going to have a slight delay. I'm trying to stick to the normal mode in my discussion because that's what I practically use. I developed um, the slow mode more for people who want to look at end of day, or they're more passive and not active traders. So since I kind of belong to the boat of active traders, I may not be an intraday trader, I may not be a scalper or a minute trader. Maybe I hold positions for 2 days, 5 days, maybe sometimes even a few weeks. So I track the market quite actively. So these sweet spots, or wherever you see the blue diamonds, those are points you want to buy. And obviously, the first buy is the best point to buy, the first diamond. Now, when you see it crossing the baseline is the green line, that's a very good signal. So, for example, here you get a sell over here, you got a flare down over here. Number one, the low doesn't break. Number two, even if it does, take it with a bit of a pinch of salt because the baseline is quite deep. How about this one? That's an interesting signal because when you break the low of that, you're also going to be throttling through the baseline. So that's the most interesting one, right? In addition, you would also see I've got something like which are brown circles, or what I call TSL. TSL stands for trailing stop loss. And trailing stop loss, if you see the TSL is below the bar, that means obviously you're long on the market. You're going to use a breach of that point as probably a point to exit a long position, right? Now, I don't use the TSL too much. I'm more focused around the flare or more focused around the sweet spot. So when I say flare up or sweet spot up, same thing, right? Now, mind you, the most important thing for me is to get to understand that, okay, I have got a flare down over here. I've broken the low of that and I've threatened the baseline. I'm looking at a shift in trend. So it's a very nice early indication of where things are turning ori, or where that trend is changing. So here too, you got a nice signal there which says flare up. It doesn't cross the high, you don't get into it, right? So this is the Bitcoin chart. I mean, again, it's not exactly Bitcoin. It's really an ETF, IBIT, one of the most active ETFs, I'd say in the top two or three probably for the Bitcoin. And you can see again, I've pulled up a 30-minute chart. This may not be perfectly up to date, but as up to sometime today or yesterday, I reckon, you could see where this flare gave you a signal. So it crossed the baseline right over there. That changed the trajectory. You got the flare up right there, and that's what's taken that whole market into a huge up move. And you could, simply work with very small stops where I keep saying that look at the last 3 or 4 bars, try and use those lows as your stop. And if you really look at it more proactively, every circle is a trailing stop loss. So the good thing is you can be proactive and use the trailing stop level to get out, right? So the good part is you're getting trend direction here from a totally different trajectory, because trend flare is more about trying to find out where there's a sudden price or a volume flare out. It's more paying attention to price and volume breakouts in in a more simultaneous manner. And again, if it doesn't have volume data, it would rely on volatility data. So the trend flare is a very intelligent tool in terms of not just giving you where the flare points are or the triangle points are, or rather the diamond points are, but it also gives you the trailing stop points and the baselines. So we've got a beautiful scanner, and whether you use the Explorer inside of Metastock, you can get where the new sweet spots. So SS plus is where you have a new signal and you see number one, that means that's a new signal. Mind you, this is not updated data. Please do not use any of these as any kind of recommendations, as Jeff pointed out. It's more to help you understand how we use the system. Similarly, over here, we've got various signals over here. TSLs are where you've got new trailing stop signals, but what you're truly looking for is for new flares or sweet spots, or SS plus and SS minus. So the beauty is the flares are so well organized and automated for you. And this itself is quite a dramatic system. And we also built in another fantastic tool, which is automated support resistance. And the reason I did this was, and mind you, this is not something which is all that old. It's a recent development which we released in April 2024 itself. we automatically plotted the support and resistance points. And the problem with most users is they were pasting support and resistance points based on past pivots. So you'd say that, okay, that's a low point, let's draw a horizontal line on it. So, and whereas what I want to do is detect supports where maximum volume traded, detect supports where a lot of price connection was also there in addition to volume connection. And that's how we came to a point where did most indicators turn negative? That for me is a support breach, right? So we looked at support and resistance and automating it. And wherever you see a blue colored line, that's a resistance. Wherever you see a purple line, that's a support. So whenever you're trading and you see that, okay, I'm above the baseline. So these are two baselines, both the slow and the normal. And this is from the trend flare template. You can see that this is a breakout of a resistance, a breakout of a resistance. The purple line over here is a support. If it breaks the support, breaks the baseline, that's when I'd be worried. So in this chart over here, I would be very skeptical because A, we broke the support here. We didn't cross the blue resistance. And again, now we have started breaking the first baseline and now we have a support. So you get those hints as to where the market looks toppish. And, you look at that from a perspective of support resistance. And mind you, these are two baselines, both the normal and the slow pasted onto one single chart. So rather than you're having to manually detect and draw support resistance, we've gone ahead and done that for you. Now, mind you, the ATM has, about 7 or 8 strategies: the trend decider strategy, the breakout catcher strategy, uh, these are all the counter trend strategy. You don't have to use every single piece of it. You need to understand why are these strategies there. For example, the trend flare is a suite of its own, right? It's a complete suite. So if you're trying to follow this, stick to it. If you're someone who's been very used to the Armo look, use the super filter. That's a very good trend following system. Always take an excellent confirmation from the SWI. Very rarely do you get a tool which is so heavyweight on volume. And SSY weight is actually 100% heavyweight. In fact, you can't even plot the SWI on an index chart. If it doesn't have volume data, it won't even plot correctly, right? So uh, the SWI as a template is there for you to gauge volume. The RMO2 is another strategy which I have not discussed, but that template is designed around helping the options trader so that he can buy calls or puts as the market does retracements, right? So each strategy is by design. It's not just there to put forward to you a score of indicators. And that's why I said I don't need to give you even a dozen of strategies. These, in my opinion, are perfect for you to gauge the trend. For example, the trend decider suite gives you a daily, weekly, and a monthly and a 15-day level. So it tells you that above a certain level you're bullish for the day. For example, this is the trend decider weekly level. If the price is trading below it, it's bearish for the week. And this updates every week, right? This is the green line, which is the trend decider daily level. This updates every morning. So if you see the price is trading below the trend decider daily, then you may like to couple both of them. When you couple the daily and the weekly, what are you going to check for? If the price is, let's take this area. The price is trading above both the daily and the weekly. That's a strong buy signal, right? Similarly, if you're looking at a situation over here, the price is trading below both the daily and the weekly, that's a good sell signal. If the green line, which is the daily, is below the weekly, that's further bearish. So all this is also interpreted for you using the expert advisor. So the ATM, as the name suggests, automated trend modules, is not relying on you so much for the analytics. You need to focus on the trading aspect. You need to focus on the money management. You need to focus on asset allocation. I want you to walk out from the realm of analysis to the realm of implementation. The analytics are largely automated, and the idea of this automation is so that we can take out the emotion from trading and bring in the discipline into trading. So that's the goal with the ATM. I'm going to hand it over to you, Jeff, and we'll take up any quick questions, and you could point to them as to how users could sign up, and we'll wrap it up from there. I know we're tight on time. You have a very strong lineup of speakers, and I won't want to push you back on it.
You did a great job, Rahul. I'm surprised that that's already been an hour. So let me take a look. We do have a question in YouTube, I'm told. Let me grab that real quick. And okay, let me grab it.
The report reveals never.
John wanted to know, what is the single line in the flare?
So the single line that you see on the flare, which I'm assuming is the, let's quickly open up a chart, that green line right down the center, I call that the baseline. The baseline is, as you can see, when I point to it, it says ATM trend flare BL normal, means baseline on the normal mode. It dissects positive and negative territory, and that is a good confirmation. So when you get a flare signal, so let's take the most recent signal on my chart. There's a blue SS plus there, that's the flare up. I want to buy above that, and I can see that when I cross that baseline, so as soon as I'm somewhere around that point, I'm fairly confident of that up move.
Right on. Thank you for that. All right, let me kind of talk a little bit about how to get this and the special that we've got on the conference. Before I let you go, Rahul, I want to say thank you for everything over the years. You've done such a great job.
Thank you, Jeff. Likewise.
All right, you go ahead and change the presenter here. And let me just talk a little bit about the specials that we're doing. So let me make sure, again, I'm sharing this right slide. All right, very cool. I really like kind of everything that's included. I've talked about, like, when you get a version 3 or 4, it's definitely something that's been very, very well received. And we're on 4 for this ATM. It's something that we've been designing out and developing. And in all fairness, Rahul has done most of the work on it. He's done such a great job. Here you can see the power screener. Thanks for showing that, Rahul. In terms of the methods that are included, the different systems that are included, you have the breakout catcher, the strength weakness indicator, the super filter, the trend decider suite, Armo 2, the counter trend indicator, the trend flare suite, the auto support and resistance. All these have been added in kind of the different versions. And I love the thoughtfulness that Rahul puts into these when he creates them. He does really, really good job with them. They all have matching expert advisors, explorers, scans, all of that kind of stuff. And so here's just kind of a little bit of a breakdown of kind of the different systems that are in there. I'm going to go through each of them because Rahul already did that. But all of these are kind of very, very well thought out and kind of really well put together. So as part of the Armo ATM4, you're going to get the power screener app. You get the strength weakness indicator, the super filter, the trend decider suite, the ATM, the counter trend indicator, trend flare suite, normal and slow, and then that automatic support and resistance. Very, very versatile, comprehensive. Normally this would be 149. Here at the conference, it's going to be 129. And one of the things that we're kind of doing with it is if you do a prepayment of a year, it'll cost you $12.99. If you do that, we'll give you 2 free one-on-one sessions with a staff member from Vora and the free masterclass that we just recorded. The masterclass we did was actually really cool. There was a number of sessions that were in here. We did ATM4 core breakout methods and models, and here's kind of what we talked about in that. We did a second session where it talks about volume mitigation, reversals, CTI, the SWA. You can kind of read through this if you want to. What we're going to do as a package, if you want to get started, if you want to give this a go, is if you paid for like 3 months of the SWI or the ATM4 and got the training, it would cost about $886. What we're going to do is we're going to give you a special where if you pay $499, that'll include 3 months of the ATM and all of that master class that Rahul put together. So if you do 129 just by 3, that's almost the price of what you're paying for the thing, and you're getting the full training. So basically $499, that'll get you 3 months of the ATM. It'll get you a lifetime discount price. So instead of paying $149 a month, you'll pay that $129 per month forever. You'll get those 2 recorded classes from Rahul. All you need to do if you want to sign up for that is you can go to you can give us a call, 800-882-3040. You can go to metastock.com/ATM, or you can visit us online at metastock.com/saleschat. So very much thank you again, Rahul, for all the work you've done over the years. Been great. Metastock.com/ATM, metastock.com/saleschat. 800-882-3040 to take advantage of this special. So I want to say real quick, thank you to AAII. You can find out more about AAII at AAII.com. AAII.com has been doing their nonprofit stuff since the 1970s. Very huge, well-respected organization. We really appreciate all the work that they've done with us to help us support this conference. They do, I'm sure you've heard of like the AAII Investment Sentiment Survey. They do that. They grade stocks. They have an active investor division. Ray was on here yesterday to kind of talk a little bit about that. And they just do a really, really good job of kind of pulling all that together. So AAII.com. Thank you for the support. We have, of course, Metastock. All of the specials that we're talking about today, if you want to get them, can be found at metastock.com/conf-promo. You can also chat online with us at metastock.com/saleschat and give us a call at 800-882-3040. I've been talking for 2 days now about how important scanning. I just ran a scan, actually. Scanning is for kind of the workflow that I do. And, scanning is a really, really cool tool for Metastock. Like normally I can kind of go through a big, huge list of stocks and get a small list. And from that list, I can kind of go look at the stocks that are there. I can see what's there, see which ones I like, and kind of make a decision real quick. And it really does a great job of helping you just eliminate the noise. There's a bunch of stocks you don't even need to look at. Let's focus on the ones that have an opportunity, and it does a great job of that. It'll also help you test trading ideas, get market forecasts with our patented forecaster. You get real-time alerts, commentary, signals, all that good stuff. Normal price for Metastock for our DC version is $75 a month. For the real time, it's $265. What we're going to do is if you pay for a month, we'll give you the second and third month for free. I'll remind you, I think I just said it, 31 years in a row, Metastock's been rated #1. I would not trade without it. You can get that extended trial if you buy a month. You get the second and third month for free. You can go to metastock.com/conf-promo. Go to metastock.com/saleschat if you want to get more information. Give us a call, 800-882-3040. So there you go. Without further ado, another great speaker is coming right up. Vince Vora has also been a friend of Metastock for a number of years. He's a prolific system designer. He's created a number of systems over the years. Some of the most important lessons that I'd say that I've learned in trading, I've learned from Vince, particularly when he starts to talk about stock selection, looking at stocks and what stocks to look at and what stocks not to look at, and kind of what he likes. A lot of those lessons have come straight from Vince. So the thing I like about Vince, and I say this every time, but like the thing that I like about Vince is if he explains something to me, I get it. I understand. I get the lesson is delivered. So Vince, let's go ahead and get you started. How you doing today?
I'm great, Jeff. How are you?
Good. I can see you. There you are.
Excellent. How are you doing?
Good.
Good.
I do like all the clocks you have in the background. Let me go ahead and make you the presenter.
Excellent. Let me share my screen.
Yep.
You can see it? Great.
Loud, nice and clear. I can hear you loud and great. Let me out of the way. It's your turn. Go.
Great. Thanks again for the invite. I really appreciate it. We've been working with Jeff and his team for years, and it's just a great group over at Metastock from the support team up to Scott. It's just amazing. So I love doing these events. Welcome, everybody. It's nice to be with you here. Again, today I'm going to be talking about what I refer to as my baby, Victory 2.0. It's been amazing. We've put this together, I believe it was back in late 2019, and we've been using it ever since. So I'm really excited to share it with you here today. My name is Vince Vora. I've been the head trader here at Trading Winds for many years, and have been in this business for, well, I'm getting closer to 40 years now. So I've done quite a bit, but what I've enjoyed the most is over the past, I think it's now, I'm getting close to 10 years, is coaching students. We have a great group over at Trading Winds, students that have been with us for, again, almost a decade now. And I'll tell you more about our group as we go through this. It's a lot of fun, and hopefully you'll join us. But you know, the ride has been incredible. Some things change with the markets over time, but many things do not. And so I'm going to hopefully be able to impart a lot of what I've learned over the years, and you know, keep things brief, but cut out a lot of fluff and tell you exactly what you need, or at least show you exactly how I do this. Before we get to that, please remember that trading can be risky. So don't go out and trade with real money until you're completely comfortable with the system that you're using and the level of risk that you're taking. And my job here today is not only to demonstrate victory to you, but show you exactly how we like to eliminate risk in our trading at Trading Winds. So let's get started here. And I'm going to bring up my Metastock platform, which, by the way, love the new version. Absolutely love it. What I'd like to do here is, first off, quickly, very briefly, talk about what you're seeing on my screen, meaning these ribbons, these arrows, these dots, what they mean, and how we use them every day. And then tell you exactly the approach that I take to the markets, starting with a top-down approach, looking at the markets overall from a longer-term perspective, you know, the trend that we believe is in place, and then moving down one time frame at a time and show you exactly how we take advantage of it with Victory 2.0. At that point, I'm going to give you the rules that we use to trade with this system. And then I'm going to go through hopefully dozens of charts, symbols, to show you exactly how this has been performing. And with our group, what we do, one of the things we do is I send out nightly emails or with a video link, a brief video describing, you know, what took place in the market that day, what I think we can expect for the next day or the following week, and also share my trade ideas, the trade selections that I make. I'm going to show you the Excel spreadsheet that we use to track those trades and go over the last 2 weeks of trades with you so you can get a realistic idea of how we do things here, okay? If there's any questions at all, please type it into the chat, whether you're on YouTube or here on this webinar. Jeff will keep an eye on them. I'll do my best to keep an eye on them. And also, I want this to be as interactive as possible. So please, if there's a symbol that you want me to bring up, if there's something that you're in a trade now or we're thinking of trading or want to see how Victory would have performed on that particular market, just type it in and we'll do our best to get to it before the end of the session, okay? Now, I will start by saying that Victory is based solely on technical analysis, okay? It works on any market, any time frame, basically anything that you can chart off any exchange around the world. It's just technical analysis. It's an algorithm that is behind what you're seeing on the screen that makes it almost impossible to miss a trend. I'll show you as we go through. But one of the things I like the most is that it helps you keep your losses small. There will be losses. Losses are a part of doing business when trading. Our goal as traders is to, number one, minimize the number of losses we get. And number two, whenever we do have a loss, make sure we keep it small, all right? If you do that, you're going to be in this business for a very long time. And so let's start talking about what Victory is and what we're seeing on our screen here. So obviously you're seeing a number of arrows and dots, etc., and you're also seeing this blue line. I'm going to hover over this blue line, and you can see that it is just a 20-period simple moving average, not exponential, not weighted, simple. We went through years and years of testing. This is the one that's performed best, and that's why we use it. I've been using it for decades, never let me down. So 20-period simple moving average. Now, it's not so much the moving average, but it is the slope of the moving average that matters to us. So when we're in a long trade, what we want to make sure of is that it is sloping upward. Okay? And if we're in a short trade, we want to make sure that it is sloping downward. I'll get to more on that in a minute. Now, obviously the arrows, you can hover over any of these symbols and it'll tell you what it is. Now, this is 2.0. So the original version of Victory just had the basically, basic green and red arrows that told us, where a great spot to go long or to go short were. Now we also have thicker, darker arrows, and if you hover over them, you'll see an HPB, which stands for high probability buy. So there's a couple of other indicators behind the scenes that tells us that it gives us a higher probability of success with those symbols. Now, does not mean that the other ones aren't as great, and sometimes, like you see this one, the move will be even greater on these than those. I basically look at all of them, okay? But it's just, if you want to be a little more careful, a little safer, you can focus on one and not the other, okay? Now, red arrows, obviously same thing, except they're pointing us in a different direction. Now, there's also these exit flags that will tell you when to get out of a trade, but the exit flags won't always appear. In other words, the way I want you to think about this is when we have a green, okay, we're considering going long. We still have to go through the checklist of rules, which I'm going to give you in a second. So you don't just automatically jump in on any green arrow. We have to meet the requirements that we look for. But any change in color, so if we're in a long trade here, and you'll notice that every single bar after a green arrow is painted green. So if we were to take off the indicator here, these bars here, for example, would be red, right, normally. But we keep them green until the system tells us that we should no longer be in that trade. Now, sometimes the system will suggest going straight short. Again, doesn't mean every short qualifies. We have to meet the requirements. I'm going to go through the rules in a second. Okay? And sometimes it'll go straight to an exit flag. The way I want you to look at it is any change in color means you're out of there. All right. Now, these TPs, okay, if you hover over it, for example, it'll say long take profit. If they're in a red, it'll say short take profit. So these are just suggestions of where you might want to take some profit off the table. It doesn't mean you close the trade, it means you take in some and you go from there. And then we have these dots, okay? And you'll notice as I hover over it, it'll say long RE or a long or short SE here, which is RE, excuse me, which is a re-entry. So the same criteria that came together for the arrow has come together again. But since we're already in a trade, we're labeling it as a re-entry, okay? So if you missed the initial one, you now have another chance to enter. Or even if you did get in on the first one and you're a little more aggressive and want to add to your position, this is a great place to add, okay? So basically, what the system is doing is telling you that when everything is green, you want to be long. When it's red, you want to be short. But we have those rules that we have to follow that help us, be right more often than not. That's what we're trying to do here is, number one, have more wins than losses. And number two, have our winners be much bigger than our losses. With that kind of math, it's impossible not to make money on this. So let me show you the exact rules that we follow. Okay? Actually, my mistake. I'm going to give you the top-down approach to start, show you the different features here, and then we'll go to the rules. We have a couple more features. One is the ribbons down here. Now you'll notice that I am on a monthly chart, and we're showing the weekly and the monthly. We don't go any higher than the monthly. If I were to go back to a weekly, it's going to show you the same thing, and same with a daily. So what we're looking for are 2 higher time frames, okay? 2 higher time frames. So if there's a setup on the daily, I want to confirm that the weekly and the monthly are both trending in the same direction as the trade that I'm looking to take, okay? So if the bars are green on the weekly and the monthly, you're going to see the ribbons painted green. Back in here, if it's yellow, means it's neutral, you should not be long or short. If it's red, it means it's pointing in the opposite direction, it's red. So what you want to see is green up here, green and green, or red here and red and red, okay? You want to see everything aligned. Now, let's say that you are a 5-minute trader. You like to trade on the 5-minute time frame. Well, then what you do is you right-click here, you apply template, and these are in alphabetical order. So you're going to have to go to the bottom here where all the Vora indicators are. And here's a Vora 5-minute, Vora Victory 5-minute template. Okay, you apply that, and you can add your shortcut here on the left so you avoid all those clicks. And now you'll notice that we are on a 5-minute chart, but now your higher time frames are a 15-minute and a 30. So 2 higher time frames. So if you notice here, for example, this re-entry to the short side here, okay, bars are red, re-entry is to the short side. We also had red on the 15-minute, red on the weekly, and there we go. The trade has been working out nicely, okay? This is what you want to confirm. You want to be trading with the current trend. And if you confirm that trend, if you're trading on the same side as 2 higher time frames, you're in a much stronger trend. And secondly, you want to confirm that you have slope, okay? That you have that 20-period moving average sloping in the direction of your trade. That helps us read momentum. The higher the degree of slope, the better. The more momentum there is behind that trade. So you notice here, this one did not have a lot of momentum. Now it's starting to pick up steam, right? So if you're comparing one trade to the other, let's say you had 2 symbols that you were looking at during this 5-minute period, both had short setups, but one had a much sharper slope on the 20, you would go with the much sharper slope, right? That sort of thing, okay? So that's what we're looking at. Now, to help us with a top-down approach, let me go back to the daily here and go back to my default template. To help us with the top-down approach, Jeff and his team created this template here, which I'll show you in a second. A multi-time frame or an overview, a market overview. So there's a Vora market overview, and there's a Vora market overview MTF, which stands for multiple time frames. So if we do just the market overview, it is going to give you a snapshot of a number of ETFs. The ETFs for the Dow, the S&P 500, the NASDAQ 100, the Russell 2000, which are the 4 main equity indices that I follow, and then all the different main sectors. Okay. Now it'll take a few seconds to load because it's trying to bring in all the data from all of these different markets. Okay. But what this is showing you is not only the 4 main indices, which cover the bulk of the stocks, but all the different sectors. So what you want to look for is, like back in here, when everything was green, we had obviously in a very strong uptrend. You have all 4 indices solid green, and 11 out of the 12 different sectors green. You just had one, energy, which was red back here. So if you look to the far right now, that's the current picture. So the 4 main indices are all green, right? And then communications is green. We have consumer staples red, but you have energy and financials, et cetera, green, mostly green, right? So you get a quick snapshot. And if you bring in the template that is the Vora overview, market overview, MTF, multiple time frame, it'll be split, and you'll get one on the daily view, one on the weekly view. Like this, you can change the time frame as well. You can switch it to monthly, for example, and look at it that way, whatever. But it gives you an idea of how the market overall is trending right now. So that's a great starting point. And then you just go back and you now can go back to the time frame that you trade, and you know where the bias is, right? Right now, it's to the upside. So whether you're trading on a 5-minute, a 15-minute, an hourly, daily, weekly, monthly, if you're seeing long trades, you're trading it in the direction of the overall market, which is a much safer way of doing this, a better way to be much more consistent with your trades. Okay. So now let's great, Ricky, thank you for that. Is 5 minute the smallest time frame you suggest to use? Well, the only thing I'm going to suggest is, depending on your level of experience, the less experience you have, the higher your time frame should be. The more experience you are, you can then push it down to a 5 minute, even a 1 minute if you want. But if you're just starting out, the mistake most people make starting out is that they start at the lower time frame, where everything happens much quicker than the higher time frames. And so not only are they trying to learn, but they're trying to keep up with the markets, and it's much more difficult. Think of it this way. If I'm looking at a daily chart and I'm looking at it after market hours, right? Once the bars have closed, I have all evening, all overnight to do the analysis for the next day. If I'm trading on a 5 minute chart, I have 5 minutes to do my analysis before that next bar opens, right? So things happen much quicker. So that's the way I would suggest. Now, going back to these market overview templates or the different time frames, there are ribbons that you can use that will show you the 2 higher time frames for the 1 minute, the 5 minute, the 30 minute, the hourly, and the daily, right? All there. Also, the market overview. We also have one for the Australian market and for the Indian market, the Nifty, okay? And we may add more as we go forward. So those are all there for you to use as part of this indicator. Again, you can use this victory system on any stock exchange around the world, any market. I will show you equities, ETFs, Forex, symbols, crypto, and futures, whatever you like to trade. It works exactly the same. Again, it's based solely on technical analysis. So let's start with the rules. Okay, let me just bring up a stock like Costco. Costco's been doing very well lately. Okay, now here are the rules that we use for longs. What we want to see for longs, and let me zoom in a little here. There we go. It's something like this. These are very typical trade setups that we look for. What you want is, number one, a symbol, right? So you want a green arrow or a green dot, looking for a long, okay? Second thing you look for is slope on the 20. Do you have slope? And secondly, what degree of slope do you have, right? The higher the degree of slope, the better. Any slope will do, okay? Any slope will do, but obviously, see, something like this is totally flat, okay? Then you start to slope a little more, and then obviously you have a much higher degree of slope. So again, if you have multiple symbols that you're considering to trade and you want to select one or two of the best, you're going to go with the higher degree of slope. Otherwise, any slope works. We will also, from time to time, take trades with a flat 20, and I'll give you the rules there. We have a couple of separate rules for that. But here's the basic rules. So number one, we want a signal, an arrow or a dot. Then we want to look at slope. If we have that, we go to the next step. We want that setup bar, the bar where the arrow or the dot are pointing to be close to the 20, close to the blue line. If it's already pulled away, if the dot is showing up here, okay, we want to skip those. Why? Every time price moves away, it ends up snapping back. So the last thing we want to do is get in here only to watch it pull back to the 20. The reason why we don't want to do that is we're trying to eliminate risk. Think of it this way. If, for example, let's look at this trade down here. If you get in near the 20, okay, and it moves against you immediately, it'll get you out at a very small loss. And that's all we're trying to do, right? Is keep our losses small. So that's why we look for a bar close to the 20. Okay? Once we identify that bar that it's close to the 20, we also look for where that bar closes, right? Did it close near the top of the bar, near the bottom of the bar, etc. So we like to look for anything that's closed in the top half of the bar. Reason being, whenever they do that, they have a much higher likelihood of following through very, very quickly. So this trade meets all those requirements. Now, a couple more here. We also want to look at the ribbons. Are the higher time frames aligned with our trade? Yes, they are. Okay. And then from there, we want to look at things like the next earnings date. Is the earnings date close by? We do not want to get caught on an earnings gap one way or the other. So we want to make sure that earnings are at least, a week and a half to 2 weeks away, preferably a lot longer than that. So now that we're coming closer to the end of earnings season, we're not going to have to worry about that for a while. If you're trading an ETF, for example, a futures contract, a Forex pair, crypto, you don't have to worry about earnings. So you can forget about that. And then lastly, what we look for is support or resistance, right? If we're trading to the long side, we don't want a lot of overhead resistance. What do we mean by that? Well, where there's prior activity, there's going to be resistance. So when we look at where this entry is, we look to our left and we see nothing but blank space. That's a very good thing. If there's a lot of prior activity here, okay, then there's likely to be resistance. But with this indicator, we're going to give you a couple of training classes where we're going to teach you all of that in detail. So don't worry about that for now. So basically, as we're going through this, and I'm going to start flipping through charts quickly now. What I want you to focus on are the symbols that have slope here with very little resistance and that are near the 20, etc. Okay, you're going to see just how consistent that is. Now, once you get in, and how do you get in here? Once we identify that, we mark the high of that bar. And any trade 1 tick or 1 penny above the high of that bar, that's our trigger. That's when we would initiate the trade, okay? And then as we follow it through, all the bars remain green, okay? That's for a purpose, to help keep us disciplined and stay in the trade, not to get us scared out of the trade, okay? But along the way, there's going to be suggestions of where to take some profit off the table and where we might want to add to our trade, okay? So don't look at these symbols, don't get confused and think we get in here and we're out here. No, we might scale out a part of our position, not much. What we're looking for is to enter on green and exit on red, okay? What we do in between is managing it. We may take some off, we may add more. Take some off, add more. Take some off, add more. But once we see a change in color, we wipe out the whole trade. We close it all, okay? Regardless. Again, when it goes against us, generally it tells us very, very quickly so that keeps our losses small. Now, there's one thing that we can't control, and that is a gap. So you're always at risk of a gap causing a bigger loss. The way we control that is through our money management, okay? The sizing of the trade, the amount of money we put into each trade and how we spread that out, that is all part of our training class that comes with this. We'll show you exactly how we control that, okay? So let's look at some recent trades. And before I get to that, if we're looking at short trades, it's the exact same thing, right? We're looking for a symbol, we're looking for slope in the direction of the trade. We're looking for a bar close to the 20. We're looking for it to close near the low of the bar, okay? And then we're looking for making sure that earnings date is far away and making sure that, there isn't a whole lot of support down here, a whole lot of prior activity that would prevent this from going lower. And then we mark that low, 1 tick or 1 penny trading below there. That's our trigger to get in, okay? And then we follow that trade and exit on a change of color, okay? Now, see this trade here didn't work out well, but this is not a trade we would have taken. Why? We don't have the ribbons in line. You see that? The higher time frames are still green. So we would not take this trade. I was just going over the rules for you. So let's start looking at this past week. Or let me just make sure that the questions we don't get ahead of ourselves. Oh, Joseph is saying he's been using Victor for the last 2 months and has been really impressed with the results. Joseph, thank you very much. Appreciate it. Can we check the Nifty? And he said, sure, we can check the Nifty for sure. And if price breaks further below the 20, better you buy it. How much do you allow it to go down away from the, well, that's where it'll change colors, okay? We don't have a specific distance. The algorithm will identify, when the trade is in trouble and get you out immediately. Usually it's very, very quick. So there will be times like this where it'll get you out and then it'll suggest that you get right back in, okay? It happens. I'd rather have a very, very tight rule on the stop rather than allow this to go against you and give it all back, right? So sometimes it's a matter of a few extra dollars on commission, right? You get out, you get right back in, but it is what it is. So over the last few, this past week, the election, right? Things that move. Let's look at Tesla, for example, okay? Now, we don't really trade on things like that. We follow the algorithm and technical analysis. Now, and the reason why I want to show you Tesla is to give you a few other rules of how we do things here, okay? And then I will start quickly flipping through charts. So Tesla gapped, okay, on the election result news. Now, yes, it gave us a signal on that gap. And yes, of course, it's gone parabolic and it looks like that trade would have been great, right? But normally, the victory symbols we take, again, we don't want to take far away from the 20. So we would not actually have taken this using the victory system. The only way we would have played this is on a breakout. So if we look at these prior highs here, okay, here, here, and here, and now we're breaking through that level, we would take that as a breakout. The way we trade breakouts is we allow the bar to close above that breakout level, and then if there's a move above that high, we initiate a half a position, only a half. Why? Because we know we're at risk of this snapping back to the 20. If it does, we again ensure we have a small loss because we're only trading with half the usual size. If it goes parabolic, even a half a size will make you great money like this. And then if it had retested after we put the half, came back, retested this level, or gave us another proper victory signal, we would add the second half, okay? That's why I want to show you that. Something like MicroStrategy, MSTR, right? That also did very well after the election because of Bitcoin. This one, we've been getting great signals on all along. And so it's been fantastic here. Bitcoin itself really reacted well, right? So let me show you that this isn't just on stocks. It works just the same on Bitcoin. Again, if you have a big bar like this, okay, and you're now getting in on a break of the high and you're far from the 20, we don't usually like to do that. If you really want to trade this and you're that far, again, you reduce your size, you take a half position, and then if it comes back to the 20, bounces, sets up again, you add the other half, or even a half would do you well here. Okay, again, it needs to match the criteria along with being in line with the higher time frames. If you break the rules, it is not going to be as consistent. Okay, you need to follow the rules consistently here. Any symbol requests? Let's start looking at charts here. and then I will show you a couple of other parts of this indicator. The financials have been doing very well lately, like American Express here. Again, if you look at the areas that where there's slope and you get a signal and it meets the requirements, look at this trade here, right? You get a signal, you have significant slope on the 20, the bar is very close to the 20, the bar closed near the high of the day, okay? It's also in line with the higher time frames. You look to your left and there's not a whole lot of activity. Yeah, we can go back and look, but you know, it follows through, we get in and off it goes. It gives us another suggestion to go long again, and we can either add or again. But whenever you get that second suggestion, you need to make sure it still meets your requirements, right? This one was a little further from the 20, etc. You may decide to add, you may not. Then it's suggesting we take some profits, and then here on this red, we get out of the full position. Okay? Do we go short here? No, we don't. Why not? We have the symbol to go short, but the 20 is not sloping in the direction of our trade. Okay? Now, here's where I want to talk to you about, can we take a trade when the 20 is flat? Yes, you can, but you need to meet two specific requirements for that. Okay? Let's look at this green candle here. If we're going to go long, we need to meet the requirements, which are, number one, we either break a prior high. So if this bar was bigger and was closing above this prior high, we could then go long, okay? Or it needs to retest the 20. So what you'll see a lot of times is a retest. So for example here, okay? Here's an example where the slope was going in the wrong direction, right? You have a green, it's going in the wrong direction. So the rules are either a break of a prior high, which we were nowhere near at that point, or a retest of the 20, which means it moves forward, it came back, and it bounced off that 20. Okay, it successfully held it, proving that the 20 is acting as support. Now it happened to give us a reentry anyway there, but even if the reentry wasn't there, if it retests, then we can get in. But that is the only condition that will allow us to get in with a flat 20. To make it easier on yourself, especially when you first start working with the indicator, just focus on the ones with slope. It's that simple, whether it's long or short. Okay, look at these. They've all worked out pretty well. Someone wanted to look at LTC from YouTube. Sure, let's look at LTC. Here, there we go. So you'll notice that this is a little messier, right? Not a very consistent trend. It's very messy looking chart. So initially, when I bring up a chart like this, I wouldn't normally trade it. Why? It tells me that my likelihood of getting stopped out is much greater. What you'll notice, the main difference you'll notice between a messy chart and a strong trending clean chart is the size of the individual bars, whether it's 5 minutes, whether it's a daily, weekly, monthly. During the messy ones, you'll get a bunch of smaller ones, you'll get a bunch of bigger ones, etc. When you're trading nice and steady, you know, look at something like the SPY, the bars are all more or less the same size, okay? That's the difference you'll notice. So LTC is not one I would trade, but again, you could look for those trades that match the criteria that we're looking for. Our rules will keep you out of most of these, whether it's a flat 20, whether it's a bar that is too far from the 20 to take, you know, all of that. So the rules will generally keep you away from these. That's why we encourage you to follow the rules. Okay? If you were to trade, say, on a higher time frame, it might smoothen out and you might get some signals. Okay? And you know, if you're more of an investor, see, this is messy on every time frame, so I wouldn't bother with that. If you're more of an investor, say you're managing your retirement account, okay, you work full time, you can't be in front of the screen all the time. You just like to buy things and hold longer term. I would trade using the weekly, if not the monthly. I would prefer the monthly time frame. It's just a lot smoother. Let's look at something like Apple, for example. Okay. It's these kind of moves that you want to be in for longer term. That's what you want. Okay. You don't want to be in and out of the market very quickly. You want to again be in for a lot longer, right? But be in during the strong trend. So again, Victor will tell you when it's trending and when it isn't. Okay. Let's see. Someone had, I'm sorry, someone had asked to look at the Nifty. Here's the Nifty 50. Okay. Let's look at the Nifty. So here's been the Nifty. Now this is on the monthly. All right. We can go back to the daily or any other time frame that you want to look at. Here are some of the recent trades. Now you'll notice that the Nifty recently rolled over on the daily. It's red on the daily. It's now red on the weekly. It's just not red yet on the monthly. So we're not quite ready to short here yet. But once it turns red on the weekly, if you were trading, for example, here on the weekly, you definitely want to be out of your trade now. Right? You would have taken some profits up here and then exited the rest there. And we can go back and look at it. The Nifty has been one of the cleanest trending indices around the world for quite some time. So plenty of opportunities on the Nifty. We usually cover it in our live chats with our members because we do have members from India as well. So that's great. Let's see, Rick, you wanted NVIDIA. Let me check. How am I doing on time? All right, still have about 15 minutes here. We'll try to run through some of these. So again, here's NVIDIA. Here's the most recent, which has been doing well. It's been trending nicely for quite some time. When it's sideways, we don't want to be in this, right? It's dead money. Whether you're buying and holding, okay, you're gonna be in there for months, not earning anything, or whether you're getting in and out, what you're doing is getting in, taking a small loss, getting short, taking a small loss, getting long, taking a small. This is where traders get chopped up. That's why we look for trades with a sloping 20, okay? If they meet the criteria, like I said, to trade with a flat 20, then fine. But generally what you want to do with areas like this is mark the highs, right? Mark the lows, and then look for a break either way. So here would have been a great opportunity to get in, okay? Here, again, a little far from the 20, so we might not have taken that. But then there's other opportunities along the way. And again, you can look at the different time frames. I don't know what time frame you like to trade, but here's one on the monthly. You would have been long going back to 2023, getting in around the 20 level. I know this is post-split, but around the 20 level, it's now 148. Those are the kind of trades you're looking at. If you want to look at, say, a 5-minute or a 1-minute, it works the exact same way. It depends on volume. See, there's periods where it's kind of doing nothing throughout the day, so it's flat, messy, and you can tell because you get so many little arrows and so on. None of them meet the rules, so it'll keep you out of them. And then you'll get days where this thing is trending nicely, and you'll get some real nice trades on it. But what else? CAVA. Someone wanted to look at CAVA. Is it a K? Yeah. Here, the Cava group. Again, if you're just looking for the trades that meet the requirement, that's what we're looking for. The reason why you're not seeing the ribbons colored is because I haven't switched to the 5-minute template, right? This is the 5-minute, but I haven't switched to the 5-minute template for the ribbons. This ribbon is for the daily time frame. So if I go back to daily, you're going to see the ribbons. There they are. And this is how the Cava group has been doing on the daily. Again, very consistent. So even if you go back down here, look at this green. the 20 is actually sloping against us, not what we want, right? But there's two conditions that would allow us to get into this trade. Number one, a break of the prior high, which happens on this bar. So we could have taken advantage of this trade. The other one is it moving ahead, coming back and retesting the 20, which it did, getting us back in here. So when you really get familiar with this and you start identifying these easily, you'll be able to take advantage even of the areas where are just main turning points, not those trends. But at the beginning, just stick with the nice, easy ones. They have slope. You get in here, move up, you take some profits, you add some, and you get out up here. And then the red doesn't qualify, green does again, take some off, add some more, take some off, exit the rest here. That's how we do it over and over again. All right. I'll look at one more here. Lumen, someone was asking. And then I'm going to show you the last 2 weeks of trades that we've had and a couple of other parts to this indicator. So again, when you see bars that are all different sizes, all choppy back and forth, that's not the kind of chart you want to trade. See, here is the kind of trend you want to trade. You notice how the bars are all very similar in size, right? Very consistent, very easy. Look at how you would have done on these trades, how easy it would be to stick with these rather than getting in here and sitting through all this back and forth in this mess. It makes a huge, huge difference. So when you see this, something's not right, it's not smooth, move on to the next chart, okay? Otherwise, once you find the rules, look at this. You have a signal, you have significant slope, you're near the 20, right? You close the day near the low, higher time frames are aligned with your trade, you look to your left, nothing but blank space, you wait for a trade below that low, and off you go. Okay, you take some profit, you take some more, you get out of the full trade. The green does not qualify at all. The red, again, it meets all requirements. Get in, flushes, take some off, add some more, come down, take some off, add some more, and then you're out. Okay, that's what matters. So think of the amount you would make in here, how many small losses that would overcome. That's what we're talking about. All right, now let me show you quickly. This is a spreadsheet. It's plain. There's nothing on here. But if you look at the bottom, there's all the dates, right? This is the spreadsheet that I show in my video that I sent you every night as part of our pro membership, where I highlight the trade selections that I make. So you can look over my shoulder and follow along. They're not recommendations. I'm showing you exactly what I'm doing with Victory. If you choose to follow that's up to you. Merck was the one that I told our members last night here, November 11th, Merck to the short side. That's why it's colored red, right? So if we go back to the charts and look at Merck here, let me blow it up. Here it is. So it's been trending really strongly to the downside, gave us that setup, closing near the low, higher time frames align, and then this morning it did trigger. It did take out that low, and so far it's been doing okay. All right, let's look at the prior day. We had WELL, and it's green, which means a long trade, right? WELL. And this is what it looks like so far. Okay, so a few days ago, it followed through. It's pulled back a little, but it's still good, and it's a nice, strong trending chart. Higher time frames align. Looks great, right? Let's go quickly the day before. So back on November 5th, DocuSign and NVIDIA. When I have other ones here, it's other charts I'm looking at that I would consider that do meet the requirements, but they're not as good as these. Remember, I'm comparing one to the other, picking ones with more slope, less resistance, etc., trying to be as consistent as possible. So let's look at DocuSign and NVIDIA back from November 5th. Okay, DocuSign. This was the trade. Beautiful, parabolic. It's been fantastic. NVIDIA, it's been doing well, not as well as DocuSign, but it's been doing well, right? We got in around 140 here, and it's now 148. What else? November 4th, we had GM. Right? Let's go to GM and show you how that would have worked out. And right here, this was the trade. You'll notice they're all very similar. This is why I share these trade ideas, to get it into your head, the same type of setup over and over again. Eventually, when you look at enough charts, you're going to train your eyes and you're going to be able to spot them very quickly. You'll notice the signal, the slope, right? The bar being close to 20, closing near the high of the day, higher time frames align. You look to your left, nothing but blank space. It triggers, boom, off it goes. Very simple. It's a formula we repeat over and over again. DocuSign was initially on November 3rd, and then we had another shot at it November 5th, whatever. So I won't show you that again. I already showed you. But Dell, we had Dell on the 3rd, right? But let's see. There it is. And there's Dell. So another one that's working out well. Now, you'll notice that there is some activity here, right? We just didn't think it was very much. So in the training, I'm going to show you a different tool that you can use to judge how much activity there is there. But so far, another winning trade. And we're going to go back just 2 more days here. We'll complete the 2-week cycle. So BK and IBKR were from October 28th. BK, Bank of New York Mellon, right? And October 28th was this one. So you'll notice here, can I zoom in on this? Yes, right here. So it did trigger, but it was a loss. But what do you notice? A small loss, right? That's what matters, a small loss. And then the other one, IBKR, Interactive Brokers. Love them, by the way, trade with them. And this is the IBKR trade. Boom. So again, we've seen several of these, right? And only one small loss. That's the difference. We'll just do one more day, and then I'll show you the other parts of them. AGO, J, and FAST. Better hurry up. I'm running out of time here. AGO. Look at that. There's AGO, right? Beautiful. What was it? J was the other one, and FAST. Okay. And this was October 29th here. So another small loss on J, right? Another small loss. That's the key. And then FAST. And there's FAST, another winner. So we had 3 or 4 of these, several others that were not as big winners, but are winners. And then we had 2 small losses. That's what we try to do over and over again here. Before I go quickly, oh boy, I see a lot of questions. I'm sorry, I had, for Raju, he said it wasn't Illumina, but it was LUMN. My apologies. Let's quickly look at LUMN here. And then I'll show you the other parts to it. Here's LUMN. So you notice how this very flat channel, very long time, you don't want to trade in here at all. But once it breaks, if you were to draw a line across these highs, that's where you'd want to get in, okay? And if at that point, you had green here, you had green and green, you had slope, everything else meant you could do that. Otherwise, just wait for the proper setups. Here's one here, the most recent one, where we would never take this because of the negative slope, but we would look to see if it A, broke a prior high, which it did not, or B, came back to retest the 20 and hold, which it did. So after that, we could have gotten in on that one, okay? Again, you can look at this on different time frames. There were some real nice shorts here. Obviously, once we broke these highs, we turned the corner and off it went. You can look at it on the monthly. or on the shorter time frames, whatever you like. I know there's other questions. I will stay if Jeff allows me to answer them, but I just wanted to quickly show you that along with this indicator, if you go to the top left of your Metastock platform, click on View and click on Expert Commentary, it's going to bring up this box. It's going to give you a bit more details on myself, on trading wins, on the Victory system itself, right? It's also going to throw a little arrow here on the far right bar, the most recent bar. You can move this by clicking on any other bar, above any other bar, or by clicking the arrows up here on this expert commentary box. Okay. The reason why I wanted to show you this is that when there is a change, okay, and when as the trade progresses, okay, this is going to give you a suggestion for a stop loss level. Okay, so if you can't be in front of the screen all day, if you have to go to work and so on, but you want to know where to set your stop loss, okay, just by looking at the indicator, you're not going to know when a red color is going to happen, right? When a red bar is going to happen. So this will give you a suggestion. And as we move forward, it is going to trail that stop. It's going to move it up, okay, over and over again until it identifies the exit. So I wanted to quickly show you that. And also for option traders on a trade that is optionable, it'll also give you some direction as to what type of option you might want to pick up, the type of expiry date, delta, etc. Okay. And the other great feature here, if you go to the top left, click the power console, the little P, third tab down, the Explore, you want to be able to scan with this. Now, again, they're in alphabetical order, so you can go all the way to the bottom and it'll show you all the scans here, or you can set them in your favorites. There is a Vora Victory scan, which will scan for the arrows, and the reentry scan, which will scan for the dots. Now, there's also a filtered one, which filters for the slope. So it'll only return the ones with slope. Okay. You go down here, you select which market you want to scan, you select your time frame, and you start exploration. Okay. I'm not going to let this run. I don't have time. I've got to get off. But I just want to see if it can identify a couple here quickly, just to show you the different columns we have. Jeff and his team have added now columns that will show you whether the weekly and the monthly time frame are also aligned. So you can quickly identify. Here, let me cancel this and see if there's anything here. There we go. So, you'll know whether it's a long or short setup. You'll have a slope, and what you're looking for is anything higher than 5. It'll be a positive number for a long trade. It'll be a negative number for a short trade. And you'll tell whether the weekly trend or the monthly trend are in line. So rather than going and looking through dozens and dozens of these, this will shorten that list for you very, very quickly. Okay. I'm sure Jeff will tell you more about it, but my time is up. I don't want to delay them, so I'm going to pass it back to Jeff.
Good job.
Once again, thank you so much for having me on.
Yeah, of
and
course.
If there are questions, I'm willing to stay on as long as you like.
No, it's great to have you. I appreciate it. One thing I wanted to kind of point out is if you got Victory 2 when it initially came out, thank you. If you didn't update it, you should update it, because we're on 3 revisions of this now. We had the first one that initially released. We updated it. If you're in Australia and you want an Australian dashboard, we created one for you. If you're in India, Raju, and you want, or anybody else, and you want the Indian market overview, there's a broad market overview that does India as well. Vince just showed the weekly and monthly trend, and that is something that was a customer request. Somebody reached out and said, well, I'd really like to be able to see if they're bullish monthly and also bullish weekly before I even open up the chart. And we're like, well, why didn't we think of that? And so we added it as a customer request. So if you have Victory 2, but you got it kind of early on and haven't updated it, we would have sent you a notice just letting you know a free update was available. There's no charge for these updates, but all you need to do is go to metastock.com/mydownloads and grab the update. If you haven't got it yet, stay tuned. I'm going to show you kind of the deal that we've got. Before I let you go though, Vince, I want to say thank you for everything over the years. I really appreciate it.
Thank you, Jeff. Your team has been great.
And like some of the comments we're having here, Joseph, Victory is awesome. Have been using it for 2 months. Really impressed with the results. Thanks. It's a great, simple system from Raju. Al says, great stuff. Awesome teaching. That kind of stuff. We do have a couple questions about one from Francisco and one from, I actually already answered it, about if it works on other platforms other than Metastock. And I know it works for TradingView.
Yes.
And I think that's it.
That's it. Now, it's only Metastock and TradingView so far. Yeah, that's it.
With TradingView, correct me if I'm wrong, there's no scanning.
No,
there's no market scanning at all, no commentary, nothing like that. And so if you want to get it and you want to use it for TradingView, maybe you have that. I would say take advantage of our free trial that we're going to give you as part of it, because there really is a reason that it's been rated. Metastock has been rated #1 31 years in a row. I wouldn't trade without scanning. I just wouldn't have the time to look at all the stocks out there. And it's such a helpful way. It's well worth the cost. And if you're willing to do Metastock or the Victory, we'll give you a free trial to Metastock, let you try it. We'll give you a money back guarantee. We'll let you play with it. So I think that hits all the questions. So
great.
I'm going to talk about the offer. Thank you, Vince.
Okay. Thanks again, Jeff. Take care.
All right. Great to have you. Okay. Okay. Let me go ahead and switch over here. Make me the presenter. Let's make sure we're sharing the right screen every time. Okay. There we go. And let me get my big face out of my own way. All right. So we're on Victory 2. This is a really big offer. I'm going to go in. Vince does a really good job about talking about what's included and the scanning and the expert advisor, all that kind of stuff. But we've actually packed a lot of stuff into this. So I'm going to kind of go through this. I'm going to try and kind of do it in a fairly efficient manner. I do want to say that this is one of our best-selling Metastock add-ons of all time. A lot of us in-house use it. It's been great since it was released, and we released it in late 2019. We talked about scanning. It does have system testing. If you want to test it to see what stocks it works best on, you can do that. What we've actually kind of added to the program is, you've got the high probability buy setups. Those are brand new. The take profit suggestions, those are new from 1 to 2. The multiple time frame views for daily, 5 minutes, 30 minutes. We've actually added some more time frames to that in the updates that we've done. The market dashboard, not only for the US, but Australia and India. Market explorations, which we've actually updated those as well. Expert advisors that kind of help you kind of understand what's going on in plain English. And then the system testers. So in 2.1, okay, we do have the 2.1 stuff. We added the new broad market views for India. We added a template for 1 minute and hourly, and we updated the temps to easily show neutral state. This was a free update. We had another version, 2.2, where we went into all of the explorations, and we added the ability to see what the monthly and the weekly state is when you're running that scan. And so that's included as well. That was also a free update. So if you haven't updated, if you got this and you're enjoying it, grab the update, because it just adds a few things that are really, really nice, especially if you're kind of in India or Australia, or want to be able to run that scan and kind of just outline the ones that also match with the higher time frames. That's really, really cool. So Vince showed them broad market overview and the multiple time frames. If you open up this multiple time frame and you want to look at a really small increment, like maybe you want to look at 5 minute, it'll work. You just kind of change it in the periodicity of 5 minutes, and you can see just what's going on right now. And I like that too. We've got the this is just an example of kind of that multiple time frame where you kind of have the ribbons. Vince covered that. And he covered the take profits, the high probabilities, the multiple time frame analysis. We really sat down when we kind of created this and said, well, okay, people really like victory. How can we kind of take it to the next level? And the reason it took us so long is like, we really kind of had to think, okay, well, what can we really do? What does Vince talk about when he's looking at trades? He talks about looking at the time frames. He talks about looking at what the market's doing. And so, it was really, really good with victory, but with victory too, we've actually kind of even made it an even better product. So the expert advisor Vince showed, the system test, that's how they look like. As part of the package, we're going to include victory too, but we're also going to include all of Vince's other systems. So a few years ago, he created the winning momentum strategy. We're going to throw that in for you. We're going to include the Veracity, which is a hugely popular system. We're going to throw that in there for you as well. We're also going to give you, Vince talks a lot about the room membership and what happens in the room. We're going to give you a year of that access. So every week you're going to get video alerts. You're going to be able to go to his live sessions. You're going to be able to get his trading ideas that he showed you. All of that stuff's also included. And if you just go up to their website and sign up, that'd be about $99 a month, I believe what it was, $1,200 a year. We're throwing that in too. So we also sat down and did a boot camp. Vince and I kind of showed how to run scans and kind of get everything started. Vince kind of goes in and talks a lot about kind of the stuff that he looks at, how to identify what to look for in trades. He always does a great job. And that boot camp that's going to come and be available with you for it as soon as you buy it is no exception. So here's all that's going to be included. It took me 6 minutes to talk about it all, but you're going to get Victory 2, that's from 1997. You're going to get Veracity, which was also 1997. You're going to get that winning momentum strategy. That was a $500 add-on. You're going to get a year of that Trading Wins Pro membership, where Vince is going to kind of be helping you learn the program, telling you why he likes stocks, which stocks he likes, all that kind of stuff. People really, really like that. You're going to get a year of that as well. The total value for that is $56.57, and that's a one-time cost. Okay. What we're going to do here at the conference, actually, this price is actually just a little bit different. Instead of paying $5,657, we're actually going to give you a conference promotion offer, $797. We're still going to give you, if you needed, a free trial of Metastock, so you can really run the scans and the explorations and see why the Metastock version is a version worth having. We're going to give you the bootcamp class for Victory, the 12 months of the membership service for Veracity, winning momentum strategies, and we're going to back it with a 30-day money-back guarantee because we think you're going to like it. We've had a lot of great comments in the chat right now. If you haven't tried anything, an add-on, this is a great one to kind of help you get started because it's been so well liked and so well loved. So you can do this. You can go up to metastock.com/conf-promo. You can give us a call, 800-882-3040, or you can go to metastock.com/saleschat. So for $797, you're going to get everything you need to get started. You're going to get that 12 months of membership. Everything's going to be included, and you're going to get a money-back guarantee. So give it a go. Give us a call. We'll help you get it set up. You can call us 800-882-3040. You can also do it online at metastock.com/conf-promo, or you can call us 800-882-3040. So I think that's the questions. I think we got all of them. Thank you, Ricky and Joseph. Thank you, Joseph, for using Metastock and the Vora Victory. I'm glad it's working well for you. If you haven't tried it, give it a go. If you have bought it already, make sure you've got the latest version because we we tend to just keep sneaking out just like little updates for things that we like for it. So there you go. In any case, before we kind of go back into the next speaker, I do want to say thank you to Stocks and Commodities Magazine. And one of our sponsors, the Traders Forum. Come up to www.thetradersforum.com. You can join a community, learn about the markets. There's a lot of really good materials up there. You can chat with other traders. It's designed to be a community of traders helping traders, and there's a lot of really smart traders up there. So www.thetradersforum.com for that. And we're going to go ahead and kind of transition over to Kelly. Kelly has actually been with Metastock for a number of years as well. He does a really good job. He's going to talk about kind of the tools inside of Metastock. He's going to kind of do a little bit of a deeper dive. Before I let him get started, though, I'm going to have him help me out. So Kelly, let's go ahead and get you in here. You ready?
I am.
All right.
I am ready. Let's see. What am I doing? What's my?
I've been a little bit delinquent. We're 3 speakers in, and I haven't done any prizes.
Oh.
And so it's time to rectify that scenario.
Agreed.
So we're going to start. Let's see. We're going to start with this. Have you seen this mouse pad anywhere before?
Those are cool mouse pads. I love them.
So these are. This has all the 12 major candlestick signals. It was put together by Steve Bigelow, who was a great friend of Metastock. We miss him. We love him. So we're gonna send this out. We're also going to do 2 of his books. We've got the High Profit Candlestick Patterns, and one of my favorite books, The Candlestick Profits, Eliminating Motions. Both of these books are great books, and one of you guys is going to win them. Now, Kelly, what I want you to do is tell, if I'm watching on YouTube, how do I make sure that I can be eligible to win a prize?
Well, what you're going to do is you're going to go to metastock.com. You're going to click on the banner on the metastock.com, go to the conference page, register, and then you're eligible to win prizes.
If you're also watching this on YouTube, I understand that it's great karma if you like and subscribe.
Oh yes, very
That's
good
what I've heard.
Very good karma. Very good karma.
Not guaranteed. Should we do this? Maybe Greg can put up a karma not guaranteed. Okay, so I've got the prize offers ready. The only thing I really need from you is
to choose my winning number so I can win.
Sure. I need a number between 1 and 9,145.
Between 1 and 9,145?
Yes, sir.
7788.
Okay. Let's see. This is a Alien S with a Gmail address in the U.S. That almost right. That rhymed. Looks like a 604 area code too. Now the rhyming wasn't intentional, but I don't necessarily mind. All right, I've got that jotted down. I'm gonna go ahead and just roll it over to you. I can see you. Let me go ahead and set the screen share over to you. Thank you for the assist as well.
Oh yeah, of course. Well, hey, I did love how you were just giving better discounts on the fly there. That was kind of awesome.
Yeah. Somebody, and I don't know who it was, but maybe somebody forgot to update a slide. All right, I can see your screen. It's on you.
Right.
You
okay,
ready?
well, I am ready to go. Thank you, Jeff. I appreciate it. Well, hello, everyone. My name is Kelly Clement. I am the president here at Metastock. First of all, I'd like to take a second just again, and I know you hear this a lot, but thank Jeff and thank Greg in the background for running the conference, putting everything together, getting all this set up, coordinating 45 speakers, and going through and getting all this set up is a ton of work. So thank you, Jeff, for all your hard work, and thank you, Greg, for all your hard work in the background as well in putting all this together and getting it up and running. So we love the education that comes out of it. And I've got to say, hopefully you were there for Vince Vora's presentation. That was a fantastic presentation. I love the way that Vince analyzes the market and looks at it in such a clean way. It's so easy to decipher what he said. I love somebody's comment in chat, and they just said, it is a great system, simple. And I love simple. Simple is awesome. It's one of the great ways to trade the market in simple ways. And that's kind of what we're going to talk a little bit about today is how to identify trades using Metastock, but in using different tools within Metastock that you may not be familiar with that are actually very powerful. And these are things that you can do with Vince's system or many of the other systems that are available. So let's go ahead and dive in here. Of course, we do have to do our quick disclaimer as we get started. So I'm just going to read you the first part of the disclaimer, and then we'll move on from there. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as an investment advice or a solicitation to buy any security. So I'm not telling you what to buy or sell. I'm just showing you how Metastock works and some strategies that you can look at and see if they work for you. And Jeff's talked a lot about this. I'm not going to spend a lot of time here. I want to get into the meat of what Metastock is and how it works and how I use it to identify trades. So Metastock goes back to 1982. So that's 42 years of awesome software being provided to traders across the globe. We've been around doing that for that long. Reuters, who is famous for their news and market moving news, purchased us back in 1995 so we could help them provide better charting and analytics to the big banks, hedge funds, institutions. So a lot of the banks that you hear about are using Metastock as part of their analysis. So when you're talking about finding tools that the big boys use, Metastock is one of those tools. So we've released, quote, different data feeds based off of Reuters data over the years. The current feed that we use is called Metastock Zenith. We released that back in 2012. And it's a very powerful data feed that is our current flagship data feed called Metastock Zenith. And then finally, we divested from Thomson Reuters back in 2013. So we could get back to a lot of what we do best in providing the best tools to individual investors. So that's a little bit about Metastock. Metastock's been the winner, Reader's Choice Award, for the last 30 years in a row. And I know Jeff's talked about that quite a bit. We'll talk about it a little bit more at the end of the presentation. So let's go ahead and get into the presentation here. Now, the first thing I like to talk about when I talk about trading is discipline. Because discipline, when you go over and over and you listen to each one of the presenters over this week, you're going to hear over and over and over again, discipline is key. Now, the reason I like to show this particular image is we're looking at the cockpit of a plane, right? So we've got the cockpit of a plane here, and when you get on a plane, you have the two pilots up in the cockpit working through a checklist. And when those guys are looking and working on their checklist, they're doing what they need to make sure that that flight goes safely. And if that flight doesn't go safely, well, odds are something happened with that checklist. I watch a television show. I don't know if you do. It's called Airplane Disasters. And Airplane Disasters is a TV show that takes, when there's an accident with an airplane, they go in and they go back and they look at what happened to cause that accident. Now, if it wasn't something mechanical, it was probably pilot error. And when it goes back to pilot error, it goes back to they didn't follow their checklist correctly. Okay, and that's what we need to be able to do as traders. We need to be able to go through and look at what we actually do when a trade goes wrong. Why did it go wrong? What did we do wrong? So we can actually apply that moving forward. It is a huge thing, and people talk about things like trading journals or keeping notes on different trades. And it is a great thing to do, to keep a trading journal. Hey, I traded this. Here's what I bought. Here's how many shares I bought. Here's how I did, and here's why. Here's what went wrong. Here's why. Understand those things. Help your psychology understand what went wrong with your trades. Did I not use my stop correctly? Did I not set my stop? Did I not set my limit? Whatever it is, try and figure that out. Try and figure out what's going on and what's causing that. Because discipline is a huge part of it. That emotional ride, it's the worst. So we're going to go ahead and talk about trade identification. So the main four things here I want to talk about is how to identify the best stocks, futures, Forex, crypto, whatever it may be to trade. All the workflows I'm going to be showing you can be applied in many different ways. And we're going to look at different sets of instruments and different things because I see reading through the questions, people trade a lot of different things in here. I have people who are trading stocks, I have people who are trading futures, I have currency traders, it looks like. So there's a lot of different traders in here. So we're going to talk about how to apply these strategies across different asset classes. And actually, just because I have it here and there, go ahead and put into chat what you trade. I'd like to know a little bit more about you. Is it just put what you primarily trade? Is it equities? Is it futures? Is it currencies? Whatever it may be, mutual funds, your investor, just put it into chat so I know what it is that you trade most, so we can kind of get a good view of that. All right, then we're going to talk about when I should get in and out of a trade, how to follow a rule-based system, how to test your system before you spend your first trading dollar, and how to add some clarity to your trading decisions. Okay, so what we're going to talk about is really how to take our indicators that we have and how to actually figure out which indicators are best to use on what we're trading. Okay, so I'm getting some options, some equities, some different things in there. Awesome, thank you. Thanks, Greg. Thanks, Raju. Okay, great. Okay, so when we talk about four main, and I love it, everything that I've gotten so far is different. That's fantastic, I love it. Okay, so we're going to talk about the four main categories of indicators. When we look at indicators, there's these four groups. We have trending indicators, momentum indicators, volatility indicators, and volume. So you may be trading momentum based. You may be trading trending based. Now, what are some of these indicators that fall into these groups? Well, if we talk about trend, we're talking about things like moving average, MACD. Okay, MACD is a very common indicator. A lot of people use moving averages is very common. When we get into momentum, we're talking about things like stochastic, RSI, or even a combination of the two, the stochastic RSI. There's that combination. Okay, if I talk about volatility, I'm talking about Bollinger Bands or average true range. And then volume, well, of course we have volume, but we also have on-balance volume or OBV. We have Chaikin money flow, and these are just a few examples. Okay, so when we're sitting down and we're looking at charts, it can get really confusing because every chart that you look at may trade differently based off of what's going on with that chart, right? Price action varies from chart to chart. If I were to open up GM and Tesla, which are both auto manufacturers, Tesla is a great trending stock, but GM may be completely different, even though they're in the same sector. Okay, so it can be really confusing on which indicator we should actually pick out of that group and apply to whatever it is we're trading. So here's an example. I'm looking at Best Buy here. If I were to take this chart and say, well, what works best? Should I put on one of those trending indicators? Should I put on one of those momentum, volatility, or volume? It's hard to say just looking at it because I do have, okay, so we do have this volatility here. I have some momentum to the downside. I've had some trends in here. There's a lot going on. So which one should I really go with here? And that's what we're going to talk about today, is using your preferred indicator to find opportunities in the market and then figure out if they match the personality of the system that you're trading. Or if you have something specific that you like to trade. I had people in here that said, hey, I like to trade gold. Okay, well, what works best on gold? What indicator should you be using on gold? Okay, so is it a trending indicator? Is it a momentum? Is it a volatility? And what we're going to show you is how to identify that. Okay, so where we're going to start is using your preferred indicator to identify current opportunities. So let's go. So what we're going to do is we're going to do some market scanning, but first I want to talk about what we're going to be looking for. Okay, so let's go to Metastock here. Okay, so if I'm looking at Metastock here, what I'm going to do is I'm going to scan through a list of stocks to identify current opportunities based off of the MACD. Okay, so I'm just going to put the MACD on General Motors here. I don't know if there's a current signal or not, but I just want to show an example of what we're going to be looking for. Okay, so when you're looking at the MACD, what you're looking for is typically a crossing of the signal line here to generate opportunities. So this would be one opportunity here. Okay, and then this would be another one here. Now, we don't have a lot of time to go into a full class about the MACD and how it works and how it's built, but there is a lot that you can do with the MACD, okay? So what we can do is, if you're not familiar with the MACD, how to get signals out of it, what you can do in Metastock, and Vince was showing this, is the expert advisor. So you can go in and put on the expert, and you can see there are a ton of experts built right into Metastock that you can select from. Now, if you're looking for the MACD, you can just type MACD up here at the top, and you can see there's 4 different experts that have MACD in the name here. We're going to choose this MACD by Metastock here. We'll click attach. And what this will do is this will give us our buy and sell signals based off of the MACD crossing. Okay, so we had a buy here, we actually had a sell here, and then a buy here. So it actually looks like it crossed a couple of times. And what's going on there. So we had a couple of different crossings. Had a comment over in YouTube from Scott Boy. Flying is all about situational awareness. I love that that comment. Flying is all about situational awareness, as is trading, right? We need to be aware of what's happening and what's going on. Okay, so we have our buy signal here. So what we're going to do is we are going to scan through a list of stocks to find opportunities to give us that are currently happening today. Okay, that's what market scanning is all about. Finding a current opportunity and applying it is a great way to just get right to a trade. And that's where a lot of other platforms don't hold up, is in market scanning and backtesting, which we'll get to in a bit. Okay, and this is just a quick overview from our commentary window that Vince was showing a few moments ago about what's going on with the chart. So whatever expert you're choosing will also give you commentary to show you exactly what is happening on your chart at this time. So you can see the MACD is bullish. Since its buy signal, it's gone up 7.5%, and it's also in an overbought range. Okay, so there's a lot going on with GM right now with this current stock. Okay, so let's go in and let's go to market scanning. Now, what is market scanning? Well, it's just like what it sounds like. Okay, so we can scan the market to identify current opportunities. Now, you can look for volume-based things. You can look for volume surges here, 90-day average volume. You can look for Bollinger Band setups, candle patterns that are built in here. There's a ton of systems and strategies that you can use here to identify opportunities. In this example, we're going to look for, again, MACD. And you can see there's a lot of different scans based off of the MACD here. I want to go with the MACD expert system. So the MACD expert system, if I hover over it, will tell me what I'm looking for. So I'm looking for buy signals, sell signals, and overbought and oversold. So over here, you can see where it's painted red here. That means it's overbought. There's a lot too much going on here. So we're going to look for all 4 of those. Now, we don't have time to do a whole market scan, so I'm just going to look at the S&P 500. So I'm just going to go in here, select the S&P 500, and it's just going to scan the market for me and look for signals that are happening on the S&P 500 right now. Now I'm looking at delayed data, so it's not real time. And again, I'm not showing you anything you should buy here. I'm just showing you how this sets up. Okay, so let's see what we get out of our list here. Now, as it goes through, what's really cool is I can see that it's rejecting about 80%. Well, that means there's a lot going on the market today. So we either have a lot of things going up, a lot of things going down, or a good mix of both. So we'll find out what's kind of happening with the MACD here. Down here, we have our instrument name. These are all our results. Here's our rejects. So we have 100 trade opportunities today, right now, based off of the MACD. That's a lot. I don't want to sit and go through 100 charts and try and figure out which one's going to be the best of these to trade. So we'll figure out a solution to that in just a minute. But let's take a look at what we have here. So if I click on buy and double click on it, I can rank on the column and I can see which ones have buys here. So let's just highlight my buy signals. And you can see I've got 10 selected here. So 10 of my stocks are giving a buy signal right now. So that means 90 are sell signals. Okay, so we've got a lot of sell signals, or we've got some overbought, oversold. So you can see we've got a lot of overboughts. Okay, do we have a lot of oversolds? We've got a few oversold. So you can see kind of what's happening here. We've got different buy opportunities going on here. So if I go back to my buy, I mean, I could go and I could look at Edison, and I could pull it up, and I could put my expert commentary on there, and then try and figure out, well, is this a trending stock? Well, had a great trend right here, right? It did have a very good trend, but then it got kind of volatile, and we're kind of sitting in that. So again, should I use the MACD? Should I take some kind of buy signal here? Well, that's the question we want answered. So we can sit and analyze each one of these charts and try and figure it out and look at how these have kind of done historically. But what makes it really easy in Metastock is we can do something that's called backtesting. Okay, so let's talk about what backtesting is. So backtesting is a method of evaluating a strategy or a model's performance by applying it to historical data. It's commonly used in finance to assess the viability of trading strategies. It is used by all levels of traders, from beginning to institutional level traders, to identify the best opportunities. So this, again, from person who's just getting started trading to the most advanced hedge fund traders, use backtesting. I'll tell you, we deal with institutional traders every day with our institutional version of Metastock, and they are constantly asking for their systems to be written, put into Metastock, so they can go through and backtest it. Backtesting is a key part of understanding if your system works. So like if you went back to Vince, his system has a system test in it, because he wants you to be able to look at it to see which instruments it really works well on. Okay, so let's talk a little bit more about backtesting and what it is. Well, think of it as a personality test. Okay, that's a good way to put it. If I have a stock trading and I have a system, I can put them together and see how well they match. Does their personality match? Do they go together? And that's really what we want to answer as part of it. Okay, so fun these days is to go into Google and put in, hey, what is backtesting? And that's what I did here, and got the Google AI overview that pulls from a bunch of different websites and puts it into one synopsis. Let's look at why to use backtesting from the Google AI overview. Okay, backtesting can help traders identify strengths and weaknesses in their strategies, make informed decisions. Backtesting can help traders make informed decisions by providing objective analysis based on the strategy's performance. Remember when we were talking about emotion and discipline? That's where backtesting can help us. It can say, yes, this has worked systematically, and that's what we're after. It can help you manage your risk. Backtesting can help traders understand how volatile an asset class can be and how to manage their risk, improve your trading confidence, and backtesting can help traders increase their confidence in a strategy by showing them how well it would have played out over time. I mean, when I go through this and I read this, do I want this? Yes. Do I want this one? Yes. Do I want this? Yes. Do I want to manage my risk? Yes. Do I want to understand the volatility? Yes. Do I want to improve my confidence? Yeah. So if you use this as, do I want these things out of my trading? System testing is a great way to do it. Okay. So let's go over and let's go through system testing. Let's talk about it. So I've got my 100 stocks here. Again, I don't want to go through 100 stocks to figure out which is the best trading opportunity here. Okay, so what I'm going to do is I'm going to go back to the Power Console in Metastock and go to the system tester. So we're going to do the same thing. So instead of selecting an exploration, we're selecting a system test. So here I've selected the MACD expert system again. And if I come down in Metastock, at the very bottom of all the lists that are available in Metastock, you have this last exploration results 100. Okay, so if I select all those, I'm telling Metastock I want to put the MACD against those 100 stocks. Now, there's just a few brief things that we have to do to kind of set up Metastock to make sure it's tuned to how we trade. Because if I was to ask each one of you, well, how much money do you have in, these are questions not to answer in chat, please. How much money do you have in your trading account? How much of that money are you willing to risk? What are your stop levels? There's a myriad of questions about that you need to answer as a trader and say, this is how I trade. And the system test will vary depending on what you're willing to put into a trade, how much you're willing to risk. And that's okay, because you want to understand how it works for you, okay? So what it asks first, are you trading long, short, or both? Well, in this circumstance, I have both long trades and short trades. So I'm going to do both, okay? Then you can tell the system tester, how long do you want to look back for? Well, in this case, I like to look over about 5 years. Well, why do I like to look back over 5 years? Well, there's a lot of different market action that's happened over the last 5 years. I mean, we've got Corona, we've got, you know, the latest market run, we've got just different varying times and periods in there. And looking over a longer period of time lets you get a glimpse of how this has performed really over time. And that's really what we're after. If you want to do a shorter period, that's up to you. Okay, system testing is personal in the way that you look at it. So you'll want to do that. So this is the way I do it. You can also set specific date ranges. So if you want to test specific periods of time, you can do that as well. Here you can also tell the system tester what time frame that you trade in. Okay, so if you're a 1 minute, 5 minute, 30-minute trader, or if you're just a daily trader, you're a weekly trader, you can tell it what time frame you want to test in. Okay, few other options we can set. I'm just going to show you a few here. One is account. And the reason why I say account is important is because this is really the big one of how you trade. Okay? So you can tell the system tester how much money you have in your trading account. So I'm just going to say 100,000 as an example. And then you can say how you trade. Well, I only trade 100 units at a time. I only trade 1,000 units at a time. I trade 1 million shares at a time. Whatever it is, you can just put that in as a flat number. Okay. Transaction cost is just saying, hey, I spend $10,000 on every trade. That's my number. I just trade 10,000 at a time. You can do that. Or you can say percent of available equity. So what this is if I have that 100,000 in there and I risk 20%. Now I'm not saying you should risk 20% in any given trade. That's a pretty big number. I'm just doing it in this example as, you know, the math is easy. Okay, if I have 100,000 in there and I'm risking 20%, it's 20,000 that I'm putting into that trade. If my account size goes up to 200,000, I'm risking 40,000. Okay, so that's kind of the way that that works. Now, if you are a futures trader, you're a Forex trader, what you'd want to do is do this points only test. Okay, that's designed for futures, that's designed for Forex. So that's how you want to test when you're trading Forex or futures. Okay, broker is just if you pay commission, you can put that in. If you trade on margin, you can put that in. And then trade execution is about when you get into a trade. Okay, most of these you're just going to leave alone. You're never going to touch. Account's really the one that most people just touch. The last trade execution, I like to talk about it just for a second because it's an important thing. So if I say realistic market prices is what it says in here. If I'm saying realistic market prices, what that means is, well, if I have a buy signal that's happening today, when do I typically actually get into that trade? It's actually at the open of the next bar, okay? And that's what realistic market prices means, okay? So it's just, I got a buy signal today, it's gonna get me in on the next bar. Now you can change that. You could say, I wanna get in on the same bar. I wanna get in 3 bars later. I wanna confirm, I want it to go do certain things before I get in. You can change that, but we're just taking a systematic approach to when it says buy, buy it. When it says sell, sell it, okay? You can also put slippage in here. And slippage is, well, if I get in on that next bar, do I get in right at the open, or is it just a little percentage above it or below it? So you can set that in as part of your system testing as well. Now you can also put in stops in here. Now in this example, I'm not going to. I just want to see how the system works. When it says buy, buy. When it says sell, sell. That's all we're testing right now. Okay. So those are my kind of set it and forget it. So you can go in and do that one time and not have to worry about it again. Okay, now I am ready to run my system test. Let's go ahead and run that system test. So you can see it down here. So basically what it's doing is it's going through those 100 stocks and taking every trade over 5 years to give me my personality test results. Okay, so I'm going to know which one of these trades best. Okay, here we are, view our report. Okay, and this is our report here. Okay, so let's kind of expand this out just a little bit. So what I'm looking at, just so we can see what these are. Okay, so I have my instrument. So this number up here, right here, coordinates to the number up here. Then I have my symbol, what time frame I tested it on, my date range, my net profit, my percent gain, how many trades I placed, and my trade profit loss. So if I come up here and I go to percent gain, let's look at this. So over the last 5 years, trading the MACD, the most profitable was Tesla. Okay, so that was my most profitable stock over the last 5 years. So let's look at what Tesla did and how it performed. So I had 103,000 in profit. Again, remember I put in 20,000 to start at the beginning, and then over time, taking every trade, I would have gained 103% over that 5-year period. Okay, I had 293 trades during that time frame. So you have to think too. It's like, okay, well, over 5 years is 293 trades. Is that the number of trades I want to be in? Am I that active of a trader, or is that too many for me? You have to think about those kinds of things as well. This number is always really interesting to me. This is trade profit loss. So that means I had 145 winning trades and 148 losing trades. So I had more losing trades than I had winning trades. Well, what does that tell me? Well, it tells me that my wins are big and my losses are small. And remember, this isn't trading with stops. This is just trading when it says buy it, when it says sell it. Okay. Okay, so let's go into it a little bit more here, and let's take a look at what Tesla would have done for us. Now, there is a ton of data in here that you can go through, you can analyze, you can spend hours going through, okay, on each one. I don't do that. I look at a very few key numbers very quickly, and one quick item in here to determine if I feel like this is a good opportunity for me. Okay, so if I look at this, I had 145 profitable trades, 117 were long, 28 were short. My average profit was about $2,000, okay? And my highest profit, 13,876, and lowest profit, $5.18. Most consecutive in a row, 10. And then I can look at that data for this. Now, this is one thing I like to look at. My average profit, 1,900. My average loss, 1,169. Now, you're probably not going to let it go 1169, okay? What you're going to want is look and see what your risk tolerance is, plug that into the system, and then see how that changes. And we have awesome free support that shows you how to use this and talk to you about how you want to use workflows. And we've also got videos that show you how to do this and manuals. So however you prefer to learn, we've got resources for you, okay? Now you can go through and you can look at each order. You can go through and look at each position and see how it looked over time. Again, I don't spend a lot of time in these. Some people do. Some people really like this data and information. The key thing I like to look at is what's called the equity line. Okay, so the equity line is basically what my money has done over time. So if I come back here, you can see this was my initial investment. Remember, I had 100,000 and I was willing to risk 20,000 out of that. Okay, so over that period, we can see that this is how my money performed in a graphical view. Now, if I look at this back here a few years ago, how did Tesla do trading the MACD? If you were to think about this and go, well, it looks like my money did pretty well here, but then it had drawdown or loss over this period, and then it went kind of flat. So if I would have seen an equity line just from right here back, I would have said, I don't think this is working really well. But what has Tesla done trading the MACD over this additional period of time? We're talking up to 3 years. How's Tesla done trading the MACD? Well, we all know that Tesla is a pretty good trending system overall, so it would make sense that the MACD would perform well with it. And we can see that represented here because we have this smooth, consistent growth over time trading the MACD. So if I was making considerations, I might say, well, hey, the MACD has seemed to have worked well in the past. Well, what are my odds that it's going to work well in the future? Okay, so that's the way to kind of look at this. So if I go back and I go to Carnival Corp, let's look at Carnival, and I'm just going to go right to the equity line. Let's look at that one. Equity line here, kind of flat, been trending and been kind of working well. Now this, again, this is a representation of our money and how our money is done over time. So I like the way that this looks as well. Royal Caribbean, let's see how that one's done. Equity line, okay? Looks much the same as Carnival, not too big of a surprise. Okay, Baker Hughes. So what we've been able to do, okay, let's talk about Baker Hughes here for a second. Because if I look at this one, yes, this has performed really well over time, but what it did is it worked well for about 6 months, or excuse me, about 2.5 years, and then it hasn't been working, okay? It's been flat, we've had drawdown. So even though it's worked well over 5 years, this is a system this is a result that doesn't appeal to me because I had 3 that looked like they were continuing to work, okay? Let's go down and let's look at the bottom result. So this one lost money down here. So if I were to look at this system over 5 years, we went from 100,000 down to 75,000. So trading this stock consistently with the MACD has lost money over the last 5 years. So now you start to go, okay, well, if I have an opportunity here and it's between Tesla and Fortinet on the MACD, which one are you more likely to choose? Okay. Now, remember, this is no guarantee of what's going to happen next. If we all knew that, then hey, we'd all be superstars and wouldn't be here, right? What we're trying to do is increase our odds of success. If something has worked well historically, we have a better odd that it's going to work well moving forward. If something has performed poorly historically, we have that same odds moving forward. So that's what the system tester is designed to do, help you increase your odds on what trade you're going to take, okay? So what I want to do here quickly, I'm just going to take a very different approach to this very quickly, and then we're going to get to a different workflow. I'm going to take the same MACD, but what I'm going to do this time is I'm going to apply it to the Forex major pairs. And we're going to look at it on a 5-minute basis. Now you can do this on futures, you can do this on Forex, whatever you're doing. So I'm just going to say, okay, major pair out of the 36 major pairs on a 5-minute chart. Let's see if we have any current signals. You can see how fast it churns through that to identify opportunities. Okay, we got one result. It's a buy on the CAD EUR. So let's go to our system tester. Let's do this. We want to trade it to points for our future. Just click OK. And let's look at our equity line. Okay, so we went from scanning, finding an opportunity, to back testing it and looking at it and going, it hasn't worked very well, so it's probably not trending. I probably want to disregard that trade. Okay, so what did that take? 10 seconds? And that's what you can do, is you can find opportunities that match your comfort level and what you want to do that quickly. And that's why I love scanning. I love system testing and just being able to quickly identify opportunities by doing that. Okay, so what we're going to do now as we get towards the end here is we're going to take a different workflow. Go back to my PowerPoint here. Oh, I had a different workflow on here. Oh, there it is. Okay, so we talked about using your preferred indicator. So in that example, it was a MACD. In this example, I want to take and find the best indicator to work on a particular stock or future. So somebody want to throw out a future or a stock or something that you trade. Now we'll run a system test on it. We're going to see what common indicator trades best on that particular instrument. So I'll take the first maybe 2 or 3, and we'll take a look at it there. Just going to deselect all my stuff here that I have set up, and we're going to take a look at what you want. So the first one that comes up here. Not, I will scroll back and I will look at, I know it always takes a second. It's always hard when a presenter's like, okay, give me something. And then, everybody has to go take time, find the chat, look at it, kind of figure it out. Okay, so we're going to take, looks like Lumen. We're going to go back to Lumen here, and then we'll take anything else that comes up. Okay, so if I go back and I look at Lumen here, so what I'm doing is I'm doing a different approach. So I'm not going to scan the market to see if I have a buy signal. What I'm doing is I'm just going to take this particular stock, Lumen, and then what I'm going to do is I'm going to put it against 80 different systems in Metastock. So I'm going to select all these systems. Actually, yeah, we'll leave the Ichimoku in there. So I've got 84 systems that I'm going to actually test against. Okay, since I'm doing an equity, I'm going to go back to my account, take off points only. And then what I'm going to do is we're putting Lumen against 80 different systems here. So if I click Start Systems, Start Test, it's putting 80 different systems against Lumen. So it's looking at each one of these and putting it against it. Okay, so let's take a look at what our results look like here. So if I go to Results and break this out, let's do our same ranking here. Let's look at percent gain. Okay, so if I'm a trader of Lumen and I look at this, well, I can come down and say, okay, well, CCI doesn't work on it and this range doesn't work on it. So I just want to quickly find which one actually does. Okay, so if I'm looking at CMO reversal, that's the top system here. It had 168% gain over that 5 years, 604 trades, 284 winners, 320 losers. So we can have a lot of losses, but still win big. And that's one of the things in trading is mitigating that risk so we can actually look at it here. So if I come in and I look at my equity line, okay, so this is a really different looking equity line here. So we have, it didn't do much at all for quite a few years, and then it's been kind of rocketing up. So it's had a few really good trades. Okay, is that long time consistent? That might be just a few, 1 or 2 good trades in there. So I don't know, I'd be kind of a little wary of that. This pattern trading system 4, yeah, same kind of thing. So MACD histogram 1. Okay, we're having kind of these same kind of results. So maybe this stock has just been kind of flat and then it has recently been popping up. I don't know, we're not even looking at the stock. But that's a way that you can quickly identify it. Now, as we find our opportunities and as we talk about them and look at them, so let's go back here to our first workflow where we found Tesla to be the top performing one. Okay, so when we go in and we look at it here, so here we have our buy and sell signals on the chart from the MACD. Now you can see that when I look at this, I don't actually have a current signal on the MACD. So what did the scanner find when it did that? So let's go in and let's look at our commentary window and see what is happening. So the MACD has provided signal indications in 3 ways. Signal line crossovers, which we've discussed back here. Okay, overbought, oversold conditions, and divergences. Okay, so those are the 3 setups that you can get with the MACD. So with Tesla, It's increased 28% since it had its buy signal back here. And what is happening now is the MACD is in an overbought range. And that's why it came up in our scan. So it's in an overbought range. And so it says prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. So this is what's great about the expert and pairing it from when you get a system test result, because you can come in here and say, okay, well, what is actually happening and what's going on? Okay, so it's a really powerful way of doing it. So I've shown you two different workflows here. So we talked about one, using your preferred indicators, and then two, finding the best indicator. So taking your preferred indicator, so it may be the MACD, the RSI, the stochastic, somebody mentioned the CCI for momentum. You can take that and put it against whatever you're trading to identify if it works on your system. Now, for some people, looking at system testing as an initial look, it seems kind of daunting. There's a lot of information there. You look at what it is, but I can't emphasize enough the importance of system testing and what it can do for you in your trading. Remember, again, all these points that we went through when we talked about the benefits of system testing. We went through all these bullet points. And if these bullet points resonate with you and what you want to be able to get out of your trades, then you should absolutely look at back testing. Once you start using it, just sit down, kind of play with it. You're going to find it's actually very, very easy to use, and it's a simple way to do it. Now, one of the great things about Metastock, I mean, obviously, besides being the winner for the best analysis software for 30 years in a row, is we offer great technical support. And I want to talk about that for just a minute before pricing. When you get Metastock, we offer free lifetime support. So you could call our reps and say, hey, I need help with this. And they're going to help you, walk you through whatever you need help with. It's free. You can spend 10 minutes on the phone with them, an hour on the phone with them, and we're not going to charge you a dime for it. It's just part of having Metastock. When you get Metastock the first time, we'll call you and we'll help you get your Metastock set up. Okay, we'll screen share with you if you want. We'll talk about what you want to do with Metastock, what you want to accomplish. We'll show you how to do it. We can follow up with you. We offer free unlimited access to recorded trainings. There's so much value out of the back end of Metastock and what you get. You know, whenever I travel around and talk to traders and ask people, hey, you know, if you have Metastock, what do you think of our support? And I am never fearful about what somebody will say about our support. It's always resonating and just shining of what people have to say about our technical support. And I can ask here, hey, what do you think about our technical support? And people could put in chat what you think about our technical support if you use Metastock, because it is fantastic. So how much does it cost? What can you do? Well, there's two versions of Metastock. There's Metastock end of day, and there's Metastock real time. Okay, our Metastock end of day does everything that we just showed you, except the only thing it does is it does it in daily, weekly, monthly, quarterly, yearly. So you get your data at the end of the day. With that $74.95 a month subscription, you get access to every bit of data in the world. So you get stocks globally, you get indices globally, you get futures globally, and then you also get US options. So there is a ton of data that's included with it. $74.95 a month includes your data and Metastock, and that's end of day. Now, if you want real time, it's $265 a month, and you can do everything we just talked about, but you can also do it in 1 minute, 5 minute, 30 minute, custom intervals, whatever you want. Okay, so it's $265 a month plus exchange fees if you want real time. Otherwise, it's delayed 15 to 20 minutes. It also includes another platform called Zenith, which we haven't had a chance to go through, but that gives you our real-time data. It gives you real-time news from Reuters, also additional analytics and broker views and different things as well. So there's a lot that comes with Metastock real-time. So depending on what kind of trader you are, you can get either version of Metastock. Now, what we do is we actually offer this on a 3-month trial. What you do is you buy it, you buy 1 month, and then you get the second and third month for free. So you can just call us up at 800-882-3040. You can go to metastock.com/sales chat. If you want to talk to somebody about which version might be right for you, they can walk you through it. If you just want to get signed up, you can go to metastock.com/conf-promo, and you can sign up there, and you can also see all the other conference deals right up there as well. So give us a call at that 800-882-3040, metastock.com/sales chat. We'd love to talk to you. Our guys can run a system test for you and send you a screenshot if you'd like, if there's something specific you want to see. All that's available. So you get Metastock 19, all the data regions. We actually used to separate our data regions, but we give you every bit of data now as part of our subscriptions, the white glove installation, and plus we give you what's called Unleash the Power of Metastock. It's an ebook that you get with 2+ hours of video training that's exclusive to new people who are just getting started with Metastock. So Jeff, that is me. Actually, I'm going to answer Ed's question here. Metastock is technical analysis only, no fundamentals. So that's a great question. So if you have Metastock end of day is going to be strictly technical, Metastock real time is strictly technical, but with Metastock Zenith that you get with our real time, you also get all the fundamental data that you want as well. So we do offer fundamentals, and all that fundamental data is available for analysis. You can just pull it up, type in an individual security, and see all the fundamental data, or even screen based off of fundamental data. So that's a great question, Ed, and a great clarification. So if there's any other questions, feel free to put them in chat. Otherwise, Jeff, right on the dot.
How many years in a row has it been rated number 1?
30, straight up 30.
31.
Oh, 31, I'm a loser. I guess I'm a loser for having the number wrong.
I counted it. Let's see. Out of all of the power tools in Metastock, what is your favorite and why?
Out of all the tools, I've got to say, and I know it keeps coming up, but it's the market scanner. It's the Explorer. The Explorer, I mean, it just, to be able to pick a strategy and get a list of what I want specifically, it doesn't have to be pre-built. I can make my own. I could add additional filters to it. You know, if I'm looking for certain price ranges, or if I'm looking for a certain amount of volume or moving average of volume, I can customize it however I want and get the signals that I want to see. And that's just so important in trading, is just narrowing it down that way. So that for me, that's the most valuable tool.
Do you like how I changed the screen, but it's the same screen?
I do. It's very clever.
It's amazing how many people, like Daniel yesterday was talking about how handy that is, like the scanner, you know. And I think we're, like Daniel, you, me, are very, very experienced with Metastock and technical analysis. Obviously, we've been doing it for a long time. And so for us to have that powerful of a tool that's still useful for us, you know, with expert commentary, if you're looking to learn about stuff, it's great. Like it's going to explain candlestick patterns and stuff like that. But I'd always say my go-to tool is going to be that commentary. So I want to sum up the offer, and then I'm going to have you help me pick another prize winner. But it's either $265 for the Metastock real time with the Zenith data feed, which is a platform. Kelly talked a little bit about it. It was developed at the cost of over $1 billion. It includes news from over 3,000 reporters and 300 different news bureaus. It's massive. Coverage for exchanges, over 300 of them. So all that, it's a Bloomberg type quality feed, and it's included with Metastock for $265. So you could do that. You could also do the monthly subscription, which is $75. We're going to give you 3 months. That's $25 a month to try out the software that's been rated number 1 31 years in a row. So how do they do that, Kelly?
Well, it's really easy, really. All they have to do is call 800-882-3040, go to metastock.com/sales chat, or metastock.com/conf-promo. But again, really, if you want to talk to somebody about which version is better for you, just chat with our guys. They are great. They can guide you through whatever questions you have and get you going.
Right on. Okay, let's move a little bit to get the prize given away. So the prize that you're going to help me give away right now, Kelly, is Dan Passarelli came in and he spoke yesterday about his red-green knockout strategy. One of the services they do is called a strategy call, where you sit down with one of their members of their trader success team, and they talk to you about what you're doing and how you can improve. It's a service that they offer. It's worth $500. We're going to give away one right now.
Ooh, let's go.
In order to win, if you're watching us on YouTube, what you want to do is you want to go to metastock.com, click on the banner at the top that says Traders Conference, and just register for the event. That'll get you added to the list. If you're watching us in GoToWebinar, Ed, and everybody else in GoToWebinar, you're already good. You don't need to worry about it. So, but if you are also watching us in YouTube, what's some other things that you could do that would really help a lot, Kelly?
I mean, if somebody to push that like button,
Oh, that helps
and
a
then
lot.
also put that subscribe button.
Oh, those buttons feel so good too.
They do. Well, and to get notified about all the cool things that we do here.
Yeah.
It's awesome.
All right. Okay, so give me a number. It can be anything between 1 and 9,145.
Okay, so we went kind of high last time, so I think we're going to go low, and we're going to go 1,652.
And that will be Sammy B in Kenya. Right on, Sammy.
Hey, all right, Sammy.
Now, there might be a few Sammys in Kenya. If you have a Yahoo address, that might be you. So I'm going to go ahead and make a note of that prize. And watch for Dan Passarelli's team to reach out to you next week for getting that prize. So, Kelly, thank you for the assist. Again, if you want to sign up for Metastock, go to metastock.com/conf-promo. All of the specials, all the add-ons that we've talked about this week are available there, including that extended trial to try out software. So thanks again, Kelly.
Thank you, Jeff. Thanks again.
All right. You can let yourself out.
I will.
All right. I do want to say thank you real quick to the CMT Association for sponsoring our events. They do a great job. They've always done. They've been supporting for us for a couple of years. Tyler's going to come in. Tyler Wood is going to come in on Friday. He'll talk about some things that were very eye-opening for me in terms of how much a CMT designation could help you if you want to have assets under management. If you have assets under management and want more responsibilities, more assets under management. It was very, very opening. You might also just want CMT to stick at the end of your name. That might be something you want to do as well. If you want to find out more about the CMT Association, go to the cmtassociation.org, and they can help you get started. You can also call them 646-652-3300. And big thank you to the CMT team over there. Always great to work with. Thanks for supporting the events that we do here. So we talked about Metastock. Our next speaker is going to talk exclusively about gaps and her gap strategy and how she trades them. We've had Melissa in here for a number of times. She's been in, actually, I think, years now. And we keep bringing her back because I just love kind of the take that she has on gaps and when she talks about gaps. So without further ado, let's go ahead and bring you on, Melissa. How you doing?
Testing. Can you hear me?
I can hear you, yeah. Your test is successful. And I just sent the screen share over to you.
Wonderful.
Right.
Can you see it?
Yeah, I can see it. Okay. So we're going to go ahead and get you started. Do you need anything from me before I let you go?
No, just let me know what time do I have till, so I'll watch the clock.
Try and get it as close to the top of the hour as you can.
Okay, thank you so much, Jeff. Thanks everyone for being here. I can see the questions as we're going on in the room. If you have any questions, you could just ask me as you go along. And today, like Jeff said, I'm going to talk to you about gaps, but specifically, I'm going to talk to you about trading on the side of institutional money. My name is Melissa Armo, and I own my own company, The Stock Swoosh, which I started a very long time ago. Now it's really hard to believe. I did mortgages for 17 years. And I wanted to change careers, and all of a sudden I started trading. And when I started trading, I did not know what I was doing. I had absolutely no clue. And then lo and behold, 3 years later, I developed my own system, which I now teach today. I also appear on TV. If you'd like more information, you can follow me on YouTube. All of my television hits I try to put on there as well. Tomorrow morning, actually, you could watch me. Charles Schwab has a channel. It's an online channel. A lot of people from Fox actually went over there. I will be on at 8:15 tomorrow morning if you want to watch me on Schwab. So if you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. I do talk to people on the phone. I am a live person. I live in New York City. And again, I am here doing my thing every single day. Today, we shorted Boeing. You can pull up the chart. Boeing gapped down today, and I also called puts, and it is falling as we speak. So I have on here the stats. This is not through today. This is through, though, the 4th. Our stats for the year so far, again, through November 4th, we're up $764,887 in the live trading room. This is with an average risk of about $3,500 per trade. These are all trades on margin. If you decide to come and learn my method, you will have an opportunity to trade live with me in the room. I call the trades in the room, and again, you can go to YouTube, excuse me, and you can watch some of my trading room videos. I didn't put today's video up yet. But again, I trade live. I call the entry, the stop, the exit. You decide how much you want to risk. I also do options. We're going to talk about a few options trades. Again, we call the BA put today. That's going. But options I look at for longer holds, okay? So these are the stats, again, not through the last week. I haven't kept up with this, but I risk more in my options trades. You can risk the same, you can risk less. One of the reasons people like to do options is because you don't need a margin account. So up over 2.6 million for the year, again, not including the last week, which was a really big week. We actually did calls. We did calls in Tesla, the market, Amazon. Again, everyone knows the outcome of the election now. So the market has had a massive move, basically broke out last week, the day after the election, started to rally before the election, and we capitalized on that. So again, not including the last few days, these are our stats year to date, options and day trades. If you want to do both with me, again, you can risk less, you can risk more, over 3 million for the year. So again, I talk to lots of people. Again, I've been teaching people since I started the business in 2012. People can be successful trading. I do my best to mentor people and help people, but at the end of the day, you will never be successful trading and never make any money at all if you don't know what to do. A lot of people say they have this strategy, this thing, look at this moving average, this Fibonacci. There's not one thing that's actually going to tell you exactly where something's going to go. And again, if you know where stock's going to go ahead of time, you can make money. It's a combination of things, which is what I teach people in my class, okay? And again, as we go along, any questions, just plop it in the chat. So 2024 is almost over. I can't even believe it. Less than 2 months, and it's going to be 2025. I think 2025 is really going to be a huge year too to trade. Again, are you ready? Are you ready for next year? While there's plenty of time left to make money between now and the end of the year, everyone should be prepping for 2025, okay? So when you look at it, you're like, okay, what am I going to do next year? How much am I going to make, okay? Someone is asking about a percentage of return. I told you the risk per trade, so you can go back and look at the stats. But as far as what I'm doing with my day trades, I'm looking for 1-to-1. If I risk 3,000, I'm trying to make 1,000. And same thing with options. Although we had some options trades that went completely insane in the last week. So there's times where we do options trades that could be 400, 500%, but that is not every week. But usually I'm looking for 1-to-1, okay? Anyways, what I was saying was you have to know what to do. In order to become successful in the market, you have to become a specialist in one specific strategy, a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. So every trader in every level must learn this skill set, and it can be acquired through education. So it is about becoming an expert. You're here today, you're listening to me, you're listening to lots of people. I find that, again, when people start trading, it's so easy. They want to make money, they want to do everything, they think they know what to do, and then they start losing. Then it becomes harder as time goes on for people to take classes and invest in themselves and their own education because they're losing money in the market and they're trading and they don't know what to do. But that is exactly the time that you have to invest in your education and yourself. Sometimes the hardest part really in trading to get to the point of success is the end. It's like the New York City Marathon actually was just this past weekend or 2 weekends ago. It's always the first Sunday in November. It was the 3rd, November 3rd. I watch the marathon. It's really something to see if you've never seen it. This marathon this year had more people participate than any other marathon in the history of the marathon. It was over 55,000 people, and it's 26.2 miles. The last mile is the hardest for people. If you finish, you get a medal. If you don't finish, you don't get a medal. If you stop 1 mile, 200 yards from the finish line, you will not get a medal. If you finish, even if you're walking it over the finish line, you could take 10 hours to get over, and some people did. I saw some people crossing the finish line at 9 o'clock at night on that Sunday. You finish, you get a medal. It's the same way with trading. You're never gonna become successful if you don't give it your all. You may have lost money trading for the last 5 years or 10 years or 25 years or older than I'm alive. If you don't ever make it, nothing that you did before will matter. No losses, no investment that you put in any classes. If you don't get to the point where you finish, nothing matters. And I found that a lot of people, and I talk to people, because like I said, I've had the business now for 13 years. A lot of people get halfway or even a little bit more than halfway, and they just can't get themselves to the next point because they've been losing money trading. They paid for classes and not gotten the benefit out of it to learn how to trade. And they just can't, even if they have the money, get themselves to invest in learning something new. And yet they trade every day and they keep losing, and they're going to keep losing forever, because they're not there yet. They're not over the finish line. You know what I'm saying? So how can you earn a living trading? Number one, you need a winning strategy, okay? Number two, you need a supportive mentor. That's me. You follow me, you do. You listen in the room. Again, we shorted BA. Number three, become an expert in one thing. So implement the strategy, get good, and then you add size to win. Again, whether you're risking, $100 or taking one contract shouldn't matter. You should be up. You should be up. You should be positive. You should be green, green, green. So again, how do you make money in the market? You think about it. Determine who is in control. Okay, the bulls or the bears. Who is in control of the market right now? Guess what? The bulls. I don't care that the market open lower today. I don't care if the market's red right now. There's one control going on right now in this market, and it's the bulls, okay? So again, no one should be short this market. Even if you were short, you shorted this morning, you're up now, it's a bad trade, okay? So the fact is that if you're on the right side of control, you're gonna profit. If you're on the wrong side, then you're going to lose. And again, obviously you wanna make money in as many trades as you can. Nothing's 100%. You can go back and look at my stats. That's why I included them here. I had some trades that lose. We're going to go over 2 weeks worth of trades for the last 2 weeks, but you have to have more winners and losers and a lot more, okay? So you have to get the direction right to win. If you get the direction wrong, you lose. I know this sounds so simplistic, but it is 100% true. So this is only back here from last week. This is Amazon. I don't have an updated chart in here. But this took off. This took off even here from this day and here from the 6th. Amazon rallied, pushed up, ran up over 210, went bonkers, okay? The only way to have made money in this was to be long, and we did calls in this. We did calls in this. You could have gone long this, you could have done calls. Here's another one, the QQQs. Again, we were talking about it. This is from last week. Look, this is all the way up here. You can't even see where this is now. It's all the way up here. Crazy. The market made brand new all-time highs, 1 over 500. So this was the day after the day before the election, and then this is now. Like again, if I had a current chart in here, we're all the way up there. So you would have wanted to be long, okay? And again, there's another great one. Now this was a short. IBM. Again, I'm going back a couple of weeks here. We did this trade. We did puts and we shorted it. We did day trades. You would have wanted to be short. That's the only way you would have made money in this, okay? So again, it's about momentum, momentum, momentum. This was AMD, stock closed here, gap down, fell, boom. Again, this was the end of October, the beginning of November. You would have wanted to be short AMD. It was the only way to make money. So again, number one, you need a winning strategy. Otherwise, you won't be successful. Buying support short of resistance, getting on a moving average, that's not a strategy. Buying pullbacks is not a strategy. Contrary to what people think, it is not. If it was that easy to trade, no one ever lose. I mean, seriously, think about it. So you need a strategy. Mine is golden gap. So let's just talk about what is a gap. A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Okay, so what is a gap? Let's take a look at it here. This is the SPY. Again, beautiful chart. There are gap downs and there are gap ups. So here it's a SPY. SPY closed here, gap down, open, fell. Again, I'm going all the way back to Halloween. You could have shorted the market here. What happened then here? Market closed here, gapped up. This was the 5th, this was the 6th, this was the morning of the election. We went long, we did calls, boom, ran up, touched 600 yesterday in the SPY. Again, I don't have the current chart in here. So there are bullish gaps and there are bearish gaps. But a gap is the difference between the close and the open. Here's the AMD again, stock closed here, gap down, closed up here, snug as a bug at 4 o'clock one night, gap down here in the morning, open at 9:30, fell off a planet. Again, whether you do puts or whether you shorted this was under 155, and look at the move. Again, came all the way down to 140. This is a big move. Again, what do? I make money trading momentum. So how am I getting these kind of totals, these kind of returns? Momentum, momentum, momentum. We're not scalping. I'm not doing low float stocks. I'm not doing cheap stocks. I'm not doing stocks that don't have any volume. Traders, institutional money, big traders, hedge funds that trade the market, and again, they're in control of the overall market. They're in control of stocks, okay? They move stocks, okay? And you can short stocks and you can go long stocks, all right? So again, my winning strategy is golden gaps. This is what I do, how I trade. It's the system I invented. I teach a class once a month. There's only 2 more classes left before the end of the year, 1 in November and 1 in December. But this is the whole meat and potatoes of what I do. I haven't done anything else since I figured out my system. I've been trading now for almost 17 years. That is really crazy when I think about it. I'm now trading as long as I did mortgages my previous career. I guess that's something to celebrate. So a golden gap is a gap that rates 20 points or more per. The golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option. You need to focus though. And my focus is gaps, and I specifically focus on shorting, which may sound crazy. Again, we did VA today. I mean, I'll go long. We did calls. We went long in the last couple of days. I will go long, but I prefer to short. The biggest short that we had though in the last month was IBM. Literally, we got this whole move. We got the whole thing all the way down. You could even have shorted IBM today. Again, what is a gap? The stock closes here, gaps down, opens, drops, boom, do. Again, you could have done multiple strikes in this. And if you have a retirement account, you can buy puts. You can't short, but you could do options. There was another one we did. What is a gap? Microsoft closed here, gap down, closed up here, snug as a bug. One day at 4 o'clock, gap down here in the morning, open, fell. That was the 31st. That was earnings. Feels like a long time ago when you think about it, really. But that was just like 2 weeks ago. So how do I figure it out? I rate gaps using a 26-point checklist. I get up in the morning, go through the rating system every single solitary day. If I don't find anything that rates per my method, then I don't trade. I'm always looking to determine who is in control. And how do I do that? The points. The points tell me who is in control. The rating system helps me determine who is in control. One of the craziest things about what's happening right now, today, yesterday, even in the market, is that people think the market's extended. And day traders are going to come in to trade the market shorted as a gap fill or wait for a pullback or whatever crazy things that people do. Institutional money hedge funds don't think like that. They absolutely don't. And they're in the money for the long haul too, okay? So again, this control piece of it is what I'm talking about when I'm talking about institutional money. That's the type of money you want to be on the back of, and all you have to do is just take the trade and poof, it's there. I called 255 calls in Tesla in the last 2 weeks and 280 calls in Tesla. All you have to do is look at the chart and see where Tesla is. They were bonkers trades. They were bonkers. They were like the biggest trades I've called for the last, I don't even know how long. Like absolute bonkers. Like you could have gotten out of the Tesla calls yesterday, I don't know where it's at right now, at like 75 for a sell price. And I think I paid 12 or 13 for it, for the call, which like one contract would have cost you like $1,200 or $1,300. But to sell it at like over 70 is insane. So again, that type of move is created and made and sustained and carried through. To see that type of momentum, it was buying with institutional money. okay? And everybody wants to trade because they want to get rich. Well, you know what? You're not going to get rich if you don't know what to do. You're not going to make any money. So that's the caveat. Everyone starts trading. They want to get wealthy. They want to make a lot of money. They want to work from home. They want to get rich. It's like it's black or white, unfortunately, meaning you can't like half-ass it and expect to just make a little bit of money and not get rich. You will just lose or get nowhere, and you will waste years of your life, okay? And you don't want to do that. Life's too short. It's almost 2025. I mean, look at how fast time has, the election's over. I felt like we talked about it all year, and then poof, it was here. I mean, it's really, time is just going so fast. So the rating system helps me determine who is in control, and that's very important. Now let's talk again about gaps. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. And some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change of direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. So that is how you know when the power money will flow to pay you. So again, it's about reading the footprints of institutional money, which is extremely important, because if you don't have that help of the selling and the buying to push your trade, and again, institutions short, hedge funds short, then it's going to be tough for you to make money because all you have is the retail volume and it's just not enough. So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big trading on this side of power, and people are with me. I mean, one of the trades, like I said, was just Tesla, but there's others. So again, what do I mean by institutional money, BA? Again, you could have done many different things in this. I'm just going to show you this today. Again, I don't have the current chart in here, but this sold off here on the 5th, okay? And again, here's where we are today. We broke 145 today. We're down here at 144. So again, what's happening to this? You say, well, why? Because of this news, that news. The stock got dumped. It got dumped. And again, this is another one here. Close here, gap down, fell, boom. So again, if a stock is at 220, 221, and in a week it's at $20 lower, how do you think that happens? It's not retail traders, okay? It is sellers, institutional sellers, pushing the stock down, okay? So again, becoming successful requires you becoming a specialist, an expert. An expert. Again, I go on TV. Why? Because they want to know my opinion about stocks in the market as an expert. If you were wanting to become a doctor, you go to school, you go to medical school for 12, 13, 14 years, you do residency, you're an expert. You want to be an accountant, you want to go get your CPA's license, you're an expert, okay? People go to you for advice. Trading is no different. You must become an expert to succeed. There's so much money and so many people out there that want to grab the profits. If you're not an expert, you're not going to make anything. You will lose. So for me, it's about chart analysis, technical analysis. It's just like we were talking about with the charts. It means reading the price action and reading it in live time. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. And again, you could trade the market, you could trade specific stocks. When I say the market, I mean the QQQs or the SPY ETFs. Let's look at one we did here. This seems like a long time ago, but we did NVIDIA calls. Oh gosh, 125. It is a long time ago because the stocks flew over 140, 145. But we did way back in October. We went long NVIDIA. So I'll send the trade out. Could be before the open, could be right at the open. This was 946. This was NVIDIA calls. It was $2.50 for one contract. That's cheap. That's cheap for the way this stock moves. Again, so I was asking about percentage of return. This was a 260% return on investment trade. This one here was a nice trade. You could have bought it at 250, sold it at 9. Let's take a look at the chart here. This was back on the 3rd. Here. And again, I'm usually doing the weeklies. So I get the move, boom, out. So again, this got bought. Again, here's what happened in the last week with this. This got bought. This is over this number already here too. That was last week. So again, NVIDIA's getting bought. This was, oh, I did put this in here. Here was the Tesla. You could have, I did not hold this to the last day, which was Friday. I don't even know what it was worth. I didn't even go back. I don't even know, but I got out of it when we had the move then with the election. 255 calls, it was 334%. If you held this trade till Friday, it flew over 300. I guarantee you that was 700%. Let's look at the chart. I don't know if I have this one here. Yeah, there was Friday, the 8th. Look at that. So I thought this was a good exit on the pop because we got in the trade and then it was up crazy birds the day after. But look what if you held it. I did not hold that trade until that last day. I mean, it really doesn't make sense to always do that. But look at that. That was crazy. So that was a ridiculous trade. And I didn't hold it into the last day, but it was a ridiculous trade anyways. So if you had 2 contracts of this, you could have made over 5 grand without even holding it into the last day. The momentum of the gap carried it. You understand, people? The momentum of, you don't have to do anything, but use your brain. You analyze it and you rate it. And this is what I do. I use my brain. Okay. Then I size myself correctly, and then I don't have to think. And I just let the momentum take it. And again, I had sent out an email last week. It was after the election on the 6th. I said, let everything rip. That was my 2 cents to everybody. And that's what happened. You just let it rip. But again, it's very, very interesting because I can see what's happening here with some of these charts. We talked about the market earlier, this one here too, from yesterday. Again, a lot of people didn't capture the move or didn't hold it or trying to do the opposite, and they're going to get burned. They're going to get burned. It's so easy when you're trading on the side of institutional money. And if you're not, it's so easy to lose. So again, you need conviction to make money, and you get that from understanding why. As much as people say, well, I don't really need to learn it, I'll just take your trades. No, if you learn it and understand why, you're going to be able to risk more money. You're going to be able to hold trades like Tesla. You're going to be able to earn more money, make more money, and you're going to be able to survive long after I'm even doing this or teaching the class or even running the room. People have an innate just desire, okay, to understand why. They want to understand why. Why did this happen? Why did that happen? Look at what happened with the election. You still have all these pundits on TV. Again, I'm not a political person on television. The Democrats are asking themselves, why did we lose? Why? They'll be talking about it till the end of the year. People want to know why. Okay, it helps them get through. If you understand why a trade is going to go up or a trade is going to go down, you will make more money and you will trade better, or you will hold something even if it's down until it turns up. So again, I use a 26-point checklist. This is what helps me decide. And when you think about it intellectually, you're like, oh my God, I totally get it. It makes sense that if you're in the control direction that you can make money. And it makes sense if you're against the direction that you would lose. It totally makes sense. It makes sense that you have to be on the side of hedge funds instead of retail traders. Retail traders get it wrong most of the time. That's why most retail traders lose. You don't want to follow retail traders. As much as it's nice to be friends with people, many of them are losing. Okay, and that's not where you want to be. You want to put yourself ahead of the game. You want to be ahead of the game. And again, gaps are a very, very specific way to trade. And again, this is what I focus on. This is my expertise. So gaps are the most powerful show price action in a chart. Gaps have large moves. I showed you some of these. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. And when I trade, I'm looking for and trading momentum. Then whether you have a small size or a big size, you get a good risk to reward. That should not matter what your risk is, because you have to be within your own account size limitations. Now, again, we had the rate drop last week. Was it expected? Yes. Did the market have a move? Not really. The market moved because of the election. Okay. So again, only if the Fed would have done something absolutely bizarre would they have done something to create a sell-off then after the fact. The Fed, I think the weight of the Fed will have less of an effect going into 2025 than it has for the last 2 years, which quite frankly has been far too great on the market and everything else, whether they drop rates or hold rates steady, or whether they move them up again. The Fed, the weight of the Fed, I think, has been lifted off the market going into a different administration. And again, I don't make decisions based on fundamentals to begin with. I make decisions based on the chart, and you should too. And many of these things are already baked in anyway. Same thing with earnings. We don't know the outcome of earnings that happen beforehand. We're not privy to that information. We don't know what their earnings are going to be for Tesla or this thing or anything else until they happen. But you can look at the chart. You can see the gap when it happens. okay? So a big flow of money going a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. Any questions here as I'm going along? The last question I saw was Pamela. We doing okay? So when you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is, okay? And that's my point, as what I was talking about the market. Now, okay, so that was one. Number two, you need a supportive mentor, do and follow. So I trade and run the room at the same time. And I talk very fast, but people can follow me in the room, and we're usually doing one thing at a time. Like today was short of BA. It's not that hard to follow me. The idea of being in the room is you did the class, you understand what to do, and you do it ahead of time, and you get in the room and you rated the gap, and then you're ready to go, and you like BA and I like BA, and then I make it easier for you. And then, of course, you can ask me questions after the fact. So I'm just going to show you 2 weeks of stats here. For the last 2 weeks, 31,870. Again, this is an advanced trader risk, but we had an 88% win ratio. Okay, I could have put the whole month of October in here. You know, you can go back again and look at the stats I have earlier at the start of the webinar. We did BA on the 28th. I was off on the 29th. I had an event in New York I went to. My assistant did the room. AMD won on the 30th, Microsoft won on the 31st, and Amazon we did on the 1st. We had no losers that week. Then the 4th, we didn't do any trades. We did Amazon the 5th. We had a stop in Tesla the 6th. Then we did NVIDIA. That was a big trade. That was the day after the election. That was a long. We did NVIDIA the 7th, and I was off on the 8th. So this is 2 weeks in the room with me up through Friday. And Monday we were closed for Veterans Day, and today we did BA. So again, just looking at every single gap, okay, this was 1028. Stock closed here, gap down, open, rallied, dropped. Shorted BA, and it worked. Again, you could do a put and get out of the put if you don't want to do a day trade on margin. These are all day trades on margin, but that's what I do. Oh, no, not 10.7. I'm sorry, I didn't fix that. That was 10.29. It was off. 10.29. It was off. Then 10.30, I did an AMD here. Stock closed here, gap down, open, dropped. It was a short. Again, you could have shorted as a day trade, could have done a put. Trade worked. Again, who's in control? Who's in control of AMD? The bears. The bears. Then we did Microsoft. Then we did Microsoft. Again, this was the 31st. Stock closed here, gap down, fell. Who was controlling Microsoft? The bears. We shorted it. It was a good trade. Then we did Amazon on the 1st. It was here. Stock closed here, gap down, boom. Then it gapped up and rallied. And again, as crazy as that may seem, we actually went long Amazon there. Again, we had a long in here. This tail moved up higher first, got out, dropped, and then this broke out. Then we did no trades on Monday. Then we did Amazon again on the 5th. Then we did Tesla. We did Tesla here. Oh, this was the day that we did it after the election. So I got stopped in this. I got stopped in this here, but it did go on to work. I took the stop, I took the loss, and then I stayed with the NVIDIA, which was here, broke out. So again, NVIDIA was a beautiful rally, like many things, strong stock anyways, okay? And again, I don't even know if it's at 150 now, but that's where it's going. Someone tell me the price of NVIDIA. It's going to 150 if it's not there now. And then we did NVIDIA again, boop, went up again. And then I was off on the 8th. So again, here's 2 weeks in the room. 2 weeks in the room again. We do it, we're done. The room opens at 9. We start trading between 9:30, whenever we get the setup, and we're usually done by 10. 10:15. Some days we're done by 9:45. Again, these are all trades you would have needed a margin account to do. If you don't have a margin account, you could do a put or a call. Any questions on anything I just said? How's everybody doing? Hello, is anyone there? Hello, traders. Any questions? I know there's people there. I can see them. I don't want to talk too fast. All right, I'm going to keep going. So anyways, if you chunk it out, if you chunk it, you can get to your goals, okay? So for a lot of people, they are just trading all day long, giving back money, okay, which is not productive at all, and thinking, well, because they, made money in the morning, they're just going to make more if they trade. But that's not the case. It's like trying to hit a bullseye. If you're throwing 10 darts at a board, the chances of you hitting a bullseye 10 times in a row are a lot less. So if you hit the bullseye, you're done. You know what I'm saying? It's a heck of a lot better to just do it, make your goal for the day, and shut it down. And one of the reasons I do shut the room down is because when I did figure out my system and then I was trading and I was successful making money, I would give it back in the afternoon. I nipped that in the bud and I stopped it. And the way to get the bigger moves and to make more is to, guess what? To do options. You do options, and that is something then you can do to capture those overnight moves. Someone's asking another question here. What was the average amount you put into each trade? For the day trades, I'm risking around 3,000 to 3,500 per trade. I do use stops or limit order stops. If I get stopped out, I lose. For the options, I'm risking around $8,000 per trade. You will set your risk based on the size of your account. Options are cash risk. Day trades are in margin. So you have to have a margin account to do that. You got to have 4-to-1 margin at some place like Schwab, for example, or other places you can go. Or if you go prop, you can open up a prop account with less than 25,000, and then you need 10-to-1, and you'll get 10-to-1 margin. You could open up a prop account with $5,000 and get 10-to-1 margin, which would be 50,000. Again, there are different ways to trade. Or you open up a cash account with options. It's 2,000 minimum. You can open that up anywhere. And again, your amount that you risk is all you can lose. So I don't use a stop. So if I'm risking $1,000, that's all you can lose. That's it. You hold it overnight. If it goes bust on a Friday, it goes bust. Someone's asking another question. Do you shut it down even if you take a large loss? You can go back and look at the stops. I really don't have any large losses this year. We've been doing extremely good in the room this year. This is probably the best room I've ever, 2024 is probably the best year I've ever had in the trading room. Win ratio, money, wins, the whole thing. I mean, there are people that are following me since I started the business in 2012. I should send that out in a marketing email. 2024 is the best year that I have ever had day trading. So I don't think I've had any big losses in the room this year, but I have had some losses and some bigger than I wanted to if I moved the stop, for example. But if you're asking me, like if I had shorted BA today and if I had taken the stop in BA, would I have taken another trade? Yes. So if I take a stop in something, I will do a second trade, but there is no large loss. If I move the stop, I might give it 10, 15, 25 more cents, but that's not what I consider a large loss. I use stops so that I don't have large losses. If you take a trade and you lose 2 to 3 times the amount you normally risk, that means you have to take 3 more trades just to break even and you're still not up. That's the point of using stops and putting in the stop. And I get that people don't want to use stops, but you basically have no way to even, how could you even do stats like mine? You couldn't even stat yourself. You'd be like, oh my God, I have no idea if I'm doing good or bad, because you'd be blowing out in every trade that didn't lose. And then every trade that worked, you're probably chipping away just to get out with something because you're so happy that you're up anything. You have to use a set risk for every single trade that you take and stay within that risk. So there should be no large losses. If I lose in an option, I bust out of it. I'm not losing 20 grand in one trade. I risk what I risk, that's it. The people try to double down and do all kinds of crazy things. That's a disaster. If I give something more room, there's a reason for it. It's based on the chart, and then that's it. You got to cut it. Will I take a second trade after I get stopped? Yes, but I'm not going to take a stop, and keep trading all day till I blow up my account. No, and you can tell that from the stats. I don't do that, but I will take a second trade. It might be in the same thing. I could have retaken Tesla. I should have gotten back into this stupid thing. It was just bothering me. I was in the option and I let it rock, but I could have gotten back in this, but I didn't take a large loss. No, I took a loss. And again, this is not an exact science. If you're risking 3,000, you lose 3,500 or 3,800, that's not the end of the world. If you're risking 3,000 and you're losing 7, that's you have no risk then. You have no risk parameters. You're crazy. You're all over the place. And people are like that. Don't do it. Don't do it. Because again, that's how people burn themselves up. That's how people burn. You're burning through your account. Do you know what I'm saying, people? Let me see.
Melissa, we do have a couple questions in YouTube I can share over with you.
Go ahead.
Now, Lorraine wants to know, for options, do you only play those for the weekend?
I don't know what you mean by the weekend. I do the Friday expiration. So if I do a trade on Monday, it expires a Friday or the following Friday. If you're asking if I hold trades over the weekend, not all the time. No. Do I kill it before the weekend? No. If I could be in a trade that's down that I did on a Thursday, and I'll hold it through the weekend down, if that's what you mean.
I think there was enough answers that it'll cover. Lorraine, if you still have questions, let us know. Because I didn't understand it either. I thought you might. Enzo in chat wants to know, are you playing the gap after it occurs or anticipating the gap will occur based on your checklist?
Well, I will tell you that I'm playing the gap when I see the gap. However, because I can't predict the gap. However, some of the trades that we did in the last 2 weeks, we were in them and then they continued. So they ended up being monster trades because they did another gap. Do you follow what I'm saying? So that can happen, and that's amazing when that happened. And we actually got that. We actually had that in IBM. We had that in IBM here, which was the reason this was so nice going back. Where was this one here? Crap, where was it, IBM? So no, I don't know the gap's going to happen, but I'm playing it. Where the heck was that IBM? This continued. We were in it here. Did I know this was going to do this? No. Did I do the trade here? No. We did the trade here, and then it kept going. So that happens. Does that make sense?
Yeah. Lorraine asks, are you, so I think she clarifies that, do you hold over the weekend? Do you hold from Friday to Monday? You don't necessarily trade just because it's Friday, but.
I will hold over the weekend if I'm completely down in the trade. Like, I'm not going to kill the trade. It doesn't expire for another week. There's no reason to kill it. And if you're saying, am I worried about the weekend? Like something could flip or happen in a weekend crazy that nobody knows about overseas or something. That doesn't happen all the time. That doesn't happen all the time. You shouldn't be scared to hold a trade over the weekend. But like, for example, if you're so far in the money, okay, on a Friday, and you're like, I want to book it. This is great. I don't want this to reverse against me Monday. Well, that's fine. Just get out of it, book it. Again, this is where I'm active. You see, look at all the trades this whole year. Like, chunk it out. Do 2 contracts. Get out of one on Friday. If you think it's still going to get going, hold one over the weekend. Again, so I mean, again, you should be booking money on a consistent basis. Is the point.
Ricky says you are, even though you speak fast, you articulate well, and I've been able to follow everything.
Oh, perfect, Ricky. Thank you. Thank you very much.
All right, let's see. That's all the YouTube questions. How long do you hold your trades? Lana wants to know. Is it a day trade or is it a swing trade? How many days out for expiration?
The day trades, I am in and out in several minutes. I mean, I could be in and out of a trade in like 5-10 minutes. We were in and out of BA this morning very quickly. Before 10 a.m. we were out. If you're talking about the options, it depends if the trade goes or not. So for example, again, if I take a trade today, I'm not going to get out of it today if it didn't go yet. Again, I want the momentum move. Ideally, the trade should go in 24 to 48 hours, but that's not always the case. So yes, I will hold trades overnight, and you shouldn't be afraid to do that. The biggest, let me just say this really quickly before I finish up. The biggest benefit of doing options is holding overnight. I talked about this in the room in the morning, and people say it's because you don't need a margin account and you don't need 25,000, and you can trade stocks in the market, which is, crazy expensive now to do a margin. That's not the benefit. That's a side benefit. Once you start making money and you have 50 grand in your account, you're not going to give a crap about that. And you should be doing the margin trades with me anyways, because they go faster. The fact is that the benefit of doing options has and always will be to capture overnight moves in stocks with a fixed risk. If you were short Tesla when we were long it and you were in puts, and you know what, some people were, they thought Trump was going to lose and Musk was going to go bust and everything else. If you were just short, okay, short in a swing trade or just short the stock, you have an unlimited risk with where it went. Look where the heck it went, okay? If you have a put in something and it goes up against you and you risk $1,000, that is all you're going to lose. You have a fixed risk and can benefit from capturing larger moves by holding overnight. And that is the true benefit of doing options. And I have to start lecturing about that more. People are scared to hold and they don't want to do it. And they think it's because you can do it in a cash account with less than 25,000, but that's just your financial situation at the time that you don't have the money to set it up that way. The fact is, I think everyone should be doing margin trades because they happen quickly and we can get the move. And if I short BA and I get $1 out of it, and I make 2-3 grand, I wouldn't have that same thing in an option in 5 minutes. So there's definitely benefits to doing margin trades, but everybody wants to do options lately, it seems, because they can open up an account with 5 grand or 3 grand or $10,000 and they don't have the margin account and they don't want to go prop. But the benefit is holding overnight. That is how we made all the money that we made in Tesla. And if you don't want to hold it overnight, you are going to miss these types of moves. These types of moves, the people that got these moves, that did the trades, that held them, that even just took the trade at all and just got up the next morning after the election, those people have made their whole year, basically. And if you didn't do the trade and you didn't want to hold it, or you were scared to hold it after 4 o'clock, you didn't get it. You missed it. And I can guarantee you some people did miss it and they kicked themselves in the butt. The class is $69.99. We didn't get to that, whoever asked that, but we will get to that shortly. It's $7 grand for the class. Anyways,
All right.
It's about, go ahead.
2 more questions, and then I think they're pretty quick. Enzo wants to know, is it correct to assume your option contracts are typically short-term?
Yes, a week is short-term.
And then Lionel wanted to know, do you ever trade stocks or is it always just options?
Yes, that's what when I'm talking about margin trades. Those are when I say a margin trade, that's I'm shorting the stock if it's BA and we're shorting it at 147 and we take 1,000 shares of BA short. You've got to have 147,000 in buying power to take that BA. Divided by 10, you need 14.7 in a prop account, or divided by 4 in like a Schwab account. You have to have a margin account. That's what I was talking about margin trades. So yes, I'm doing BA today was a short we did on margin. I called a put in it, but I called it later. All
right. We're caught up in the YouTube questions, so I'll let you take it from here.
Anyways, it's about working smarter, not harder. And again, it doesn't matter if you do day trades or options. It's the idea of trying to get in, look at the direction, take it, and do less trades. Less trades means you'll have less losses and hopefully then more wins, okay? And then bigger profits at the end. So why is shorting the way to go? Why do I prefer to short? Just because of the speed. The speed that stocks fall faster than they rally. And while we capitalize on the move in the market and some of the stocks in the last week by going long and doing calls, the fact is that I will short. Again, we've had some huge shorts like IBM and AMD, but it's the panic that comes into stocks and it happens really fast. And again, number 3, and we've been talking about this the whole time, become an expert in one thing. It's about focusing on one thing. For me, it's gaps. It will help you to be consistent with your trading, and ultimately you want to be successful. So I focus on the gap. I get up in the morning and I rate the gap. I've been doing this now for so long. And again, when I started it, I didn't have all the points, but that is what you'll learn from me in the class. That's how you know what stock to trade every day and where the power money is going. I'm not predicting the outcome of the election or, you know what's going to happen to Tesla after the election because I don't know the outcome of the election. I'm reading the power of money that's happening, okay? Same thing with Bitcoin. Bitcoin's going to 100,000. I don't know if it got there today. I don't trade Bitcoin. I have no interest in trading Bitcoin. I think that is very risky, but that's where it's going. I can't tell you the exact date and time it's going there. But again, I'm good at reading price. And so that's how I can read something like that and say, this is where this is going to go. Tesla's going to 400. There, I told you, I just gave you a trade right now, but I don't know when. It's like, so, I mean, once you get good at reading the power, you can take longer term trades. You could do options for longer out, which are called leaps. Okay, you're going to pay more for those trades. You can do swing trades, but again, you don't have the fixed cost of the option. And again, I knew this buy was going to go to 600. That did that yesterday. Once you get good at reading price, you can go long, you can go short, you can do swing trades, you can read the gap and do long-term trades, you can do short-term trades, you can do options, you can do it all, okay? But if you don't understand what's happening, you will short Tesla and you will do it for a gap fill and you'll lose, and then you will not understand why it didn't work. Because again, that was a bad trade if you did it. Even if you made, 30 cents, it was a bad trade. You have to be on the side of power, okay? And it's just so easy to read and identify. So I find gaps and break them using the checklist. Gaps have to be qualified, and the checklist tells you what to look for in the price of the stock. And again, we've been talking about this the whole time. I mean, people complain about institutions and, machines in the market and algorithms. Actually, they move the market. They move stocks. We'd never be able to make the money that we have the potential to make without them, okay? That's what creates the gaps that we're trading on, we're doing, okay? And again, this was one of the ones that we did that was a short. It was a nice short, and it was kind of like a bleeder. Again, I do prefer to short, but I'll go long. We've been doing it. I have to do the best thing. I want to do the biggest thing. We want to get the big trades. I'm looking for anything that can get me money in the position, and it's like finding a gold when we find it. And again, moves like Tesla, we don't get that every day, but I absolutely know when I see it, when we're going to get it, and we absolutely hit it, and we hit it aggressively, and we capitalize it when we get it. I'm just going to continue here just to get down to the information about the class really quickly, and anybody can ask me any last minute questions. So if you want to come and learn, the class is actually this weekend, the 16th and 17th for November. You will learn a high probability directional bias for the entire day, big move in the day, early confirmation of the move, precise entries with follow through. We didn't talk about that today, but day one is the points. Day two is the entries, and then we talk about the exits. But I do call them in the room. And again, earnings season is now. So we had the earnings season, then we had the election. Is it all, downhill from here? Nothing to do between now and the holidays? No, we're going to have a lot of moves. We're going to have a lot of shorts. We're going to have a lot of longs. Things are going to happen in the market. You saw that even in the last 2 days. But the fact is that we're still in earnings season, and we still are having earnings. Now, this is actually me. I did a class in New York. I did a live class in September. It was the first live class I ever did. I do not have any future live classes planned. This is more expensive than my online class, but I met people. It was a great experience for people. I did it in New York. They came. It was 3 days, and I support people. I mean, people can call me. They can ask me questions. They can email me. And again, I think it's really, really just important for people to realize that they can do it. Okay, you can do it. If you're not making money, you're not in a good program, or you don't have help, or you have a strategy that doesn't work. Again, this is real. You can do it. It's just a lot of people, like I said, once they're trading for a long time and losing money, they feel so down and out about moving forward to the next thing. If they've taken umpteen classes and didn't make any money or lost, it's just so hard for them to plunk the money down and keep going. But you have to, because then you're never going to make it. And then everything you did before was meaningless. The most important thing is that you make it. The most important thing is that your dream of becoming a successful trader actually comes to pass, and you realize that dream, and you're doing it, and it doesn't have to take that long. But there's an investment, there's time. Obviously, the class is all day Saturday and all day Sunday. It's 9 a.m. to 5 p.m. Eastern time. It'll be your weekend. So again, what are you going to learn in the class? You're going to learn the checklist, and it's about empowering yourself to do it. So the Golden Gap course is a complete system to use to trade. All the pieces of the puzzle if you want to do it. Again, the class is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. You can be anywhere in the world and take it. It's 16th and 17th this weekend, and then one more class this year in December. The class tuition is $69.99. Email me for the forms if you're interested in signing up. And I'm doing an autumn special. I took this picture. That doesn't even look real. Looks like a postcard, like a professional picture. I took that picture. It was a couple weeks ago. We're doing an autumn special that was Central Park. If you sign up by Friday, you get the trading room free for 1 year and the newsletter free for 1 year. So it's a nice deal. You get all my trades free for 1 year. You can start trading with us tomorrow. And again, tuition price is $69.99. Everyone pays the same. I'm doing a bundle. You will get the room free for a year and the newsletter if you want to do it. The bundle is 3 classes for $89.99. You get the options course, the trends course, and the Golden Gap. This is all of the next 2 weeks of classes if you want to sign up for this. And again, you can get the autumn special for this too. Any questions? I have Made it on time for the next presenter. Any last minute questions?
I don't have any more in the YouTube.
Okay. Listen, email me at melissa@thestockswoosh.com if you have any questions. So nice seeing you again, Jeff. I don't know if I'll see you before the holidays, but I probably won't before Thanksgiving.
Yeah, well, it's great to have you in here. Thanks for coming.
Happy Thanksgiving to you and your family.
Thank you. You too. All right, let's go ahead and do this. I'm gonna go ahead. We'll make a little bit of some changes here. Okay. Okay, that should be working. All right, great. Thanks again, Melissa. You can get a hold of Melissa to do that at melissa@thestockswoosh.com, which I put in the chat, which will be in the right-hand side for you. All right. Real quick, a special thank you to our one of our sponsors of the event this week, Trade Thirsty. You can find out more about Trade Thirsty and get an ETF report at tradethirsty.com/free. Trade Thirsty was started by traders for traders in 2013. They have a deck of market experts who provide market sentiment, commentary, ideas, all that kind of stuff. Grab your free copy of the income generator report at tradethirsty.com/free. Greg, thanks for typing that in for me. It saves me a little bit of time. I assume that means you're available for prize time.
As soon as I'm done chewing on my
Right.
shoving it in my face. Excuse me. Yes, I'm available. But how can I help you?
Well, we're going to give away a prize.
All right.
Let's see. We're going to give away the Asbury Research Chart Pack, and that's a month free of kind of their analysis. Jack and John come in. They talk a little bit about the stocks that they like to look at. They run a company called Asbury Research. We're going to give away a 1 month free of their research. So let me see. What I need from you, Mr. Lewis, is I just need you to give me a name or a number, anywhere between 1 and 9,000. Bill, okay. Anywhere between 1 and 9,145. I almost did search for Bill.
Okay. 1295.
I thought that was Bill for a second. It's a Tyrrell, though, so it is kind of close. El Tyrrell in the USA. I'm going to go ahead and kind of just copy that over, and we'll make sure that they reach out to you for that prize.
Fun fact, Jeff, I think I mentioned this offline, but did you know that half of today's speakers are women? And I can remember when we first started doing this that a woman speaker is something of a rarity, and now we have many women speakers.
Yeah, and they're very good, all of them.
And they're very
all
good.
All of our speakers are very good.
Yes,
Let's see, Asbury. Okay. Very good. Thank you very much, Mr. Lewis.
You are welcome.
Kelly's off to London. He came and waved me off.
Good, because he won't see me wearing a baseball cap, which he doesn't like me doing. Don't tell.
All right, real quick before we go to the next speaker, I want to talk a little bit about getting our extended trial for Metastock. Metastock's been rated #1 in its price category 31 years in a row. We talked about how it can help you test ideas, scan markets, get our patented forecast of probable price action in the future, real-time alerts, commentary, signals. All of that starts at just $75 a month. It's been rated #1, like I said, just 2 seconds ago, 31 years in a row. I wouldn't trade without it. You should give it a go. We'll set you down with somebody that can help you learn about the software, figure it out, show you all of kind of how to use everything. $75 a month for $75 for the next 3 months to kind of help you get started. Includes everything you need: market data, training, everything. Metastock.com/comp promo, metastock.com/sales chat, or call us 800-882-3040. And without further ado, our next guest is Wendy Kirkland. Wendy Kirkland is one of my favorite speakers. She comes in and she talks about kind of the methods that she uses to evaluate stocks to kind of identify which ones are using true range, have the best likelihood for opportunities, how to identify where the trend is, when the trend is changing, and when to actually get into and out of a particular stock. She also does a lot of options. She has a fantastic backstory about how she got into trading. I don't think I'll get into it just because I don't want to remember the details wrong again. But let's go ahead and get you started. Wendy, how are you doing?
I'm doing really well. I'm so happy to be here.
It's good to have you. We can hear you. Let me go ahead and make you the presenter here.
All right.
Okay. And I'll let you know as soon as I can see your screen.
Okay, and I need to get it up here. Click on the right button. There we go. Whoop, that didn't do it.
You're there. You're getting there.
Yeah, there we go. All right. Click, click,
Perfect.
click. I'm here.
We can see everything. I can hear you. I'm going to get out of the way. Your turn.
All right. Well, thank you. I'll take just a minute and follow through with what you were sharing, that I am an artist, and that is what I had done for years. I had a gift shop, and there was a flood, wiped out the shop. It was going to take months and months to dry out and get back again. And I decided to take a super, super short course. It was like meeting for just a couple days to learn what options even were. I didn't know anything about the stock market. And it resonated with me, and I started really studying, and it didn't take too long before I really saw the potential for earning money. I would win some, I would lose some, and then that is when I really jumped in and started kind of working my own way through things and discovering indicators and how they spoke to me and so on. And after a couple years of trading and doing really well, that is when I wrote my first books. And so now I have been trading for over 20 years. I have 8 advisories. I have books that are available, like on Amazon. One of them is Exploring Your Options, and then there's another book that's called Knowing is Seeing, which is just how to create a really good, joyful, happy life. Some of the long strategies focus on one particular equity, like the Qs or SPY, DIA, IWM, and a couple of the services that are very popular are Alpha and a new P3 service. I have a website that is wendykirkland.net. And so what we're going to talk about today, and I'm really going to show you how you can use the site to enter trades, and Metastock site, I should say, to enter trades and to benefit and profit from them. And so this covers much of the elements that we're going to pinpoint equities with consistent big moves, zero in on equities that are either overbought or oversold, and find equities that have formed a top or a bottom, have then reversed and have started a new trend, and then enter the trades when they give a confirmed entry signal. So there's some people, and I am not sure within this group, but there's like 3,000 people that have signed up that maybe don't even understand what options are. And in a sense, they are like renting a stock for a period of time, or they're actually, each option covers 100 shares of a stock or equity. So it is like you are renting them for a particular span of time, that they give you, the buyer, the right to require the grantor to sell the equity to you at an agreed upon price at an agreed upon time. And no matter how high the price is when you decide to sell the option, they must sell it to you at that agreed upon price. And you in turn can then sell it at the higher price and keep the difference. The buy and sell happens behind the scenes at the broker once you close the trade. A put option is a little bit different because you are making money when price drops, which is different than a stock. That if you had a stock that was worth $100 and it dropped to $75, you would be out $25 per share of stock you had. Well, a put option gives you money when a stock drops. So it gives you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price at the agreed upon time, no matter how low the price is when you decide to sell your option. They must buy it from you at the agreed upon price, and you in turn can buy it at that lower price and keep the difference. The sell and buy happens again behind the scenes for when you close the trade. It's an easy way to think about option trading is, like I mentioned, that you're renting equities for a specific period of time, and your profits are affected by the price movement over that period. So here's an example of option pricing. If you purchased options, say on Bristol Myers Squibb, BMY, the pharmacy company, and its stock is priced at $53, you're interested in contracts for the 53 strike put that you're thinking it's going to drop. You are basing this, say, on a 30-minute chart pattern, and you pay $1.65 per share for a 100-share put contract that expires in 3 weeks for $165 per contract. You buy 4 contracts, so that's for $660. The stock price drops to $52, and it's, let's say it did it the next day, and your premium is now $2.33 per share. You could decide to sell and just figure it's a quick trade on a quick drop, and the transaction happens behind the scenes at the brokerage. You paid $1.65 and you sell for $2.30. So that is 68 cents per share difference. You have 400 shares because you bought 4 contracts of 100 shares each. So you realize a 272 gain on your $660 total investment for those 4 contracts. That's 41% profit in a trade that you held maybe just one day overnight. That is just amazing, and that is how options work, that you are benefiting from zeroing in on a move that you are seeing maybe going to happen on a chart, and then you can take the profit on the move on, like renting the stocks, way more stocks than likely you would be able to buy. So within Metastock, what we're going to be doing and what I'm going to be showing you is to find equities with routine big moves. And to do that, we are going to look at an indicator that is called the average true range, or the ATR. And so the goal, or the point that we're going to focus on, is that you want an ATR that is 1.5 to 2% move per day. You want to find equities that consistently have big moves. And so the price of this stock at 2% is $2.16. So when you look at the ATR and you're going to look at the daily chart, you can look across here and see that its ATR is $4. So that is well above the 2% move. And so you start making a list of equities that have big moves, and then you are able to flow through it and make the decision as to which ones you want to have on your list. You might look at it and say, well, gosh, this one doesn't have enough volume, or this one is too high a price, or I don't like tech stocks. So you get to pick, but you zero in on stocks that are going to have big moves. All right, and so you're going to create a watch list. I was going to say I probably can get rid of that. There you go. Create a watch list of equities with the big moves. So this one now is Netflix. 2% of 755 is $15.10, and the ATR, average true range, is $18.38. So it qualifies. And that would be then another one to go on your list. Not sure why it's not scooting down. There we go. So we're now going to start adding the proprietary indicators. And so the first one we're going to do is the Kirkland Commodity Channel Index, or the CCI. And this is a very easy indicator to read. We have a line here drawn straight across that is at 100, and then we have minus 100. And so when you look at this chart, you can see when it moves above the top 100 line, it is overbought, or that's what you can say. And when it's in the middle here, it's kind of flowing in a neutral area. And then when it drops down below minus 100, then it is oversold. And so you can actually think of this then as going into bearish territory. When it is rising here, it is bullish. And this paints a very clear picture of the overall direction that the price of the equity is taking. And again, we are focusing on equities that have the high ATR, so that they qualify being between 1.5% and 2%. Okay, so now we're going to add one more, which is the Kirkland Percentage Price Oscillator, the PPO. And that is this second indicator down here. And so we still have the CCI up here, where you can see it rising above, is overbought. Then it comes down here, it rises again into bullish territory, overbought. Then it starts heading down. And so the PPO, you can see, crosses up here, right there, is suggesting it is now bullish, and then kind of goes flat, and a little bit of white space between there, but still it hasn't officially crossed down, say like this. It has touched it and then rose again and touched it. And so this is suggesting that this did pull back and weaken a little bit, but it is still definitely bullish. And so the Kirkland oscillator here is this third one. And I think the next slide probably goes into it even a little more, but this is the one that I have kind of modified and that we use for our actual entry and exit. And so when this presses up through the bottom line here, that is our signal to buy a call. And I'm going to just use this as an example right here. When it drops down through the top of the line, that is when you would consider buying a put. So this would be the area where you would consider buying a put. And then right here, when it really starts moving up, that is where you would consider buying a call. And so we're going to look at a bunch of charts, but this is the entry and exit indicator, the Kirkland oscillator, for getting in and out of the trades. The CCI and the PPO share additional information and kind of confirm what has set this up. Let me scroll on here. So this is where I was saying that the Kirkland oscillator confirms entry. So we are looking at US steel. And if we were thinking about a call trade, we could enter right there when it crosses up that lower line, hold, and then when it starts sloping down, that is where we would consider selling and taking our profit. When it drops down below the upper line, that is where we would consider buying a put. And then kind of when it flattens out here or looks like it has stopped dropping, that is where we would end up selling. And again, here it didn't stay down very long, is crossing back up again. And when it crosses up over that lower line, that is where we would consider entering a call trade. And again, the CCI, you can see that right in here, it just is kind of back and forth between being almost neutral, I guess you might say. That here it's rising, but it didn't cross above the 100 line, then it dropped down, that's the put time, then it crossed above. If you just use that, that might be confusing. It's not really sharing a whole lot of fixed information as far as direction. Even the PPO here did not actually have a PPO cross down where you could have purchased a put here and made profit on this drop right here, and then gotten back in and made a profit on the rise up in, say, a call trade. Okay, so this is another which chart. This is Zillow, and it is showing the Kirkland oscillator here. There's a little more white space on this chart between the lower Kirkland oscillator line and the upper line. And so we call those touch zones. And so when it comes down and touches and then crosses down below the Kirkland oscillator, that is when you would buy a put. And when it crosses up through the lower line, that is when you would buy a call. And so I've just circled this little area right here. You can see that it crossed up and there's lots of white space between it. And that would have gotten you in right here so that you actually benefited from this, or you would have gotten in right here and benefited from this move that continued then on up. So they're pretty easy indicators to look at and have them share their story about what is happening. And in a sense, that is the way that I teach people, is I don't want it so complicated that you know you just go crazy. I want it to talk to you and to be very clear, and where you know when to get in and when to get out. And if for some reason it doesn't move or continue to move in the way that you expect, then I can't even see one on here exactly, but maybe this one right here. If you had gotten in, it did move up and then kind of went flat. Right here, you might have made just a little bit, but it didn't make a big move like this, or even this one. Then when it actually crosses down, that's where you get out. And so if you have a loss, it is a very small one. It's not a big deal. And on the other hand, when you like get in here and this is a put trade, that is a big drop, you know, and so you earn a really good profit, and it certainly offsets anything that as far as the losses. All right, so putting this kind of all together, again, this upper indicator shows being overbought, oversold as it crosses the upper line or the lower line. The PPO shows a new trend here, a put trend, and it's awesome that you are making money when price drops. You can see right here that you would benefit from that. And then now here it started up. And so the Kirkland oscillator shows you entry and exit and entry, so that it just makes it very clear, very easy to read the chart, interpret, and when we get to the very end, you'll see that Metastock has added even more wonderful indicators that really make it very clear. So this is a trade setup, and so we're gonna kind of check this out. Again, this is Zillow, and can see here that it had this nice rise. You can see on the CCI that it is overbought, pulled back a little bit, kind of in neutral territory, and then rose again, and now has dropped. The PPO here has had several swings up and down, and here the Kirkland oscillator is climbing and then dropped here, and so likely would have closed the trade when it just started dropping, and you would have gotten in right here. Closed the trade and took profit, and then it came down here, and it actually like touched this upper line and used that like a trampoline and bounced up again. And so possibly you could have said, well, I'm going to re-enter, and have ridden it up, and then when it started to head down and lose some strength, you could have closed the trade again. Down here, it's not really written up, but you could have considered a put trade, and then it dropped just a little bit, and as it started to head up, you would have closed that trade. So my goal is for me to have profitable trades, to have them be very clear, tell me when to get in, when to get out, and then to be able to share this information with other people and have it be very clear, readable, doable. So this is another trade that we can look at that is just right from the start. This is Walmart. And if we just take the top CCI indicator, we can see that here it crossed above the 0 line. And so that is telling us that price looks like it is getting ready to go up. We can look down here at the PPO, and it too has crossed up. And then when we scroll down here and look at the Kirkland oscillator, we can see that here it was kind of in the middle and had been in the middle line here for a while, and then it crossed up over the top line. If it had been down below this line and crossed up over the lower line, we would have gotten in there. But in this case, it was between the two lines. And so it would have been difficult to say, just like up here, is it going up or is it going down? Which way is it going? When it crossed this upper line, that could have been an entry then. And you can see that it climbed up, and then when it started heading down, we could have closed that trade. So this is a chart that has taken it a little bit further. And so this area right here is where I was saying that we could have closed, where it climbed up, kind of flattened out a little bit, and then when it started heading down, we could have closed the trade and made a nice profit. And then it came down here and touched the Kirkland oscillator and then bounced back again. And so we could have considered a re-entry here, gone in, and it rose, and then when it started heading down, we could have closed the trade again, right in here. So this is a question, did the trade continue? And in a sense, it went down and then did a very modest put trade and then dropped back down again. So it wasn't like it at this point came down part of the way and then rose again, where you feel like, oh, I missed out on having it climb higher. And so I'm saying here, let's review the actual first and second add-on trade. And so this is a little bit bigger chart that would have entered here. You can see that this is where you exit when it looked like it was heading down. You can also see that as it crossed down on the CCI. Came down here and bounced, and so this is where you would have considered re-entering, and rose, and then when it started heading down, that is where you would have exit. So again, I will stress, because this is a super important element, is again, you want to trade with equities that have a big move. And a move on a stock of 2.5% to 4% often will double the premium. And 8 to 10% move will often double a monthly option premium. This is talking more about weekly charts. So on the Zillow trade, if we'd purchase calls after market open on August 9th, when the Kirkland oscillator crossed through the touch zone for $3.30 a share, and this should have been $330 per contract for the September 20th 50 strike call. And let's say we bought 2 contracts for a total of $660. We sell after opening on August 26th. The call was then worth $8.15 per share, or $815 total for each contract. That's $630 for the 2 contracts. That is a gain of $970. That was 147% gain, and that is awesome. The price when we entered the trade was $50, and when we sold it, it was $56.50. So that is $6.50 rise. That's 13% versus the $147 per 147%. So for an investment of $660, in a sense, you controlled $10,000 worth of stock. And gosh, if you had invested that much and had taken that same amount of money and invested it in options, you would have earned $26,896. That is just crazy, crazy leverage that options gives you. All right, so there was that second trade on Zillow where it came down and then it started up again. Had we entered and on September 10th, when it was 54.50, we could have purchased the 55 strike call with an October 18th expiration date for $2.59. And had we purchased 3 contracts for $777 and held and then sold on September 25th for $12.75 per share, or $1,275 per contract, when it pulled back to the exit area, the stock price at that point was $66.60. That is a gain of $12.10 per share of the stock, or $10.16 per option share, and we had 300 shares. That's $3,048 for the 3 contracts. And so we paid $770 and made just a huge amount. And you could have only bought 14 shares of stock for the 77. So I mean 777. So the options have so much leverage, and you can end up earning additional profit by trading options versus just stocks. So we'll talk about a call trade. This is a 60-minute chart. This is Walmart. And this is the entry up here. You can see that it has moved on the CCO. It kind of created this area that wasn't a big fin. It was, but it's heading up. Has moved from negative to positive. And you can see the PPO has crossed up, and the Kirkland oscillator has crossed up on the 22nd and risen. So this is what we were looking at. Added more to it here. So you can see here on the CCI, it started weakening and heading down. Took a little while longer. The PPO crossed down. And here, the Kirkland oscillator started heading down and showing weakness. So had you purchased calls after open on October 22nd, and when the oscillator crossed through the touch zone for $1.40 per share, or $140 per contract, for the November 15th 82 strike call, and let's say you bought 5 contracts for a total investment of $700, and you sell at the end of the day, October 24th, the call contracts then were worth $2.63, or $263, or $13.15 for the 5 contracts, for a gain of $615, or 88% for those 3 days. The 88% for 3 days is just awesome. Walmart's price then, when we entered, was $81, and when we sold, it was $83. So that was a $2 change in price, and that is 2.3% increase in the stock's price over the trade period. But the option increased 88%. So for an investment of $700, we controlled $40,500 worth of Walmart stock. And had we placed that much into option contracts, you would have been able to buy 289 contracts and earn $76,000 profit. I mean, it's crazy, the leverage of options. And so the whole point is to be able to look at a chart, learn what it is telling you, the information that is sharing, hopefully not have it too complicated, have the picture be clear, be able to get in, and hopefully it goes exactly in the direction that you're looking for, either up or down, call or put. And if it doesn't, then you get out quickly and have your loss be minimal, and so that it is totally offset by the profitable trades. So here we're going to look at a put trade that this is Newmont Corp. And the entry is marked up here. And so we're looking ahead of what happened, but you can see that it dropped. So here is the CCI was up here in bullish territory, started heading down and crossed down, going from the bullish area down through the 0 line and into the bearish territory. And here you can see that for a long time, goodness, going way back, days and days and days, the PPO was just kind of laying right on top. And then finally it started adding some white space between the lines. And the Kirkland oscillator, again, you can see it up here above the 100 line, and here it dropped down, and this is where would have entered, drop, kind of flattened out, and then when it started to look like it was going to rise, that is where you closed the trade and exited the trade. And so big drop, little gap down, then it started to rise, and this is the area you would have gotten out. So the way this one worked out, you purchased a put toward the end of the day on October 23rd, when the Kirkland oscillator crossed through the touch zone for 98 cents a share, or $98 per contract, for the November 15 expiration on the 55 strike put. And let's say we bought just 6 contracts for a total of $588. And you sold 2 days later on the 25th when the premium was $7.58. The put contract is now worth $7 or $758 per contract, or $4,548 for the 6 contracts. So that is a profit of $3,960, or 673% gain. That is just absolutely amazing. I'm going to flip up again real quick here just for a second to sit and think that you held for just that short period of time. This was so obvious on the indicators that this was going to be a put drop, and it just dropped, flattened out here and sold. That is amazing to sit and think over that short period of time, 2 days, that you would have made that percent gain. That is just amazing. Awesome. Okay, so the strategy finds equities that are ready to move, stocks with consistent big moves. We started off where I shared that you want it to move 1.5% to 2% on average every single day, up or down, it doesn't matter, but you want to focus on the big movers. You don't want to get into trades that have just little tiny moves up, little tiny moves down. You know, you want to get in and have them get down to business, have a big move, be able to have your profit pay off right away. And so you also then want them to be overbought or oversold, meaning that they have a good way to go as far as recovering to the previous levels that they were at. And you want them then to have put in the bottom or the top, and then look like they are reversing and beginning a new trend. So in a sense, when you look at the charts or are analyzing the equity indicators, you want them to tell you the story that they were way up, they dropped now, and now they're beginning to head back up again. You want them to tell you what is likely to happen next. And then, of course, when you enter a trade, you want a confirmed entry signal. And this overall cuts out lots of false starts and shakeouts and the trades hitting the stops and closing. So Metastock has simplified the chart. They are amazing. So this is their kind of chart setup. And this is Citigroup. And so here is the CCI on here. And look how they have added, very clear. It tells you bullish, bullish, bullish. The red is bearish. And so it helps to look at the indicator, but it is telling you a very, very clear story. And then you still have the PPO and the Kirkland oscillator. And so you can look and see when this is crossing up and heading up here, bullish. Over here, crossing up, bullish. Bullish. It just makes it so clear. So there's all kinds of ways to, in a sense, set up the chart, adding the indicators that speak to you. That if you want to look at the CCI and the PPO and the Kirkland oscillator, you can set all of those up and let them tell the story. If on the other hand you say, I just want to know when the Kirkland oscillator is going to tell me when to get in and when to get out, when it crosses up over the bottom line here and is heading up, that is what I want to hear. That's what I want to see. And so this is a super long trade, but it says that it is bullish, and it is bullish going on for months. Look at that rise. And that is just absolutely amazing. And so you can look over here and see the information that is being shared with you, and can see now as it's starting to drop right here, it is saying that it is bearish. The Kirkland oscillator at this point still says that it is bullish because it had not crossed down yet, but it is sharing you the information about what is appearing on the chart. So again, you can have all of these indicators on the chart and have them share the information. This is delta. Can see here how it crossed up. And this one has the average true range down here so that you again know that it is a qualifying equity, that 120 and it's 53, so it would have been 106, so it is above the 2%. But again, we have showing it is bearish. You can see the PPO has had some little swings, but the Kirkland oscillator actually remained above that line. You can see over here, bullish, bullish. All right, well, I'm gonna let Metastock here come back and talk about their capacity to be able to point you in the right direction as far as equities to be able to get in, because they have several scans that they have set up using my indicators and such. Are you ready to take over?
I am.
Awesome.
Yeah, I'm kind of sure how the scanning works and stuff like that. But Wendy, really appreciate this. This is such a really cool system, and I'm going to show how easy it is to find opportunities with it. So thank you for coming in and talking to us about it.
Oh, I am always so happy to be here. It is great fun for me to be able to share. I really, really, truly do enjoy it.
Cool. Awesome. Well, thank you for coming. We'll see you again, guys.
Yes, indeed. Take care. Yeah.
Okay, let me go ahead and kind of just take the controls here, take the wheel. I'm gonna go ahead and make myself the presenter, and I'm gonna share the right screen every time. So I've got it set up here. I just kind of wanted to walk through, we've talked about how Metastock can be really helpful for you to go in and identify those trading opportunities and that kind of stuff. I wanted to actually walk you through the process. I'm not sure we've done that much today or even yesterday. So let me kind of just walk you through it right here. I actually just was looking at this Live Nation chart, and I'm going to go ahead and run a scan for Wendy Kirkland. And the way I'm going to do that is I'm going to open up what we call our power console right here. I'm going to go ahead and type in WK. That'll list the WK scan. So there's two scans that are in here. There's a pre-filter, and if you run it, it's just going to kind of go in, find stocks that are greater than or equal to 25 bucks, and make a list and have enough volume. Make a list that you can scan on a daily basis. So you can run that if you want. You can run it once a quarter. Just kind of make sure that you have a list that kind of fits the parameters there. For me, what I'm going to do is I'm going to actually run the automatic swing trader. And just to kind of make sure that it's fast, I'm going to do it against the Dow 30. I've got these all selected right here. You can see the Dow 30, the NASDAQ 100, and then the S&P 500. So there's about 500 and some of the stocks in there. It's actually about 630, but there's a lot of overlap between those groups. So we're going to actually run a scan against 519. You can see how fast it's going. Now I want to reiterate, because we get our data from the London Stock Exchange Group, is basically covers just about any exchange in the world. There's over 300 exchanges that they offer. So if you're here in America, obviously you can do all the American stocks. If you're in India, we have all the National Stock Exchange, the Bombay Stock Exchange. If you're in Australia, we have those exchanges. We get a lot of customers from all over the place. And the thing is once you have these tools, you can implement them on any market that you want. You can scan any market you're interested in, whether that's a futures, a Forex market, stocks, ETFs, there's a list for that. You can run a scan against all the optional US stocks. That's very easy to do. But for the point of kind of just talking about what we're talking about, just ran a list on those 519 stocks that are part of the S&P 500, the NASDAQ and the NASDAQ 100 and the Dow 30. Out of those, so that was a total of 519 stocks. And out of those, 17 are left. So if I'm kind of looking at just, hey, how can I find opportunities that exist quickly? This is how. Now, if I'm looking to find maybe long opportunities that exist quickly, right here you see where it says long, short, you've got your ATR value and your close. So if I just kind of sort this by the long column, instead of 19 or 519, that now has gone down to maybe a dozen stocks, okay? And if I want to see what those average true range values are, that's the way Wendy goes in and measures the average movement for the day and whether or not that's worthwhile, I can do that too. So just in the interest of looking at, we'll just look at a stock. We'll look at Home Depot. The reason I'm picking the Home Depot out here, actually we could do MSCI too. It's got an average true range of 14. Let's go ahead and open that up and go. And here we've got it. Let me go ahead and put on the Wendy Kirkland studies. There's two views that you can look at. There's a clean view that kind of doesn't show all the indicators, and a full. You can see those both right here. I'll just show the full one for now. We'll go ahead and apply it. The clean view just basically has none of the indicators, but all of the signals. So you can see last time, here we had a sell signal. Then we had a buy signal. Today, we know we had a buy signal because that's why it came up on the scan. But you can see basically out of the signals that are visible on this chart, there's 1, 2, 3, 4. This one didn't work out. The rest of them did. So let me kind of go ahead. I'll just show you one other thing that's really cool about the way that this works. And that's a functionality that we call the expert advisor in the commentary. So I'm going to go ahead and open that up. I'm going to go ahead and click on view expert commentary. And it's going to kind of give us that breakdown of kind of what we're looking at. I know Wendy just talked about what we're looking at and stuff like that, but if you're looking at this in another week or two, after like the end of the week, you might not remember like what we're using ATRs for and what we should do with it and that kind of stuff. So this is going to break this down. Right now, the AST is signaling a long opportunity. If trading stocks at closing price or daily volume are lower than recommended for this type of trade. So it's saying there's a bit of a warning on there. There's not enough volume. It warns us about that. This module is taking into account CCI. It's going to kind of breaking it down that for you. Now, what it's also going to do is going to tell you kind of some different ideas on how you could structure this out as a trade. So for example, it says right here, and I'm just going to zoom this in so you can read along with me, but it says traders interested in taking advantage of this opportunity should look at along to buy the stock. If you're an option trader, you should consider an intermediate term call 2 to 3 months before expiration when the signal is based on a daily chart, 2 months when it's on a 60-minute chart, 2 to 3 weeks when it's on a 30-minute chart, et cetera, et cetera, et cetera. Okay. These signals can last anywhere from a day to 4 to 6 weeks, depending on the time frame used for the signals. If you're an option trader, you'll typically look for the call options that are at the money or with a delta of 40 plus. Okay, while conservative option traders should consider the call option with more intrinsic value. I love the detail she goes in. She's talking about what expiration dates you should use, what kind of in the moneyness you should look at, what kind of deltas you should look at. All that kind of stuff is kind of put together for you as in terms of some advice you can say. She goes on to say, Once you're long, you should place a stop loss order. She gets very precise in terms of where that should be. Once you're in an established trade, you should exit the position 2 weeks before the option's expiration date, unless there's a position that's very deep in the money where time decay is no longer an issue. Once in a trade, you should put your stop loss for this stock at 594.15, and that'll update on a daily basis as it needs to. Keeps going on. I think you get the idea here, though. It's basically really going to kind of spell out not only why you're getting the trade, what you should do with it, the ways you could act on it if you decided you want to. And I just love that in terms of kind of when you're in a new system, the ability to kind of have things spelled out for you and explained in a very cohesive manner. So I also love the ability to scan it. We just went through 520 stocks. We found a few opportunities we could look at. We could pick out our favorites. This one gave us a warning. Maybe we didn't want to take it because of the volume. Maybe we keep looking at something alternatively to that. So very, very cool add-on. It's been very well received. Let me kind of go back over here. And we'll do this. We'll hit the slideshow button so you can kind of see the full screen on it. Again, kind of the core concepts that she kind of talks about. Highest potential. You use a average true range for that. The stocks that are at a turning point, notify you when the trade has begun, and then help you protect from those whipsaws that you're going to have. Very, very cool at doing that. So here's kind of what's included. Of course, everything I showed you, her Kirkland oscillator, the PPO oscillator, the expert advisor, the commentary, everything you need to run it. This is normally $4.99 as a one-time cost. So you buy it, you own it for life. Here at the conference, we are going to do a special price, $249, 50% off. I will give you, even though it's such a cheap price, that's only a one-time cost, we're still going to give you a Metastock subscription if you need it. We're going to give you a money-back guarantee. We'll give you all of the data that, worldwide. You don't have to pick a data region anymore. That's no longer required. If you need help, we'll help you install it. We've got, as Kelly said earlier, super good support team that can walk you through anything. They'll help you install it. They'll help you run the exploration, help you make sure that you understand everything about it. And you'll also get a copy of our home study course, the Unleash the Power of Metastock. So to do that, you can give us a call, 800-882-3040. You can go to metastock.com/sales chat, and you can go to metastock.com/conf-promo. So great risk reward on this. It's $250 one time. Should be able to pay for itself very, very quickly. 30-day money-back guarantee, and it will include everything you need to go ahead and get running with it and get started with it. So I'm just glancing over here to see if we have any questions. Thank you, Greg, for putting all that information in the chat for me. Metastock.com/conf-promo. Give it a go. See if you like it. The risk reward is better than any trade you're going to get with the 30-day money-back guarantee. So with that being said, let's talk a little bit about one of our sponsors. We're going to talk about Traders Forum now. If you go open up an internet browser and go to www.thetradersforum.com, you can join for free. It's a community of traders designed to help traders. It's a partner of ours, and there's a lot of education that's available up there. It's completely free of cost. You can kind of learn about the markets. You can share ideas with other traders. They are awesome up there. I look forward to seeing you up there. I'm up there almost every day. Thetradersforum.com to go ahead and get signed up for that. Mr. Lewis, Mr. Lewis. Should we give away a prize?
Yes, Mr. Gibby.
All right, let me go to my my list of the prizes here, and let's just take a look here. Okay, so we did the last one we did. So this one, what we're going to do is Zahir Anwari is going to come in. He's going to talk on Friday. He runs a Sublime, and he does a really good job talking. He's going to give a 7 gift package away. So whoever wins this isn't winning one prize. They're getting 7 prizes. It includes like a portfolio accelerator call. Let me see. I'm trying to get everybody a stock market blueprint, his methodology PDF, a wealth calculator, and a bonus recording. So the value on that package is normally $197, and we're going to give away a lucky winner access to it. So let me go ahead and kind of make a note of what we're doing. Greg, remind people
Yes.
how they qualify to win.
Well, if you're watching this right now on GoToWebinar, you're already good because you must have already registered. If you're watching it on YouTube, what you need to do is just go to metastock.com, click on the banner at the very top, and register for this event.
All right. And now what I need from you is any number between 1 and 9,145.
1,145. Okay, according to Google's random number generator, oh, it's right up top, 7913.
Okay. Let's see. This is David R. In the USA with a 619 area code. So there you go. Hopefully that's not too much information.
I should mention, YouTube kicked me out for just a second, so I haven't been able to keep up with all the numbers that you were just talking about. I'm going to rebooting in, and I'll put the numbers for the last offer and everything in the chat on YouTube.
I think I can grab. Okay, looks like we got those.
You have to be logged in as me to be able to do it. But anyway, I'll let you go.
No problem. Thanks for the assist. Also, I don't know if you heard about it, but we're Metastock. Metastock has been rated the best software program for 3 decades plus 1 year, 31 years. I just showed you how you can use it to scan, define specific setups, and eliminate the noise that sits in the marketplace. It'll help you do a bunch of other stuff. As Kelly was talking about earlier, you can test trading ideas. You can use Forecaster to predict probable price movements. It'll give you real-time alerts, commentary, signals, hundreds of really good systems that are built into it. If you just want to try out Metastock to see why it's been rated so highly for so long, give us a call. We have a special that we're going to do. Of course, if you buy any add-on, we're just going to give you a free trial. We want you to be able to use it and see it, and we know that it's going to be valuable for you. If you just want us to try out Metastock, we're going to do an extended trial. If you buy a month, we'll give you a second and third month for free. The cost on that starts at $75. We'll give you unlimited access to our support team, training to help you get started, one-on-one consult, we call it a white glove service. All of that's going to be included as part of it. The cost on that, $75 to go to February. It's like $25 a month. You're going to spend more than that on your coffee, most likely. I'm not sure your coffee habits, but I'm sure of mine. You can do that by going to metastock.com/conf-promo, metastock.com/sales-chat, or 800-882-3040. So 619 in San Diego. There you go. Cool. All right. Thank you. Thank you for that, Mike. All right. Our next guest is John Seville. John is a friend of Metastock. I've met him in person many, many times. I've helped him code some of his stuff into Metastock. I really like the methodology. I love his accent, one. And that's a bunch of points right there. But I love the methodologies that he uses. Helping him code some stuff into Metastock, this would have been a few decades ago, actually helped me learn a lot about some things that I wasn't aware of, which is always cool. John runs Acorn Wealth Corporation, and he had told me in the past that the design behind that is to help turn acorns into big oak trees, to help you as a trader grow. So, John, that's how I'm going to introduce you. I don't see your microphones on, but I see you. I'm going to go ahead and make you the presenter right now so you can share your screen.
Okie dokie. I just was trying to.
Can you hear me okay?
Yeah, I'm sure you've been introduced a lot in different events, but I'm probably the only one that goes, well, his accent's worth listening to by itself.
It's been about 20 years almost, I feel like, Jeffrey, and what a journey. We're still here.
Yeah, for sure.
Yeah, so
I feel like I should lock on wood after you say it that way. All right, John, I can hear you. I can see you. I'm going to get out of the way. Go.
And you know what, Jeffrey, it's the one time you didn't ask where I was, because for the first time in 16, 17 years being on this show, I'm actually in your country. I'm in Utah still.
Yeah? Oh, no, I know. I sent you a message. I don't know if you saw it, but if you're in Salt Lake and you want to go to lunch, I know some places.
I'm going to hit you back. I'll take you up on that because we will be in Utah a bit longer. We're in Zion National Park at the moment, so not too far away. But we'll get to that another time. But look, in fact, speaking about Utah, there is a lot of things that I've been around in Utah in the last few weeks, which just, it's almost like serendipity. What we're going to talk about today, there's been messages coming at me from everything in nature. So it's pretty funny how life is replicated that way, but we'll get to that. For now, we want to start off with a few formalities because we've got a lot in store for you today, especially given where the market's at the moment. So really quickly, this is for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth is not registered financial advisor in a jurisdictional province. So always be aware of the risks of trading. Don't risk more than you can afford to lose. And of course, past returns discussed don't guarantee future results. Any positions discussed also may be being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth. And all the acorns in the room, give me a quick hey in the chat box. Good to see you all. We've just come, so I mean, let's get right into it, right? I don't want to give you some long drawn out introduction. Most of you have seen me around before. We've been around 17 years. It was our birthday on November 6th. So 6 days into our 18th year. And so, yeah, we've been around for a while. But despite how long we've been doing this, the strategy and the core of what we do really hasn't changed. We've certainly added a lot to it, but it still comes back to the same core principles. So have we had a volatile year in the market? Yes, but I mean, no different really to any other year. It's just a different catalysts, different reasons, different headlines, you know, inflation, rate hikes, AI, energy, presidential elections, you know, and yet we still come back to the same core principles that ultimately are driving these things in the charts. And so when we start to look at how the market's gone over this last year, one way to talk about how a market has performed is to look at price, to look at movement in price. And of course, that's what most people judge movement by. They'll say, oh, the market's bullish because it's been going up. Oh, the market's bearish because it's been going down. Sure. And, you know, a few months ago, I was on right here at Metastock talking about this whole phenomena, and some of the charts I shared back in September was to say, all right, and I'm going to talk about some more recent ones later, but if we just cycle back to the last time we were here on the show, I said, you know, look at where the movements actually come from though, because it hasn't been a bullish market by all standards. If you actually look at the 6-month performance leading up to the last show, utilities were up 18.7%, real estate was up 14.9%, and financial services up 10%. Those three sectors significantly outperformed basic materials, energy, communication services, industrials, consumer defensive, consumer cyclicals, technology, and healthcare. So those three significantly outweighed the performance of the other 8. So if you say, well, oh, the market's bullish, so everyone must be making money. Well, not really. I mean, if you had have picked your sectors simply by throwing darts at the dartboard, and you landed on any of those 8 compared to the minority of sectors being the other 3 that really performed, you would have had a mediocre year, perhaps even a losing one. And so this is really kind of emphasizes the value of peeling back those onion layers a little bit and realizing it's not just a stock market, but it's much more a market of individual stocks and individual sectors. Who's experienced that, by the way? Put a 1 in the chat box if you've seen the market rally away and you've watched these epic rallies in the S&P and then wondered why your portfolio is just treading water or maybe even going down. Who's experienced that? All right. This is probably a good reason for it. When we looked at the 3-month performance in the last show, once again, the same sectors, right? Same sectors over 6 months, utilities, real estate, financials. Over 3 months, real estate, utilities, financials. So over the long term, over the short term, that was the place to be. And if you go back to January, and when we were here on the show at the beginning of 2024, we talked about this. It was my kind of one big call on the market where I said, here's my one big idea for 2024. And it was anticipating the hot sector that started out this year. And the way we did that, because anyone can look in hindsight, anyone can say, well, that would have been a good thing to do. That would have been a good place to be. There's a lot of people that do that, right? That's hindsight's 2020. One of the cool things, if you've been following this great event at Metastock throughout the years, you'll remember me calling this at the beginning of the year before it happened, which was that real estate was likely to be one of the best sectors or the best sector, right? So if we look at the performance, looking back, yes, it was terrific, right? Up 14.5%. But how did we anticipate it before that movement occurred? Because when we're looking for where to invest next, price movement may not be an indicator of what we should be buying tomorrow. It might tell us what's performed the best in the past, but price movement on its own doesn't really tell us what's going to be the best tomorrow, does it? So price movement on its own can be misleading. We need a way of being able to anticipate what's going to be the best sector next, the best area next. And so at the beginning of the year, I talked about this in great detail of why I felt the real estate sector was hot. Not because of price movement, because when we picked this as our favorite sector in late 2023, early 2024, it was actually going straight down. Price movement alone would have indicated this was the weakest sector. But when we scrape beneath the surface and when we look, you know, behind those, underneath those onion layers, we saw that, yes, price was going down, but what was money behind the scenes doing? What was the smart money doing? So I'll take my webcam off for a second, just so you can really look at this. And I'll get my pen out here. Down the bottom, this is a graph that shows insider buying, the buy to sell ratio. How many insiders in this sector are buying their own stocks with their own money compared to how many are selling their own stocks? And when the buying starts to really pick up and get concentrated, when the buyers get really excited, you see these green bars go up. Now I make a note that this data does take out some of the noise. Jeffrey was talking about getting rid of the noise, and I totally agree with that. There's far too much information out there, not enough insight. Who'd agree with that? Put a one in the chat box. Too much information, not enough insight. So to get to the data that really matters, firstly, we got to get rid of the opinions and all that stuff and get down to the data, get rid of the noise and get down to the data that really matters. And so this insider data actually takes out things like options being exercised and performance rights and things that can muddy the waters and often distract you from the good ideas. So this really shows us when insiders are actually putting cold hard cash into their companies. That's the data I'm most interested in. And so taking a look at when we had these spikes, when these buy levels really kicked up, right? There. Now, in each of those scenarios, in each of those places where I've circled, would that have been a pretty good place to start investing or looking for trades? Absolutely. The largest spike of which was, of course, post-2020 crash, right, when we had the COVID crash. And you can see that the insiders loaded up the heaviest they had in this entire 10-year period, almost exactly at the bottom. It was actually about 5 days off the bottom when insiders started doing that, and they nailed it. Terrific entry point. So what was very special about this, to bring this full circle, is going into the beginning of this year, we had seen that real estate sector had just continually been dropping and dropping and dropping and dropping. But very uniquely, we'd started to see these spikes happen, and happen in a way that they had not before. We'd never gotten more than one big spike, even in the 2020 crash, only one. Whereas in this occasion, we had 1, 2, 3, 4, 5, 6, 7. And those got higher and higher, more and more bullish, the further that the real estate sector dropped. It, in fact, reaching the same buy to sell ratio as what we'd only seen previously after the 2020 market meltdown. So this was very unique, very interesting, fascinating, and the fact that the price had kept going down showed us that despite this data being publicly available, despite this happening in front of everyone's eyes, the smart money seemed to know something that the retail market did not. And that's exactly what I'm looking for. There's a word for that. When price is going down, but something else behind the scenes is getting more and more bullish. What's that word? It starts with a D. Anyone know it? What's the word when we see one thing that doesn't quite add up to the other, where we can uncover some of these potential diamonds in the rough? Divergence. Divergence is a very powerful price action tool. And so where the rubber hit the road, going back to the beginning of this year, was that we then saw price start to break out. And that was where we were talking about this back in December and back in April, when we had this bullish downward channel. And we said, hey, right there in April, this is where we're going to start loading up. And it was. This was the real estate sector was my largest position in terms of individual stocks and focus for almost this entire year up until recently. And as you can see, it indeed broke out from April onwards and just kept going higher and higher and higher. The stock that I chose to trade that was IGR. So one could have gone long the sector, that would have been perfectly fine. But the way I like to trade scenarios like that is to then look for the what I perceive to be the best stocks in that sector. How do I define that? Well, looking for a very powerful pattern, price action, with great insiders or institutional support. And in this case, an extra special ingredient, which was that it had paid a, I think it was either 18 or 20% dividend going back to when we first bought it. There was a few different entries and exits on this one, but this paid like an 18 or maybe even 22% dividend. It was really high. So you've got this very special scenario, and the first thing you should be worrying about when there's a 20% dividend offered is that too high? Because dividends aren't guaranteed. Dividends can be changed or cancelled at any time. So when you're getting this 20% dividend, how does one get a sense of confidence that that dividend will actually be a real thing, right? And so instead of going into overcomplicating that, and because I'm not a specialist in fundamentals and dividend payout ratios and things like that, but to me, the test of the institutional and insider money going into it was a big tick that they're probably doing fine. But secondly, then just looking at, okay, well, what has happened with these dividends when we go back to the 2020 crash? What about the 2022 crash? What happened with the dividends in these previous market meltdowns? Were they changed or cancelled then? What about in 2008 when we had the global financial crisis? when people were throwing their keys back to the bank on the ninja loans, right? What happened then? That would be particularly interesting and relevant. And what very quickly came out of that research was that those dividends hadn't been changed or cancelled once. So when those drops happened, the people who bought did very, very well. And so that little piece of research of just saying, well, let's just see over the last 30 years, have they ever changed or cancelled the dividends in events like this before? And when that came back as a no, that considerably added to my confidence in buying this and holding it and collecting those dividend checks. So the whole purpose of this and the whole value and insight that smart money gives us is it gives us a way of having that inside edge and a level of confidence and knowledge in an area that most people in the room wouldn't be a specialist in, and nor do you need to be to see the insight on that trade. So before I move further, does that logic make sense to everybody? Right, without getting into quarterly reports and understanding debt versus equity ratios and getting into all that stuff, can you see how that idea holds water? Do you agree with it? Right, so it's sometimes we don't need to overcomplicate things to still get to a sophisticated level of analysis, and that's what smart money is all about, and what we've been screaming from the rooftops since we started in 2007. And so, just 23, I love it, Brian. G'day, mate. A few Acorn customers in the room know exactly what I'm talking about. So, the next one. Where's the next one? Well, for that, let's go back again to this whole theme of smart money. Insiders, which I've been talking about since Acorn started in 07. Smart Money Trading was a brand and company we began in early 2015. We're one of the first to the table in this topic, and this is a real specialty niche we're very good at. Insiders is something we focus so much on because they are the only experts that know. I mean, even the godfather of the stock market, if you will, the Warren Buffetts of the world, even they are still making very well educated guesses. But the only people that absolutely know what's going on with product launches, mergers and acquisitions, litigation, FDA approvals or not approvals, are the other guys and girls on the inside. And so watching what they do with their own money, I think is perhaps the best indicator of truth that there is. And that's what I'm looking for, I think that's what we're all looking for, isn't it? The truth. If we can get a pretty good understanding of what's really going on, if we can get some kind of understanding of a fair idea of what the truth might be, well, then we can make our own informed, educated decisions. We can't control the outcome. Nothing's guaranteed, even if the insiders are buying. But at least then we're taking a known risk, right? We've got the information we need at our fingertips. Versus when someone loads up on a stock only to find it gaps down 50% 3 weeks later, and then only to find out that the insiders had sold 70, 80, 90, or 100% of their stock a month before. That hurts. That is actually, long story short, that was how I first got my first lickings in the market and blew up an account with that exact story. And I vowed never to buy a stock without checking the insiders ever again, because it was I would never have bought it ever had I known the insiders were selling like that. So, this is, again, something that's so tried and true to us, and the research has been done on this, that the insiders have abnormal returns, says University of Michigan, or Wharton School of Business says imitating them can reap exceptional profits. I mean, that's what I want, isn't it? I think that's what everyone wants, an edge. And so it really does make a considerable difference as well when I'm looking at a stock that I might want to trade, or even a stock that I want to invest in. Certainly if I'm going to hold it for more than just a few days or a few weeks, I'd want to know that the fundamentals are pretty good. And so to put that a different way, I want to share with you another little cornerstone in Acorn's 17, 18-year journey, which was when I had a very humbling moment when I got asked to come down to Tampa last year to chat with one of the sharks from the Shark Tank, which is Kevin Harrington. And I did not expect the answer he gave me when we started talking about smart money, and I'm going to share it with you here. So hopefully the audio should play fine. I'll just click the play button.
Okay, so I'm going to pin you down now, okay? Because I've heard the word strategy a few times,
Yep.
and that ultimately, you know, what investors want is a strategy. But what is your smart money strategy?
A strategy is firstly more than one thing. It's not just one indicator or one scan. It's all of those things together, which is the difference between a strategy and a bright shiny object.
Okay.
And so the strategy that we teach and that we follow is firstly, how do we find the idea? Because I'm not a fundamentalist.
Okay.
I don't want to be. I'm not analyzing annual reports and things like that, which others like yourself are probably expert at.
I've done a few.
A few. What I'm more interested in is letting the experts, letting the smart money do that research for me and tapping into that. So the way we find ideas is we're looking for stocks where there is a substantial amount of insider buying going on behind the scenes.
I like that.
And,
I like that.
And we love that.
That's one of my strategies too, by the way. So yeah, I love that. Yeah.
Well, I mean, you've got to assume that the CEO and the CFO have a fairly good understanding when a company's undervalued.
Right.
And you'd hope that they know what's going on.
And likewise, if the insiders are dumping the stock, then that might indicate there's something that's not so rosy on the inside, possibly, right? I mean, it's a couple different ways to look at it, right?
If you look at the tops of the market in 2020 crash, very large insider selling compared to buying prior to that. The 2022 drop, we saw the same situation, in fact, 3 times as much insider selling before that drop there.
There
So
you go.
there's the insight.
Right. Okay,
So there you go. A very humbling moment, and it was humbling in that when you said when you got a billionaire like and market savant like Kevin Harrington talking about how one of his favorite strategies is tracking the insiders, it was just that extra bit of confirmation that we've been on the right path for the last 16 years, 17 now. But more importantly, that we've been able to empower over 7,000 people like yourself with that knowledge and insight to be able to do it in your own investments. That's what really matters. Not my trades, not Kevin's, but yours. And this, I strongly believe, it makes a very big difference, because I've had students tell me over the years many times about how much it moves the needle if done correctly. And you might remember another key moment years ago where we came out and talked about oil, and this is going to tie very nicely into the next subject. Who remembers $0 oil, firstly? I mean, everyone in the market back then, or at least was observing it, you know, who missed it? Who missed $0 oil? I mean, gosh, it seems crazy to look back on that now, doesn't it? You know, what's the fundamental principle of making money? Buy low, sell high. Oil was free. In fact, went in terms of the futures, it went to negative values. So when you look at these types of scenarios, if you did miss it, don't worry, there's always more opportunities. But why did so many people miss perhaps one of the best investments that many people had seen in their lifetime from a value perspective? I don't know what everyone's individual reason is, but I can hazard a guess that people were at the time so inundated with noise and fear in the news and other things happening in the economy at the time that there were too many distractions, or perhaps people didn't know how to act on it. You know, what tool to go to pull that trigger and be presented with the good ideas, because of course not all oil companies would have been good buys. Some may have gone bankrupt. Some may not have been able to withstand the sustained downward oil pressures. So how do we sort the good ones from the bad? How do we find the diamonds in the rough? And this is where, when we hit $0, we went straight to scanning for stocks with insider buying in this sector, but not any kind of insider buying. We don't want all the noise. We actually want to eliminate about 95% of that. What we want to drill down to are the stocks where there was a significant amount of insider buying after oil crashed. So if the insiders bought $10 billion worth 1 week ago, but 1 week ago was 2 days before oil crashed, doesn't matter. So even if it was really recent and in massive size, it doesn't matter if it was before the crash, does it? In the same way that we look at, the history of dividend payouts, think about the simple things. Think about, don't overcomplicate it. Think about what is the story that the data is telling you. And so the relevance here is that in a situation like this, what matters is, did they buy after? That's the vote of confidence that I want to see. That's the kind of buying that I think would be very odd if they just come out of a board meeting talking about how they could be bankrupt in a month. Very unlikely. Oil tycoons are then going to throw in millions of dollars of their own cash if that's something they're really considering as a likelihood. And that's so the kind of buying we're looking for was popped straight up on our scan with TTI. It was not ever on our radar. It was a stock we'd never even heard of before. But what we saw was that after oil plummeted, you had actually 8 directors buy not just a little bit, but 100%, 216%, 50%, 62%, 110%, 124%, and then as much as 982% more. So when someone goes out and doesn't just buy a little bit of their shares, but increases their position by 982%, that is impressive. That is the story in the data that shows a level of conviction, of greed, of excitement, And hey, I'm not going to say there's anything wrong with that. It's publicly reported information, and they're buying stock in their own company that they believe is significantly undervalued. Good for them. And it's up to us to pick up on that. And that was how we picked up on this. This occurred right around the lows of the market crash, and we alerted it to our members around 92 cents. And I mean, even if you just wrote it for a bit of that journey, it would have been great. Its full extent of the move was a 470% rally, but even if you got half of that, still fantastic. Same thing with Clement Petroleum, better known name, was another one that had 3 insiders buying $3 million worth right when oil plummeted. And once again, that bottomed out around $5 and had a terrific move up to a high of 60. It's an 1,100% increase. So if you had $1,000 in there, that's $11,000 in profit roughly. Again, even if you got 20% of that move, it's still phenomenal. These are the kind of things we're looking for. CDEV was actually the one I bought. I bought Clement Petroleum later, before past the original alert we had on it. CDEV was the one I bought first because it's a bit more speculative, and I didn't mind the speculative nature of it because it actually had the most amount of insider buying. We had the VP, director, and chief financial officer buying, and then you had 2 other 10% owners that bought $20 million worth, and it was also the one that went up the most. The patterns on them were all the same. Concentration and level of conviction, very similar across the board. And this is how we pull the trigger. This is how we find these types of things. And that's the confidence I'm looking for if I'm going to take the risk. And there is a risk. It can always go bad. Not every, and certainly not every trade's going to go up 2,000%. But as they say, luck is where preparation and opportunity meet. And that's about having the right tools for the job. And so I bring up energy because that is a fascinating theme that is evolving right now. And a few months ago, we were here live talking about this concept. And if you missed it, don't worry, I'm going to go over it right now with you. If you look at how the money is moving in the last 3 months, you'll actually see that we've had a lot of volatility in the market. So technology's been great, industrials have been great, financial services. There's been a lot of green for the last 3 months, given the reflective of the sharp rally post-election that we've seen. So if we zoom down to a smaller time frame and take a look at the last 1 week, one week of market data, this is updated as of November 12th, you can see that where is the performance coming right now? Well, technology, industrials, and energy. So much like at the beginning of this year, we were talking about the insider movement and what could be the next sector. So, going back to the same exact recipe here, but perhaps a lot more exciting than what the argument was on the real estate. And this is why this is just such a exciting topic to be sharing with you all here. It's one of the first times anyone has ever seen this, but it's something I've been working on for the last 2 years with a lot of blood, sweat, and tears, and we're ready for this. And so let's dive into beneath the onion layers, shall we? Who's ready? Who's ready to dive in to the energy surge? Hell yeah, gotcha, heck yeah, right on. So this was the chart I shared back in September, so about 2 months ago here at Metastock. And this was the screenshot actually from the event. And I said, look, firstly, price action on energy is in a downward channel, just like the real estate sector, IYR, was in April. So September 17th was when we published our first long idea that we thought energy had bottomed. That was on that day. And that was the bottom. We felt that was a high probability that that was the bottom because it was a downward channel. And downward channels typically break up. That's why they're bullish. And they typically break up after 3 touches along support. So that's called the rule of 3. 1, 2, 3. So that's why a bottom was likely in. And it turns out in hindsight, it was. When we were together last on the show, energy was just breaking out here. And we said, well, now this is even higher probability because we've now broken the trend channel. We're now in the next leg of that journey. The price action alone wouldn't get me that excited, right? It was, and before we go too far, and as you can see, that's exactly where energy's gone since. It's gone right up and hit the channel target over November 10th, 11th, 12th. The first target anyway. So far so good. And full disclosure, at the time of this recording, I am holding XLE, the ETF, long as one of my lazy positions, just an easy one to buy while I was scanning for others at the beginning of things. But as I said, the price action alone is just a channel. It's just a trade. But why could it be more than that? Well, I think, and I'm not a financial advisor, it is your decision to make to risk your money where you wish. But I believe this is just as exciting as $0 energy. I do believe this is one of the opportunities that can really make a dent, can really make some impact in building a portfolio or recovering or growing an already existing one. And what really got me excited about this was going back to the insiders. So if you take a look at the energy sector, you can see that ever since March, that buy to sell ratio, unlike any other sector, has just gotten stronger and stronger and stronger and stronger. And just like real estate going into the beginning of this year, energy, the sector, continued lower, kept going lower and lower as the buying conviction and the buy to sell ratio went higher and higher. There's that divergence again. And so that really piqued my interest. And so I thought, so what's the theme here? What's the big call on energy then? You know, and I'm not an oil specialist. I trade oil companies, no problem, but it's not my specialty. I haven't spent 50 years working in an oil and gas company. So I started thinking, what is the reason why? And it then clicked, and it clicked when I watched an interview with the ex-CEO of Google. His name's Eric Schmidt. Who's seen that interview, by the way? Put a one in the chat box if you've seen it. It's a really good one. He's talking to a group of Stanford Tech students. It's a kind of one of those camcorder type quality recordings. I don't know if it was meant to be published. What I understand online, it was not meant to be published. They tried to take it down, but either way, it's out there. You can watch it. And what Eric Schmidt talks about is the immense amount of energy that we here in North America are going to need immediately because of AI. And this is the one of the quotes from that interview. Eric Schmidt said, "The infrastructure needed to power AI is immense and will only grow as these systems become more advanced. Energy will be the foundation of all technological advancement." That's pretty big. I mean, if you want to think about how big, let's go back to last year. Let's think about how much energy AI consumed last year, and that's donkey's years ago. If you think about the rapid adoption, we'll get to that in a moment. But this is slightly cut off. But what this says is Google and Microsoft now consume more electricity than 100 countries. Each of them individually consumes more electricity than over 100 countries, which means that the technical amount is 24 terawatt hours that they each consumed last year. So that means Microsoft consumed more power last year than Iceland. It's a lot. The two combined, even more. Now, I keep saying last year. Well, last year was quite a bit different to this year, isn't it? Last year, people still searched using Yahoo and Google and things like that. People still do. But the adoption of AI has become significantly more. It's getting faster and faster. When we checked into a campsite about a week ago up in Moab in Utah, she said, "How'd you find us?" And I said, ChatGPT. ChatGPT is now a search engine as well. Microsoft Windows is now run by Copilot. You've got the new iPhone that now, instead of Siri, has ChatGPT powered Siri. It's pretty incredible stuff. So everyone, like it or hate it, is kind of being forced to use it at some level. You're gonna really try to avoid it, and it's just getting started. So what's alarming about that is that a ChatGPT search, the estimate that I heard is that a ChatGPT search consumes roughly about 30 times more energy than a Google search. 30 times. And if people start adopting it and using it as part of their daily routine, like I do, it's in fact, we use ChatGPT so much because we're developers that we're actually the second highest level tier in OpenAI that you can get to. We're one of their preferred developers, which means we get access to everything early. You know, so think about that across the globe. So how are we going to take advantage of that? How are we going to find these terrific ideas? Because this, in my opinion, is the beginning of a long-term major boom. And it's happening, something we should be taking advantage of now, because there is urgency. We've got past the presidential election, and make no mistake about it, we are in an AI war with China, right? How much energy, time, and money was put into beating the Russians to the moon in the Apollo mission? How much? Who was around back then watching the TV, watching the news, right? Distracting from the things that were going on overseas? Enormous, right? This isn't just a race to the moon. This is a race to being the leader, the superpower of AI in terms of national defense, technological superiority. So whoever controls the energy is going to control that race. And that's why you're seeing these chipset wars and things like that. So now we're post-election, whether you like him or don't, Trump's our president. And what do you think, what kind of attitude you think he's going to take to ensuring the lead in that race to the top against other worldly powers like China? It's a race that we can't afford to lose. And you've got to bet that counterparts overseas are thinking the same thing. And I agree, right? So these opportunities may come from companies that we know, but they also may come from companies that you've never heard of before. In fact, because if you mentioned Utah before, as I drove around Utah on the way down here to Zion, I was going down Potash Road, lithium, turning left on Uranium Avenue, I think it was, many times, it was one of the main streets. And everywhere I went, uranium, potash, energy. It's like, wow, the reason I must be here today. But it's not always going to come from the US. It might start that way. But as Eric Schmidt also said, there's not enough power in the US. There's not enough power of all of its resources currently, producing resources, to power this need we're going to have by January, you know, this growth. And so there's going to be a need to look outside to people like Canada, you know, where they've got one of the largest renewable energy sources. Australia, where they've got one of the largest uranium deposits in the world. And so finding these opportunities, both ones that are on the map and off the map, is going to come down to, certainly for us, our ability to scan for these very special setups that are telling a very special story. Just like the dividends, very much like the insiders. And so what I've been working on for the last 2 years, and why we've spent so much time and money on AI, is I wanted to be ready for this, and I wanted to be ahead of everyone else in terms of our technological advancement in this space. And so about 80% of my spare time for the last 2 years has gone into this. Many sleepless nights coding away until I could crack it. And all of that leads us to today, this very special event, because what we've been able to, what we've just released, is our Smart Surge AI research. And what this does, that's just incredibly unique and very special, is it goes out and looks at all of the stocks that have any kind of insider buying, sorts them by looking for those high concentration, high conviction levels, researches who those people are, how they fit into the story. Are they, if they're buying $10 million worth, are they trillionaires or billionaires? Because then that might not matter. Versus maybe the CFO is putting in $200,000 and that's how much they're paid in 5 years. Well, that's far more relevant. So looking at the story in the data, and that's what you can't do in a scanner, like a technical scan and things that we've relied on for and still do use for the last 17 years. It ends at a point. And when you're taking into account the context, the story, the news, the catalysts, the government's policy, that's where you need intelligence, and that's where this becomes invaluable. And so we run this every month and throughout the week, but the focus of this isn't just a 2-day trade. The focus of this is finding for you a minimum of 5 really core ideas per month. And then there'll be updates on those week to week. But this is not something where we need tons of trades. This is about quality over quantity. And so with our AI Energy Surge report, you'll be getting this monthly report, and the next report's going to be coming out today. So perfect time. And so it'll break down the stock, who they are, what they do, dividends, insider buying, the technical setup, everything. Who the insiders are, what they do. It'll break down the potential entry areas, stop loss areas, the reason why they fit so well into this AI and energy theme, so that it's all broken down into a table of contents, each section very clearly marked, and a video to go along with it to break it down graphically. So you can read it, you can watch it, you can hear it. You'll have your finger on the pulse in each way, form, and fashion. We'll also be giving you a custom watch list. So there'll be 5 core ideas on that, but also any of the ones that are very close, that are almost there, that you'll want to keep a close eye on. You'll be getting your own custom watch list that'll be dynamically updated live every day throughout the month. You'll get a link that you can click on, and all of your setups will be there, from the core ones all the way through to the ones we're watching. So custom watch lists, the insider report, and on top of that, as a very special, well, I'll come back to that. I do have an extra special thing to add for you. But all of that, and perhaps this is one of the most special things about it, is you're going to be getting 12 months, a full year access to the AI Energy Surge report and those custom watch lists, all for only $297. Which is pennies on the dollar. If you ask me, this is something that we do intend to roll out more officially in the new year for $1,497 per year. Today, as part of Metastock's special event, it's yours for a full year with no recurring billings. No, that's it. One-time fee, full 12 months, just $297. And to make it even more special, we're hosting twice weekly live member events, where we're going through and analyzing all of this live and talking about the movements in the market week to week and other little pockets of strength that we find in our twice weekly member events. They're live, they're at 4 p.m. Pacific every Tuesday and Thursday. You can watch the recordings. The recordings are sent out right away afterwards, and broken down into written format as well, so you never miss a beat. And you're going to get 3 months access to that. There's 2 live sessions every week for 3 months. And you can come and attend the ones you wish. You don't have to attend them all, but they're incredibly valuable. So all of that is included here as part of the live event bonus today, which you get access to at acornwealthcorp.com/meta. And one little sneak preview of one other bonus that we'll also be getting for you. I mentioned lithium earlier. There, as a bonus, if you're getting started today, we're also including our lithium report, which is a kind of a subsection of the energy theme. It really is part of energy, because lithium goes into lithium batteries, which are used to power things, and also battery storage to store information for data banks. It's a fascinating topic the further I get into it. But one of the ones, just as an example, we alerted in our lithium report in October was Lithium Americas. We alerted that, I believe it was around 270, 260 maybe. We thought this was ready to rock. Bought it myself. And let's have a quick look. You can see the chart. There you go. Off it went. And we had pre-programmed our sell target to be about $4.90, and it all triggered there. 506, 497, 495, 491, 488. Picked up a couple $1,000 in profit, and hitting our target right on the nose. And that's another special bonus for those getting started today that will be included on top of the energy report, is that very special, very focused lithium report as well, with some stocks that have just started to move in the last few days. So I wanted to make this one of the best offers you see. We wanted to make it something that everyone could afford. There's probably other speakers here you may be investing with, or indicators you might have. This does not take away from that at all. In fact, if anything, it empowers strategies you've already got. So the link there, acornwealthcorp.com/meta. And I think I'm out of time. I'm not sure if I have 2 minutes left or 1 minute or 0. So Jeffrey, cut me off if I'm out of time. But if you have any questions, throw them into the chat box. But
we did have a question earlier that's kind of off topic, but I'm going to ask it anyway. Do you have a favorite indicator or oscillator that you like to use?
My favorite indicator, if you're just getting started, I did see that question right at the beginning. I love money flow. So you could use Chaikin money flow, you could use Twigs money flow, and then Acorn has an indicator which is so Twigs was built on Chaikin was built on money flow, and then we built on top of all that. And we have our version of it, which is the Acorn money flow, which is actually available in Metastock. In fact, anyone signing up today, I'll include that with you. I'll include that as a bonus for you. The Acorn money flow. There you go. I love it because you can use it on every trade, on every chart, and it shows you where volume combined with price action is moving. We won't have time to teach it here, but anyone signing up right now, I'll mention it, reply to your receipt, and we'll get you set up with that complimentary.
All right, another question. How many times a day do you use ChatGPT or a similar AI product?
Me?
Yeah.
Well, we are doing close to 20,000 tasks a month at the moment. So 20,000 divided by 30. You know, we're doing, yeah, we're maxing out. We have over. When we design this, there's over 16,000 pages of knowledge I built into this in its beta stage about 8 months ago. I've trained it on our strategies from 17 years of doing this. I mean, it's an enormous amount of data that it crunches, and it was too slow at the beginning. And with all of the technological advancements we've got now, we are now, I mean, it's lightning fast. It's amazing most of the trades I'm in right now all came from this report. Trust but verify. I still look at it myself and go, yeah, I do like that. But what was just mind-blowing was that I liked everything. And it was like, this took me minutes to find that would otherwise have taken me days, perhaps weeks, perhaps I would never have found them in the first place. And so again, so you look at the price tag here of 297, I can tell you that we spend and have invested considerably more than that, bringing it to the state it is for you today. So yeah, we're having to do it.
acornwealthcorp.com/meta. John, thanks for joining us today. Good to have you. All right. Thank you very much. Let me go ahead and kind of do this. Greg, I hope you're ready to do another prize, but in just a second. Let me make the present.
Sorry, I'm more ready apparently than you wanted me to be.
Oh, you're fine. I was giving you a bit of heads up. Why don't you talk about our sponsor that's featured on this slide? I'm sure you could.
That particular slide is Stocks and Commodities well, technically it's Technical Analysis of Stocks and Commodities magazine, which is just about the most geeked out thing you can buy or subscribe to in the world of trading and technical analysis. And we've been their sponsor for 35 years, longer than I've been with the company.
Yeah, it is the standard magazine for, yeah, they do a great job. And they've been our sponsor since our very first traders conference ever. Remember, remember the very first one?
We haven't been their sponsor. Excuse me. Right.
We've worked with them since they started for forever too. Yeah, for sure. If you're interested, okay. Obviously, you come to an event where you're learning about technical analysis and strategies and all that kind of stuff. Wouldn't it be cool if you got a magazine every month that talked about strategies so you could kind of just stay sharp?
I think that would be awesome.
www.traders.com. They've done, as part of your subscription, you get access to all of the articles they've published since 1982. They've got, you can join their ranks of 1.3 million subscribers, 70,000 articles. Now, Greg, you know I brought you in here. We're going to do a prize.
Yeah, let's do it.
Let's see. What's the next prize on my list? Let's see. Oh, yeah, this is a good one. They've all been good. We're going to, Larry McMillan came in yesterday. He talked about the market. He's an option strategist. He talked a little bit about his newsletter. We are going to give 3 months to his newsletter, value $129. That's been published for over 30 years. The option strategist newsletter remains one of the
Larry speaks with more experience and knowledge and conviction and confidence. It's just about any speaker. You can just tell he's been around forever. I mean that in a good way, and really knows what he's talking about. When he talks, you just have to listen. It's amazing.
Yeah, we love having him. Okay, so what I need from you, let's go ahead and pick a number. I need a number between 1 and 9,145.
1 and 9,145. I will give you. I'm sorry. 428.
Ooh,
428.
Yeah, that is Bruce. It's hard to kind of see around like all this stuff. It's like I'll click into it. Okay, what was the number you gave me? I think it dropped off. B428.
428.
Okay. Yeah, that's Bruce B with a Hotmail account in the USA. Area code 618. So let me go ahead and make a note of that. In case you're wondering, how can I get a prize? Well, if you've registered, if you're watching us on YouTube, or you haven't registered yet, go to metastock.com, click on the banner at the top and just register for today's event. I'll add you to the list and you could win the next prize. Also, while you're on YouTube, hit like and subscribe. It helps a great deal. We appreciate it a lot. So,
and there's guaranteed good karma when you do it, but you have to do it right now.
Guarantee, not a guarantee. All right. Thank you, Greg.
You're welcome.
Of course, we are Metastock. We've been rated #1 31 years in a row by the readers of the Stocks and Commodities magazine. We've talked a lot about how it can scan markets, test trading ideas, help you forecast probable price movements, give you real-time commentary, alert signals. 31 years in a row, it's been rated #1, and I've shown you how easy it is to scan and test and get those ideas. And it's a hugely valuable tool. I wouldn't trade without it. I want you to try it. So if you do, if you pay $75 a month, that'll get you 3 months of access. It'll get you all the market data in the world. It'll give you a white glove installation appointment where somebody walk you through the program, show you how to do anything you're interested in doing. Metastock.com/conf promo, Metastock.com/sales chat. You can also give us a call, 800-882-3040. So without further ado, let's go to our next guest. Jody is coming to us from a company called FX Traders Edge. Super great lady. We has some really good strategies she's going to talk about. Greg, your mic's live, but I'm going to turn it off. Judy, Jody, your mic is also live. It's good to hear you. Let me go ahead and make you the presenter.
Okay.
And then you should just get a pop-up.
Share my screen.
Yeah.
Yep.
You've done this before. I think this is maybe like the 4th or 5th time you've spoken with us.
Oh, I don't know.
Okay. Well, we keep inviting you back, so you do a good job. We love having you.
Thank you. And you can see my screen?
I can see your screen. I can hear you.
Should I show my face and say hello?
If you want to. Do you need my help to do that? I can send a webcam request.
It says share my webcam. Well, actually, maybe I won't. I mean, I could just
Okay.
say hello, but it's
It's
on
up
a
to you.
screen.
No big deal either way.
Okay.
I will get out of your way though. It's your turn.
Okay. Well, thank you so much for inviting me here to speak. Today, we're going to talk about using a simple timing tool to find your trades, trading the market cycles. And the market cycles is something that I consider myself an expert in. I'll tell you why in just a minute. First, read the disclaimer, please. Okay. I first started trading on Wall Street. I was a foreign exchange interbank trader. And at the time, we had an analyst from the Chicago Board of Trade on the desk, and he taught us all about Elliott wave analysis. So what I've done during my career, I was at the bank for almost 15 years trading currencies, and now I trade futures and stocks and options as well. And my company, FX Traders Edge, we do have a New York and London trading room trading Forex, but we do offer our tools on all the different asset classes. So back to my story, Elliott wave analysis was something that I grew with over time, and I really dug my feet into. I really learned the science behind it, and we created the Wavy Tunnel Pro strategy, which is a strategy which I like to say we count the waves without really counting the waves, because I never wanted to be a consummate Elliott wave counter. I just want to be able to see the market cycles in the charts, and that's what I'm going to try to teach you today. So this is the 8-wave market cycle. This is the market map. And as you know, trading is challenging due to market uncertainty. There is no crystal ball, and trading market swings can create an emotional roller coaster. Tell me about it. I've been trading since the early 80s, actually, 1980. And it's the 80s were an emotional roller coaster for me. And that's what got me to actually write The Trader's Pendulum many years later. And it was published at the end of 2015, because I learned so much about trading the markets during that entire time period. But for me, understanding the market cycles and timing is crucial for success. So a structured roadmap and simple timing tools can provide clarity and consistency. This is the roadmap. On the left, we see, within this channel, we see an uptrend. And then we see a major correction. At the top of the uptrend, this is where traders get greedy. They're optimistic. They're exuberant. They load up on their positions. They have FOMO. They don't want to miss out. And believe me, I still get there. When the market is going up, I want to be long. And when the market is going down, I don't want to be long. So we need to train the brain to almost be a contrarian, to think, we will have a retracement, and I don't need to get greedy up here. I can be patient and wait, because down here, when most traders are still long, they become fearful, they're panicked and discouraged, and they end up bailing when it is when we should be buying down here. And I'm going to show you more on that. But these are some of the issues for traders and their consequences. The volatility in the markets causes a lot of excitement, like the markets are moving. So what is the consequence? That traders trade impulsively, leading to an emotional roller coaster ride. Some of you might relate to this. And timing market entries and exits and getting it wrong, what's the consequence? If you buy high or sell low, you're chasing the market, or you're exiting too soon. You're missing out on potential gains. These are all things that traders face. And then not making consistent profits. Well, we know that one bad trade can negate a week's worth of profits, which is why we need to use risk management, and we need to really save our profits, hold on to our profits, and try not to make silly mistakes and trade impulsively. Lack of boundaries and rules. when I have a lack of boundaries and rules, the consequences that I feel lost and unstructured, and it results in winging it in the markets. 5, easily influenced. Consequences, lack of independent thinking and following the herd mentality. When I showed you that 8-wave market cycle at the top of the market, that's where the herd mentality kicks in. And in fact, elite wave analysis is very much based on that theory. It's based on the emotions of the traders at the time. So up at market tops, the retail traders are just pouring in. That's the herd mentality. And number 6, no clear goals. What's the consequence? Lack of direction and measurable success in trading. We all need to have goals, especially in trading. So what is the summary? A need for a structured approach, effective tools, and accountability. Accountability is really, really important. When I left JP Morgan in 1994, actually, I was with them for almost, I started in December of 79. I set up a futures trading account, and I traded 20 different futures markets in my husband's office and by myself for 2 years, and I paid $2,500 a month for data. That's right, I had to make that much in order to break even every month. And accountability, I didn't have any accountability, only to myself and my husband because he was in the office. So I feel it's just so very important, which is really why I started the community at FX Traders Edge, so that traders can be accountable to one another. So I always tell my coaching clients, get a trading buddy or be accountable to me, be accountable to somebody so that you can report your profits and losses to somebody and you're not just hiding them. So the wavy tunnel solution, introducing our roadmap and simple timing tools. What if you had a system that explained how to understand and trade market cycles using the market roadmap, identified where to place trades for optimal entries and exits? And then what if you had simple tools to trade the roadmap effectively and scan for trades and follow a trade plan to effectively trade the setups? And then what if you had accountability to do what you say you're going to do? And this system works if you have have other mentors and they're telling you which stocks to buy, put the wavy tunnel on it and see what it looks like. I'm going to show you how to do that in this presentation. So here's Warren Buffett, the contrarian: be fearful when others are greedy, be greedy when others are fearful. That's what we need to be up here. We need to be fearful up here and greedy down here. We need to change the brain, okay? On the right, we have the market map. On the left, this is the NASDAQ futures, and this was taken a while ago. Can you see how the left-hand chart maps out the market map on the right? So up here, this is where traders are greedy. I don't know if you can see my cursor. And then we have a significant correction. And down here where you see the gray arrow, this is the time to be buying, not up here. Now I'm going to show you how to read and interpret the market roadmap using the Wavy Tunnel Pro Indicator Suite, and how to anticipate market direction by leveraging this market roadmap to foresee market movements, and how to understand market turning points and grasp the implications of key market reversals. So we're going to do a case study showing the SPY ETF, so various examples on multiple time frames, showing the market roadmap in action using the simple timing tools. So the first example is going to be a weekly chart on the SPY. It's a long-term investment strategy utilizing the roadmap to understand the broader market cycles and long-term trends. So this is the weekly SPY. And up here we had a purple arrow. It turned gray because we subsequently made a new high. And this is following the market roadmap. Now I can tell you what these moving averages are, but if you want all of these arrows and triangles and dots, that's part of our proprietary indicator suite. But I can certainly tell you when you can set up the moving averages so that you can see the market roadmap yourself. So this is the wave, the 34 EMA on the high, low, and the close. and this is the tunnel, the 144 and 169 EMA, and then the filter is the 12 EMA. But look what we have here. In October 2022, we had the gray arrow pointed up, and this gray arrow said that maybe we are nearing a bottom. And look what happens. The wave is separating from the tunnel. We're in a very, very strong uptrend. And once we break down through the wave, my target is always going to be below the tunnel. That's what I look for, a move below the tunnel. And this pattern shows up on the weekly chart, on the daily chart, on the 4-hour, the 1-hour, the 15-minute, the 5-minute, the 2-minute, the 1-minute, the tick charts. These patterns repeat themselves over and over and over again. This gives you a gorgeous opportunity, gorgeous level to go long the market. And then look what happened. Now we're going to go into August of 2024, looking at the daily time frame. And this was the chart looking at the daily SPY. And I call this finding C because after we have a significant uptrend, we typically have an ABC. This is a pattern in Elliott wave analysis. It's called a zigzag. Not all corrections are created equal, but this ABC pattern falls very nicely with the Wavy Tunnel Pro, where we break down below the wave and we end up below the tunnel. And this is the level to look for confirmation to go long. And you can see the 3-wave pattern right into the tunnel. And this occurred in August of 2024. Then I'm going to show you a recent drop right before the election on the 4-hour chart. Notice we're going down the time frames because we're not going to see we have not seen another weekly signal. That occurred once in October 2022. Since then, we've had several daily signals and multiple 4-hour signals. So I'm sure you can I hope you can understand why I'm saying that. So this is the 4-hour time frame for medium-term trend analysis and trade setup. So again, we're applying the market roadmap to capture midterm opportunities and managed trades that we find. Well, look here. Look here. This is an incredible opportunity. The same roadmap, the same exact roadmap. So we have the gray, we have the purple, and then we have the color code goes purple, then gray, then yellow, then red, then blue. So we had the gray, and then a bottom red, a top red. We have opposites for all of these dots, and then we get the gray. And this was just a beautiful opportunity. I mean, this was right before the election, so yeah, it was right before the election. So I'm not going to say, close your eyes and buy it right before the election. Most people wanted to wait and see the results, but the pattern showed up. The pattern said, buy me, buy me, buy me. And this is what I look for, and this is what our scanners show on when you run it on all of the stocks and commodities. When you run it, this is what you get. It tells you which of these trades are setting up and on what time frames. So let's look at the ES futures on the 15-minute time frame for intraday trend analysis and trade setup. Again, we're applying the same market roadmap. And this is on the ES. So again, we had a purple. It turned gray because we made a new high, and then the opposite gray. This didn't quite go below the tunnel. Sometimes we don't, but this was still a signal, and a great signal on the 15-minute chart. I do day trade futures personally, so I am looking for these opportunities all the time. I'm following the market roadmap, and I'm taking my trades based on the Wavy Tunnel Pro setups. Now let's just look at a 2-minute time frame on the ES futures, and then I'm going to take you over to some ETFs, and stocks. This is an intraday trend analysis and trade setup, similar to the 5-minute chart I guess we looked at the 15-minute. So this is the 2-minute. Same pattern, same exact pattern. on the ES. So we have the purple and then we have the gray. And this is on NinjaTrader. So this actually spits out the profit taking targets. You can change this. This is a variable that you can modify. And the green arrow says it's time to buy me. But you got the gray arrow, and that was also saying once you know what goes into it, it's time to buy me. So this is the setup that I really wanted to show you today, because I think it's a very important one to integrate and to understand, so that you're not caught holding the potato up here only to watch your profits sizzle away as we trade down through the wave, heading towards below the tunnel. Okay. So summary, market roadmap in action using simple timing tools. That's what I've shown you so far, the simple timing tools. By mastering the market roadmap using simple timing tools and applying it across different time frames, traders can enhance their ability to follow market movements and make informed trading decisions. This framework provides a comprehensive view of the benefits of using simple timing tools for trading stocks, ETFs, futures, and Forex across various timeframes, from intraday to long-term strategies. So let's look at some ETF and stock examples and understand the setups. So I took this a couple days ago. This is the sectorspiders.com sector tracker. So these are the 11 sectors of the S&P 500 year-to-date returns. So you can see the massive year-to-date returns in all of these sectors. Phenomenal. The S&P up 25.7%. And what's leading here? Communication services, followed by financials, followed by, well, you can see the returns. And real estate is the lowest return. So I look at the spider sector quite frequently, and I'm going to show you the top stocks in the S&P 500 and show you the patterns in just a second. But I also took the last 5 days since the election. Okay, since the election, these are the sectors that have outperformed since the election. So this might give you a good glimpse into what's to come. Okay, what's to come. So what is outperforming here? Consumer discretionary, communication services, okay, not so much consumer staples. Energy, pretty good. Financials, very good. Not so much healthcare. Industrials, pretty good. Not so much materials, not so much real estate. Technology, okay, and not so much utilities. So this is, I would take a screenshot and kind of have a look and see how this plays out in 2025. Okay, this gives us a little bit of a clue. But let's go back to the top, the S&P 500 index holdings. And what I did was I just clicked on the S&P 500 right from the sector, from that list, and I sorted for the biggest percent change. Okay, and I'm just going to show you, we're going to go through all of these stocks quickly. I'm just going to show you the charts of all of these stocks. And these are all of the ETFs that these stocks are in. Okay, and these are the greatest percentage changes year to date. Phenomenal. Okay. So this is the first one, VST. Now, I took this in September, okay, this screenshot in September. And I remember saying then, because I've been showing these, I remember saying then, this is a beautiful pattern, beautiful buy, and the market gave us another chance to buy. We had a noble, a gray arrow, and then a red. And I remember saying then, this is a great opportunity to get in right here, okay? And where I circled it, that's when I said it, and that was a great opportunity. And now look to see what happened. So this pattern shows up. It showed up on our scanners, but I just one day I said, you know, I'm just going to take a look at all the top holdings because I'm pretty sure we had this set up on most of the stocks. This is Palantir. We didn't have quite the same setup, but we did have a correction. We would have seen this setup on a 4-hour chart, and this setup occurred in August, and now look where we are. But the beauty about this is that every time, if the wave is above the tunnel, every time the market extends and then comes back into the wave, it's buyable. Like that's your buy zone. Now we're kind of stretched, right? But this was a great buy area. This was a great buy area. NVIDIA. Yeah, same story here. In September, I said, okay, we had a great opportunity to buy here in August. This is our setup, our market map. And then we had a red right into the tunnel. I said this, and I personally did buy at this point. I said, this is a great area to go long right here if you missed it. And this is where we were. And of course, we started to trade up. But if you missed it here, fine. Every time the market extends and comes back down into the wave has your back here when it's in an uptrend. And yes, we have the blue dots to confirm, and we have the oscillators going on here. We call these the bungees, which help as well. But every time when you're in when there is a good stock, you want to be buying, not up here, you want to be buying on the retracement. And here's another one. Same pattern right over here, same pattern. And then if you missed it, you buy on the retracement, you buy on the retracement. So all of these stocks have outperformed, okay? They've all outperformed. That's not to say that they're going to continue. I'm not saying they're going to continue with these massive returns. I don't know, but I'm going to watch the market map, the Wavy Tunnel Pro setup, and I would be content to continue buying as long as we're in the wave. And as soon as we start to trade below, or if the market reverses somehow and we have a market sell-off, then I'd be looking for a return to the tunnel again. But until we have proof of that, I guess one could continue buying into the wave on retracements. Now here we had a false breakdown, and then it came back up again. Here's another example where this was on the daily. So we didn't get the gray arrow down here. It actually retraced quite a bit more than, so we got a purple arrow. It was we would have seen this gray arrow on the weekly chart, okay? And then it started to turn around again. And then again, this is very, very steep, and we are actually, price is just tracing the 12 EMA filter. It's not even giving us opportunities to buy into the wave. Now this is one which didn't give us the pattern, but it was one HWM, one which has remained bullish. I mean, the wave has been above the tunnel the entire time, and every time the market comes down into the wave with the yellow dot or blue dots or red dots, it's been buyable. Now, no. Okay. Here's the pattern, the same pattern. We had a purple arrow. This is CEG, purple arrow. Then we had the gray arrow, and this is beautiful. A, sideways, B, C, A, B, C. And then we had the gray, red, red, same pattern. Okay, but now look what's happening. Now we got the purple arrow and we had a blue, blue. So we started to come down, but price didn't move up and make a new high. This is called a 1, 2, 3 reversal. When the market moves up and fails to take out the price high and then turns around and starts to come down again, that's when we have to anticipate a deeper correction, possibly into the tunnel. And here's another example, same pattern. all the way back here. This happened in May of 2024. And unless you have a scanner, like you're not gonna find these necessarily unless you just go through, all the stock, all the charts yourself, and then you would see these opportunities. But this gave many beautiful opportunities to buy and then blast off. Now, no. Okay. Same here, NRG. We had the purple arrow here and the gray arrow here. So these are all stocks to watch. I mean, they're very, very strong, and I like to buy strong stocks, but I'm certainly not going to suggest or enter myself after we've accelerated. I don't like buying after an acceleration. I like buying on the retrace. Let me just see what time. Okay, so market roadmap mastery using the Wavy Tunnel Pro Elite Scanner tool. So this is my next section. Like that, I showed you one way to look for strong stocks and to look for strong ETFs, which is useful. You can take that away from this presentation right away and hopefully use some of that I've shown you today. But now I want to show you how you can scan for these market roadmap trades using the Wavy Tunnel Pro Elite Scanner tools. Now, our scanners identify the trend and end of trend trades. They recognize the market roadmap turning points with trend line breaks. I showed you one pattern, but we do have 6 different Wavy Tunnel Pro setups plus trend line breaks that are available on our scanners. So master trade entry and exit strategies and implement trade plans for 6 Wavy Tunnel Pro setups and high probability occurrences. Now, the good news is I just love using the Wavy Tunnel Pro indicators on my charts. Like, I don't use anything else. That's what I use. I just love it. And I'm going to teach you the 6 Wavy Tunnel Pro setups. I'm going to offer you at the end an opportunity to get the Wavy Tunnel Pro indicators and scanners if you'd like. And it comes with a fair bit of education showing you all the Wavy Tunnel Pro setups. So let's just do a little bit of a case study, Elite Scanner in action on the platforms. We have the scanner on MotiveWave, TradeStation, NinjaTrader, and MT4. And hopefully we'll have it on Metastock at some point soon. We're working on that. So that would be great, just great. So let's start with MotiveWave. And the MotiveWave scanner, okay, you can't really see the stocks on the left, but all of these stocks came up with the pattern that I just described to you. And the score, 1 very good, 2 good, that has to do with the number of candles that it found that it found the pattern. And notice that I'm scanning on the weekly, the 4-hour, and the daily, and the ones that I have highlighted in red are the ones that are long. All of the others are short. Okay, all of the others are showing short signals. And I'm not interested in the short signals, I'm just interested in the long signals. And the other thing that I want to say is that the longer the time frame, like the weekly and the daily, are probably more robust than the 4-hour. Okay? And if you run it on the hourly or the 15-minute or the 5-minute, you have to, those are short-term trades. Okay, so you can have the setup and you can get in, but you've got to get out, okay, because they're short-term trades. So let's have a look at these charts. And oh yeah, so this is the rest of it. The scan, I ran it on 500 stocks, and the scan found 77 results. So again, from the weekly down to the 4-hour, I only ran it on those 3 time frames, so it found 77 results. I'm just showing you the top results. I'm not showing you, well, no, actually, I think these are all 77, right? So again, I'm only showing you the longs, okay? So MRK, now the ready, we have a signal and we have a ready. The ready is when the gray arrow appears. The signal is when we hold the level and the 12 EMA filter comes down and we have a close above the 12 EMA signal. So sometimes the trade will pan out. Sometimes it won't pan out. Sometimes the market will continue to go lower. We do want to see that confirmation where the price closes above the 12 EMA filter, or go down to a smaller time frame and use a 1, 2, 3 reversal on a smaller time frame. So I'm just showing you the setups and ones that came out on the scanner for the ready. So again, the market map. Here we have the purple arrow, and then we have the gray arrow. A deep, deep correction, ABC correction. This is beautiful. And that also says that if you're long and if we start to come down below the wave, you can expect a move down to below the tunnel. It doesn't always happen. If we're in a very strong trend, we might stop midway and then continue back up again. I just want you to know that. The next one was KO. So same pattern, purple arrow, ABC, here we are, gray arrow, great one to watch for a market reversal. Here's another one, EFX, great one to watch for a market reversal. This is just really, really nice. I'm just trying to, yeah. So the other thing that I have on here is I have the awesome oscillator. So let me just tell you a little bit about the awesome oscillator. The awesome oscillator is a 534 oscillator, so using Fibonacci numbers. And how can you tell if this purple arrow is going to stick and if we're ready for a market reversal? Well, one indicator that I like to use is the awesome oscillator. I like to see if we have divergence between, let's say, this price high and this price high. We squeaked out a little bit of a high, and we do. So the price made a new high and the awesome oscillator made a lower high. That's called divergence. So after we have an uptrend, I'm always looking at the awesome oscillator for a awesome oscillator divergence. It means that price is running out of steam and that we could be ready for a market reversal. Sometimes we get double and triple divergence and the market continues to move up. So our confirmation is when we break down below the wave and then we come back above the wave and then we turn down again. That's our 1, 2, 3 reversal for this pattern. And KMB is another one. This other line, by the way, this is the higher time frame tunnel. So this would be the weekly tunnel. So same pattern. A, B, C, need to look for some kind of confirmation here, but this popped up on the scanner. Now let's take a look at TradeStation. TradeStation is very similar. I didn't run the TradeStation scanner this week. This is an old scan, so don't take a screenshot of this. It's an old scan, and okay, this is on the daily. Usually I like to run it on the weekly, the daily, and the 4-hour like I do on MotiveWave. But this is a similar type of scan. We also have a trend line break scan on here, so you can run a trend line break and see. We have 4 different trend line break scans actually. So when we have a trend line break consistent with this breakout 4 trade, I think it's powerful. It's very powerful. NinjaTrader. Let's have a look at NinjaTrader. So NinjaTrader has a market analyzer. So I ran all the futures markets here, and this shows us the daily upper, the purple arrow, the upper and the lower purple, the upper and the lower gray. This is on the daily, and then on the 4-hour and the 60-minute. I don't use this so much because I'm looking at the futures data markets that I want to trade every day, so I don't really need the market analyzer. Although you can use the market analyzer on stocks on NinjaTrader, you can. So, but this showed us that we got the daily lower gray arrow on these 4 major indices. So this is an example. I showed you this on the SPY already. In August, that daily. So it occurred here on the ES as well. Or this is the NQ. Okay, this is the NQ, sorry. So it occurred on the NQ as well, where we had an A, I labeled this ABC. And these are our trend lines that are automatically drawn. Okay, by the way, they're just automatically drawn. And when I said that when you're at a market top and you have a trend line also at the market top, this is really great because this is the breakdown below the wave as well. Okay, which I explained, you know, that when it does break down below, we're looking for a move below the tunnel. Okay, here's the ES where we have the ABC. So same pattern. This is our market map, and here we have it. Now, let's look at some intraday trend analysis and trade setup and applying the market roadmap for intraday futures trading. So on the left, okay, don't look at the right yet, we have the YM, and this is the pattern. We get the purple. Okay, this was a 4 hour, so this is not intraday. We got the purple arrow, this is swing. We got the purple, and then we got the gray. And then the system automatically spits out these profit targets. And on the right, this is what happened. So taking this trade, you'd be targeted out of all of your trades, okay? So this is kind of cool. It spits out the profit targets for you. And this is a 2-minute ES, same pattern. I stretched it out a bit too far, I guess. And where we have the purple and then we have the move down into the tunnel. Great trade, you know, great trade. Here's another one. This is a tick chart. Okay, one of my students said that they trade ticks. So we were looking at some tick charts. And here's a tick chart pattern. Same pattern. Purple arrow, gray arrow, and we got a few trend line breaks happening here at the same time, and we got our profit targets here. So this automatically spits out. It's not something that I draw, it's just automatic on the chart. When you're trading, it pops up. Okay. Now MT4. So MT4 is, it's a Forex trading platform, and one of my colleagues, Neil, runs the New York trading room and the London trading room, and he uses the MT4 platform. We first developed our scanner tool on the MT4 platform. So Neil runs the trading room 4 times a week, twice in London and twice in New York, and he is an absolute expert on using the Wavy Tunnel Pro and interpreting, analyzing the charts, and telling you what's going to happen next. He's absolutely brilliant. He really is. He's better than I am at that. That's for sure. But we use it differently. So I ran this on the Forex pairs, on the daily, the 4 hour, the 1 hour, and the 15-minute. And I don't have the chart examples to show you. I don't think I showed you. I thought that I would be running out of time. So I didn't come up with chart examples, but let me just take you through what you can get on the MT4. The breakout 4 is the name of the pattern that I showed you today over and over again when we get that lower gray arrow. So on the MT4 platform, here it shows that we had it when I ran this on the daily euro for a long. If it's long, it's green. If it's red, it's short. On the dollar yen daily for a short. On the Swiss yen, H4 for a long, and etc. And these are the number of candles ago. that it showed up. Now we also have the 4 trend line breaks here. So you can see, and when we have an asterisk, it means that the pattern has already disappeared. So you're only looking for like low numbers without an asterisk, like 2, 2, 2, green, red, red. And this is nice. The New Zealand yen on the daily, you got a short here, and then you got 2 trend line breaks short. So that lines up. And the same with the Aussie yen. Okay, so that's how you read that. We also, on the breakout 1 column, if I would sort by that, this sorts for the purple arrows. So when the purple arrow is like the last candle, you're going to get a low number, a 1, a 2, a 3, a 4. Okay, so there are many ways to read this. Now, this is just the Forex. You can also look at the stock indices and bonds. And this is what I meant here when I sorted for the breakout 1. We got purple arrows up here, but this was taken a while ago. I didn't do it recently. And then commodities. So the same for commodities. So that's our MT4 platform, very, very developed. So what are the key benefits? And I hope it's part of the Wavy Tunnel Pro solution: mastering the market cycles, anticipate market direction with confidence, achieve better timing for trades, improve trade entries and profit targets, engage in rules-based trading, enhance consistency through structured trading. So we have rules for all of our trades, and it gives us an opportunity to develop independent thinking with clear trading goals and reduce the stress and uncertainty in trading. So we have a program for this. So by following the Wavy Tunnel solution, traders can navigate the market challenges with confidence. That's really what it's about, having the confidence to navigate the markets and to see these patterns. Like, I'm really big on patterns. So everything that I've ever developed during my trading career has to do with, I'm a visual person, it has to do with seeing the patterns. So I like looking at the charts and being able to interpret the charts based on the patterns that I'm seeing. And I like looking at the market cycles. And so those are the patterns that we have created in our scanners. Success stories from satisfied traders, and disclaimer: testimonials may not be representative of other clients or customers, and it's not a guarantee of future performance or success. I have to read that. Jody Samuels' Wavy Tunnel Pro, based on elite wave theory, helped me tremendously in recognizing fractal patterns regardless of asset types, such as stocks, indices, commodities, Forex, and futures. Since taking her program, I've been more conscientious in preserving my liquidity, slowly growing and rebuilding my account, and I've gained tremendous confidence in placing my trades. Okay, that's great. What sets her strategy apart from other trading schools is the depth and breadth of her experience and the culmination and creation of the Wavy Tunnel Pro tools, and also my team. Okay, I have a great team. It's not me by myself. The Wavy Tunnel Pro removes trading ambiguity and helps you set up quality trades. In my short time as a trader, I've cut down on my learning curve by decades, and this system has helped me focus more on finding more actionable trades, refining my trading process, and taking profits more often. Thank you, Jody. You're welcome, Mario. So what is the offer? The offer is the Wavy Tunnel Pro Elite Tool Scanner and Indicator Suite. So for $49 for the first month, if you go to wavytunnelpro.com/elite, that's the promotion here, you will gain exclusive access to our market roadmap and timing tools, and you'll get the education to understand how the markets trade in cycles and use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. It works with stocks, futures, ETFs, Forex, and cryptocurrencies, works for day swing and position trading. Find precise entry points for options strategies. Embrace this suite of professional tools to trade like a pro. So if you have other indicators, that's great. I often tell traders, if you have other indicators, you can use this as an overlay. It's not a problem. we are the platforms that the indicator suites and scanners are on, are MetaTrader for TradeStation, MotiveWave, and NinjaTrader. And the indicator suite without the scanner is on Wealth Charts. So the first month trial is $49, and then it's $99 a month. What are some of the bonuses? Elite tool scanner training, live training sessions on the key Wavy Tunnel Pro trade plans, dedicated Discord channel, one-on-one coaching session with me, and the trading room, 1 month access 4 times a week during London and New York. And I'm also meeting once a week. You're welcome to join me to go through the Wavy Tunnel setups on the futures markets. So first month trial, $49. That's what I have to offer you today. If you have any questions, please feel free to email me, Jody at fxtradersedge.com or support@fxtradersedge.com. And that's about it for me. Are there any questions?
Yeah, it looks like there's a web address on the bottom of that site, but it's getting cut off for me.
wavytunnelpro.com/elite.
Okay, let me type that out.
ELITE.
Let me type that out for everybody.
Here, let me.
Tunnel.
Here,
oh,
how's that?
That's
Okay.
great. I can now read it and I can type it. So we do have some questions that came in.
Okay.
Yeah, it's really interesting that that was just cut off by GoToWebinar, but it is in the chat, so you can just click on it in the chat. I'm sure Greg is going to be putting it in the other one. Ginger wants to know, is the wave a Bollinger Band?
No, it's not a Bollinger Band. Bollinger Band is something else.
Triton says, what moving averages are you using for the buy area?
For the what area?
The buy area? I think he's confusing with the bands with the
Okay, the purple moving averages are the 34 EMAs on the high, low, and the close, those 3 bands. That's what he's talking about.
Yeah, okay, cool. Thank you.
Okay.
Greg wanted to know, how would you interpret the diamond on the chart of the SPY that you had earlier?
Okay. Okay, which time frame?
Oh, I don't know. It was a little bit earlier.
Okay, so the diamonds, we have diamonds and we have arrows on this, and it's presented differently on the different, well, here, let's look at, it's presented differently on the different trading platforms. So I can just tell you what the biggest swing is going to be the purple arrow with the yellow. On this, on MotiveWave, it shows a yellow diamond underneath the purple arrow. And then comes the gray arrow. And then comes the yellow diamond on its own. And then comes the red diamond on its own. And then the blue diamond on its own. So how do you interpret? Those are the ends of swing moves. For short-term buy and sells, you want to use the blue diamonds.
Gotcha. That makes sense.
Into the trend.
And Joseph wants to know, does it work on Metastock? Shall I answer that?
Go ahead.
Very soon. We're working on it right now. We hope to have it done for today, but hopefully we'll have it done very shortly. Watch for us to do some very special webinars when it comes out.
Yeah, that's very exciting. I can't wait to have it on Metastock. Can't wait.
We've sat down with the programmers. We've done the talking. We've got the agreements done. We're just working on it.
Yeah, excellent.
Somewhere in the Rockies wants to know what the white line at the middle of the bottom is.
Okay, so the tunnel is the 144 and the 169 EMAs, and the white line at the bottom would be the higher time frame tunnel. So if you're on a daily chart, you're going to see the weekly tunnel on the daily chart.
All right.
If you're on an hourly, the time frame that we would be showing is the 4-hour. Yeah.
Lots of good questions right here at the end. That's it though. So
okay.
The website address again is www.wavytunnelpro.com/elite. If you're watching on GoToWebinar, just click the chat button, chat area on the right. You'll be able to click on that. If you're watching it on the YouTube, it's off in the chat on the right. Thank you very much, Jody. I appreciate that.
Thank you, Jeff. A pleasure.
All right. And then as soon as we get that done, we'll let everybody know for Metastock.
Amazing.
Big thanks.
Okay.
Let me do this.
So I'll stop sharing.
Okay. Yeah. Thanks for coming today. We appreciate it.
Thank you so much for having me. Bye-bye.
Bye. All right. Another question that came in. Let's go ahead and do this. Make me the presenter. Let me show my screen because I know kind of when we do that, let me make sure it's the right one too. I had an incident yesterday where sharing the wrong screen. That's never a good thing, especially like if you have like a big spreadsheet of potential prize winners coming. All right. Cool. I do want to say thank you to CMT Association for sponsoring the event today. Among all of the sponsors, they're definitely one of them, but they do a great job. Tyler's going to come in on Friday. He likes to talk about technical analysis. He does a really good class. But one of the things that opens my eyes every time he talks is how much, like if a CMT designation after your name can help. And so that's what they do. Like if you're interested in working for a bank or you are working for a bank and you want more assets under management, more responsibilities, all that stuff, they've actually done a lot of research about how much a CMT can actually help you with that. And so if that applies to you and you're interested in getting that CMT designation, you can find out more about them at cmtassociation.com, org. You can call them at 646-652-3300. We here at Metastock really appreciate the support that they've given us over the years. And there you go. Thank you, CMT. All right. A very, very well-respected nonprofit organization as well. Greg, it is. Oh, there's a question in chat. CJ wants to know how to get today's presentation. CJ, if you go to youtube.com/ hello.
Hello.
Sorry. No problem. Hi, guys. All right. CJ, if you go to youtube.com/Metastock, you'll be able to get all of the recordings yesterday, today, and all of them. In fact, if you ever run into any problems with the GoToWebinar live stream and you want to go to the backup stream YouTube, go for it. So you're more than welcome to watch it in either place. As soon as it's done, it's available because we just stream it straight to YouTube all day long. So youtube.com/Metastock for that. Greg, let's give away the prize of the day.
That sounds great. Of the day.
So
this
yeah.
is the big apple. This is the one everyone's been waiting for, right?
The Metastock prize, yeah.
Meta prize.
I actually kind of think we should do it again. I'll let you choose. Should we do it based on kind of people that have been chatting, or should we do it based on a number draw?
I think chatting.
Okay, cool. That's fine.
Which essentially leaves me out of the equation.
Yeah, well, you can help me though.
Okay.
Our cameras are on, right? I cannot see mine.
Yeah, yes, both of our cameras are on. However, yeah, they're both on.
That's fine. Mine's somewhere over here. I don't need to see me. So we're going to give away. This morning, our Rahul came in. He talked about Armo, the Armo ATM4. We're going to give away 3 months of that with this masterclass training. We're going to give away 3 months of Metastock. Metastock's been the highest rated software in its price category for 31 years in a row by the readers of Stocks and Commodities magazine. We've talked about all day about the different things it can do to help you find opportunities, test opportunities. That's also going to be included. We're going to give you our premium news service as part of that, the Metastock Zenith. Zenith is a product that was developed by Thomson Reuters. It's now owned by London Stock Exchange Group, but it's still powered by Reuters News. They have basically 3,000 or so journalists and about 300 different news bureaus. They have coverage for almost every market on earth. Really good research, really good fundamentals if you're interested in anything like that. It's like getting Bloomberg, but you get it for a much more affordable rate because we only cater to retail traders. So you get that as part of it. We'll give you 3 months of that. We're also going to give you 3 months of Learn Metastock to help you learn all of the tools that are in there. We're going to give you that white glove installation appointment that we've been talking so much about, unlimited access to our support. All of that is going to be included. Greg, did I miss anything important in there? Anything you want to add?
I don't think so. I think you were very comprehensive.
All right. So here's what I'm going to do. I'm going to go ahead and show all the questions because I only show the ones that I've not answered. And then I'm just going to come in here and I'm going to scroll around a little bit. And I'll just have you tell me when to stop.
Okay, tell me when you started scrolling.
I'm scrolling. Am I all the? Okay. I'm all the way to the top. I'm going to go down now. Go ahead.
All right, stop.
Okay, Ricky asked a question, Ricky L, about the Victory software earlier, and Vince Vora was doing a presentation. I'm going to go ahead and send this back to the chat.
While you're doing that, Jeff, I'll just remind people that if they want to be eligible for the prizes that we do between almost every presenter, just go to metastock.com. There's a very large banner on the top, and you can click on that and register, and you'll be good to go.
His question was, does the Victory software require the Metastock platform? So you're set, Ricky. You're good. We're just setting up in 3 months. So if you're still interested in trying out, we did talk a lot about Victory, and it works best on Metastock with the scanning and the expert advisor and stuff like that. So maybe you can pick that up now. All right. Thank you, sir. Appreciate it.
You're welcome.
Don't worry. If you also want to get an extended trial of Metastock, you can. If you pay for a month, we'll give you the second and the third month for free. The end of day version is $75. The real time would be about $265 for all the real time data. That would include any data for anywhere on Earth, plus exchange fees for it. So $75 if you want to do DC, $265. If you buy a month, we'll give you the second and third month for free. Basically, that means for about $25 a month, you can try the software that's been rated #1 in its price category for 31 years in a row. I wouldn't trade without it. You should try it out and find out why it's been rated so high. And really, if you start up now, December, January, February, you'll be running to almost Valentine's Day. That's not that important, but you'll probably have a lot of downtime during the holidays to kind of play with the software, go through the tools, really kind of take it through the spaces. Give it a go. It's a tool. There's a reason it's been rated so highly for so long. Give it a shot. Metastock.com/comp promo, metastock.com/sales chat. Call us 800-882-3040. Thank you very much for the assist, Greg. I appreciate that. All right, and last but not least, our next presenter is Alla Peters. She's going to talk a lot about the Fibonacci method. We've had her in the classroom quite a number of times before. We love her, but we're going to bring her back. Alla, how are you doing today?
I'm good, Jeff. Thank you so much for having me. Hello, hello.
Hello. I'm going to make you the presenter real quick.
Thank you so much.
And then you should be able to, it should pop up and ask you if you want to switch.
Yes, please let me know, as I have 8 monitors. Please let me know, since I work, let me know when you see the webinar option. Okay, let me go back up. Is it the webinar option? Yes?
Let's see, I don't see it just yet. There's usually a little bit of a delay. You got the right screen. In a 1 out of 8 chance, you've got it right on the very first try.
Correct? Yes?
Yeah, you've got the correct one, yes.
Okay, amazing.
Yeah, first try, right?
Yeah, so how good is that?
Yeah, it's awesome. Very, very good.
So
okay, I'm going to let you go ahead and go. Thank you for coming.
Thank you so much for having me. So ladies and gentlemen, my only request, please allow me to present, and I will review all of your questions after presentation. And I promise you, I will do my best to make it interesting, because I live and breathe what I do. Let's start. Hello traders, this is Alla Plocher, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci trading system. In this webinar, I will be addressing how Alpha Fibonacci can improve your trading. And as always, required disclaimer. Every single thing you will witness in this webinar is to educate you and empower you. Nothing constitutes a financial advice. All software and trading systems shown without any guarantees. I hope you understand and respect that as required disclaimer. No student had ever been paid for testimonial, and I hope you recognize that trading any and every instrument requires risks, and please trade only with risk you can afford to trade. In this webinar, we'll cover how Alpha Fibonacci trading system and software identifies precise entry stops and targets across all instruments. I will show and introduce you how you personally can buy and sell institutional trend reversals and trend inceptions in advance with Alpha Fibonacci trading system. I will encourage you how to remove pain from trading with precise Alpha Fibonacci trading system traded globally since 2011. And most importantly, you will witness very final special trading bootcamp offer with private mentoring package with savings up to $10,000. Something also very, very important that you understand and respect. This is a webinar. In webinar, I'm very limited on time. And as much as I live and breathe what I do, I cannot teach you everything. So therefore, if you would like to review much more details, please sign up for the ebook where you can learn so much more in detail about Alpha Fibonacci trading system. So briefly about myself, I arrived to US as a refugee in 1989 from USSR, originally from Ukraine, with baby on my arms as a classical pianist. I'm the luckiest girl on the planet to be American in this insane world that's losing its mind. I hold multiple degrees with experience in Johns Hopkins psychiatry and brain research, which I was teaching this morning to my incredible students. 2004, I discovered Fibonacci. I fell in love with Fibonacci. It is my obsession. In my work, I combine obsession with Fibonacci and passion for humanity. I recognize that I love solving financial markets. In 2004, in 2008, I witnessed the power of the very first trading system I developed. I refused to work for financial institutions. I launched Fibonacci Trading Institute in 2011. Since 2011, I coached thousands of traders in US and more than 50 countries how to trade with ultimate precision with Alpha Fibonacci trading system. I continue developing proprietary systems non-stop as I see and understand about financial markets so much more. And this is what I've done this morning as my incredible students encouraged me to rest my voice to prepare for this webinar. So this is very standard email from top financial institution. As everyone probably knows extremely well, Goldman Sachs. So top financial institutions constantly courting me, but I prefer to do this. Spend time with traders all over the world, teaching humanity how to trade with ultimate success. So let's dive deep. Why traders have so many problems. It is absolutely not your fault. This is how financial markets design. As 99% that's approaching financial markets seen clearly instantly. Market loaded with $9 indicators that look so good after the fact. It takes years to recognize it is an illusion that looks so good only after the fact. But what happens to traders' brain? It becomes the major problem because it develops very dangerous, speculative, dangerous trading habits. So when you will see next what I was teaching this morning, you would recognize very clearly. You are the ultimate human beings that defines your quality trading. So first biggest mistakes most traders make: trading with speculative entries, speculative targets, speculative stops, all instruments, all time frames, all platforms, having absolutely no clue where to enter, where to exit. So how did it work for you in the last year, as you will witness what S&P have done despite horrific global events? The second biggest mistake most traders make is searching for magic bullet, chasing delayed indicators for years. So in order to become a successful top 5%, start trading as top 5% does. Stop chasing delayed indicators. Stop chasing lucky points. Start trading all markets as strategic, intelligent, precise chess across all instruments. So with the Alpha Fibonacci trading system, there is no more pain, stress, confusion, chasing market, losing money. You will never need another system ever again. So let's dive straight into it. This was my discovery completely by chance when I recognized shocking fact that pure price is exactly the same on all instruments, all time frames, all platforms. And Fibonacci what forms all markets into precise puzzle. So let's do this test so you can see clearly that you never, ever, ever want to block pure price with delayed indicators. This is what played out on my chart 20 years ago when I had a huge revelation that impacted my trading and building my systems forever. Does anyone know what this is? Of course not. But what is extremely clear? What extremely clear? It is pure price. But no one would have a clue what this is. No one knows what instrument time frame this is. No one knows what instrument time frame this is. My goodness, all of these charts are very different instruments, very different time frames, and can be traded on any platform you choose, when in fact, my goodness, this is actually Tesla, but it looks exactly the same as Apple Weekly. It looks exactly the same as S&P 15-minute. Wow! If you remove the label from the naked chart, you will never have a clue what this is. So why in the world block pure price? Why in fact not focus on simplicity and purity? And this is when I started building my system that applies to all instruments, all time frames, all platforms. Only difference, risk management and trade whole time. So when you recognize and remove all the complexities, all the noise, it allows you to focus on simplicity. Simplicity is the most important factor. Simplicity gives you confidence. Simplicity empowers you. And the power of the Alpha Fibonacci system, it allows you to trade all instruments, all time frames, all platforms, as you will see so much more next. So when you recognize that pure price for entry as all you will ever need, let's take a look and see what played out on Dow this week. Shall we? We've been in historical markets, as you understand and remember quite well. Wow. This is Dow Futures showing you historical institutional rally and spectacular institutional buy point that you knew quite well with the Alpha Fibonacci system well before the election. It was extremely clear that this level holding key level for buys and longs for institutions. So when you understand the power of this and you understand institutional rally on Dow right now overextended, and we're heading for extreme volatility next, you're preparing well. And you remember, this is proprietary tool you can install on Metastock. You can install on any platform you choose. You insert proprietary levels and apply proprietary retracement and place trades on any platform. Metastock has Fibonacci retracement tool. You insert proprietary levels and trade any instrument you choose. So if I zoom in on retail chart on Dow, here we go. This is election night, November 5th, very close to my birthday. We're discussing with my students well before. Absolutely no shorts near this level. This is what alpha Fibonacci chart looks like on Dow. You know quite well, 41,900 level is a buy point. If I bring to your attention what played out 5 days later when trillions of dollars entered US market, you are very well prepared. Number one, you are not shorting near. Number two, you're focusing on the chart appropriate for you, your risk management and your account. And that's the reason my students are dearest friends for life. Dow alone, any chart you choose to trade, as a retail trader, as a day trader, as position trader, as investor, as an index fund, you knew days and weeks before election not to short, but to buy Dow. So when you understand that alpha Fibonacci proprietary system available for all platforms and Fibonacci retracement tool can be inserted on Metastock, you trade any market, any time frame, with consistency, with confidence, with precision, with clarity, which is key to your success. So this is what played out in our trading bootcamp that I will give you much more details about. Pablo, complete beginner trader, was a very stressed out attorney when he came to me. He never pushed a button on a trading platform. In the bootcamp, he was sharing he's trading it all. He did not trade during stressful time in his personal life, but this week, 11 trades, gold, oil, euro, cable, Aussie. He's trading it all. And as he said, this week after election, American indices are stuck. I didn't like the charts. So when you come to the website, you can listen to traders podcasts from all over the world. Traders, where fathers bringing their children, husbands bringing their wives. If Pablo can do it, anyone can. I will walk you through later on in detail. Ken, trading crypto. We met in London multiple times. Movie maker made movie about Fibonacci Trading Institute and making another one this year. He only interested in crypto, and he is absolutely one of my biggest fans. That's it. Very different stories by Suda, who's trading options. And as she shared in a bootcamp this week, she was losing a fortune for 15 years. But when she started focusing on simplicity and purity, she's trading S&P, gold, Bitcoin, oil, silver. And this is what she made, 80K, and closed the trade today. That's it. Pure price for entry and proprietary alpha Fibonacci strategies and retracements for exits. And this is today in a trading bootcamp. I'm obsessed with my work. I'm obsessed with Fibonacci. But what is very clear, every single trader trades different instrument, different time frame, different platform. System is versatile, focusing on pure price. And when I, in the bootcamp, bring together traders' psychology and how it connects to Fibonacci, everything changes. These words are enough from William, from Paul, from Bradley, from traders, from US, Australia, Saudi Arabia, Moscow, Ukraine, Chicago, New York. This morning alone, this is our wonderful bootcamp, wealth of knowledge, invaluable, fantastic session. Anyone who applies your teaching and wisdom with proper mindset and diligent, persistent self-care and self-effort will soar in life. That's it. That pure and that simple. This is a highlight of my life. My students invited me to weddings. India this weekend. I only wish I could do this. But time and time again, every single one of these traders, different instrument, different time frame, different platform. So when we take a look on S&P in these historical markets, what did you know and what did you see? Shock or not? What do you see on this chart? Very clear black and white. Catastrophic global events, but institutions buying the market. Correct? How is it possible? War in Ukraine, but trillions of dollars placing loans? With the Alpha Fibonacci system, you knew this in advance. You are not shorting into reversal zone, you're buying at these levels. So if I bring to your attention the full clear chart that if you can easily reproduce on meta stock, these are the levels. You are not shorting into. If you are an investor, you're buying at these levels. If you are a retail trader, if you are a day trader, this is ultimate institutional points of entry. You are rising institutional power. Please tell me, has anyone seen good news in this world? How is it possible? Catastrophe starts in the Middle East, but S&P skyrocketing 2,000 points, bullish rally despite catastrophic events? That's it, black and white. As I was teaching in trading bootcamp this morning, you knew this a year in advance where price heading to. That's it, it's black and white. Nothing clogging up the charts, and you are very, very clear. Catastrophic global events do not mean a thing. Alpha Fibonacci system show you institutions buying the markets despite global tragedies and US inflation and all sorts of negative events. So here we are testing reversal zone. How to trade this? You must know the rules. We're discussing these rules in every bootcamp session. So if I bring to your attention so much more, in financial markets, you start understanding when you trade pure, the sky's the limit. With the application of alpha Fibonacci retracements, you know where to enter and you know where to exit. So when you prepare and trade with institutional trends, institutional entries and exits, you do not trade against institutions. What would your trading be like if you traded with institutions on all instruments? So when you come to the website, and you will see the invitation to our trading room. Simply fill in your name and you will be invited when you will witness in the live markets how you can do this, how you can trade and write institutional power. That's it. No complexities whatsoever, only the facts. And that applies to all instruments. Alpha Fibonacci trading system for all platforms, absolutely, of course, MetaStack. If the platform has Fibonacci retracement tool, alpha Fibonacci system applies, and you start trading all markets as strategic, precise trading chess. That's it. Pure, simple, no complexities, no speculation, no gambling of any kind, only ultimate precision. So what do I like to show to my incredible traders? Let me remind you. I like to show to my incredible traders that when they trade alpha Fibonacci system, they trade much better than top hedge fund managers on Wall Street. When Cassie Woods exiting her position on NVIDIA and tells the whole world that she's out, alpha Fibonacci system shows clearly this is a place to monitor for long. She takes catastrophic losses when in fact she should have been buying NVIDIA at this level. And you know all of this months in advance, and we discussing this when it's happening, when it's all over the news that Cassie Woods taking catastrophic losses on NVIDIA. When alpha Fibonacci system tells you to buy at the bottom. So here's NVIDIA now. My goodness. NVIDIA took profits off the table from critical key decision point 1, heading higher to 160 level. But how to trade this? You must know alpha Fibonacci rules. And that's how you write the power from the bottom to the top. And that's the reason husbands bringing their wives, fathers bringing their children to the course, pure and simple, as my traders trading so much better than top fund managers on Wall Street. Pure price for entry, alpha Fibonacci for exit. Precise, strategic trading chess. Alpha Fibonacci trading system guides traders to trade markets only with institutions as an intelligent, strategic hedge fund trader on all instruments. Let's go to Apple, shall we? So many charts on my screen. One moment. Let me find Apple. My charts, because of a bootcamp, a bit overloaded. So is anyone surprised that Apple stock in bearish correction? Should not be. Bullish rally on Apple overextended. Apple is stuck in brutal chop. Here's Apple. Stuck and frozen. In bearish correction. 215 is a key level on Apple. Apple exhausted, frozen. So again, intelligent trader understands the importance of bearish correction at this level. After this is level to follow. Apple exhausted. That's it. Do not overcomplicate trading. That's pure and simple. So when you trade one, you can trade them all with alpha Fibonacci system. So with the alpha Fibonacci trading system, trader becomes proactive, not reactive. Trader knows in advance institutional exits and institutional entry points. So what would your day in position trading be like if you knew hours, days, weeks, months in advance where institutional entries and exits are? Here is Bitcoin, and YCAN is my dearest friend for life. Do you remember the crash of Bitcoin 2022? Would you like to buy Bitcoin at critical key buy point 15,000? And Bitcoin skyrocketed. Of course, 80,000 was no surprise, was spelled out a year in advance. That's it. So when you trade Apple, you can trade Bitcoin. When you trade NVIDIA, you can trade S&P. You can trade Dow. You make a personal decision on what's appropriate for you to trade. So here's US dollar. My heart goes out to our students in Canada, as US dollar 40% higher than Canadian dollar. But students from Canada still signing up for the course because they're seeing clearly the value of this. US dollar is not selling off. 134 is a key level on US dollar. That's it. And that's very important top instruments across the board. And of course, if you decide to trade pound, as I was meeting with students in London a couple of months ago, has anyone seen good news in UK? Of course not. The big Australian pound from 103 when top funds in US buying and building the most spectacular real estate developments in such royal capital. No surprise, Alpha Fibonacci spelled out where to buy pound until it's not. Sell-off on pound is very good news for us Americans, as pound right now until a couple of weeks ago was 35% higher than US dollar. You are not speculating, you're understanding quite well where to buy, where to sell. Pound as well. So the critical key benefits of this system, you enter and exit from key institutional alpha Fibonacci levels. You're not staring at the screen, you are not speculating, you are not gambling. And here comes extremely important moment. What would your trading be like if you traded with institutional alpha Fibonacci levels? Here we go, Euro. This is war in Ukraine, Euro at the bottom. Alpha Fibonacci system shows you not to short despite global catastrophe. Alpha Fibonacci shows you to monitor for long. One of our students leaves Saudi Arabia and buys home in South France. Jamal is my dearest friend for life. Euro skyrocketed from 95 cents until 1,127. Let me spell this out for you. 104 is a lifeline from Euro. 104 where institutional entries were placed to buy Euro again when Middle East crisis starts, but Euro failing to break through key alpha Fibonacci level. Again, 104 lifeline on Euro. 104 is out, Euro in free fall. 1 to follow, 95 cents next. Good news to us Americans traveling to Europe. That's it. 104 on Euro is a key level. How to trade this? You must know the rules that we're discussing from micro to macro charts, from smallest 1, 2, 3, 5 minute to hourly, daily, weekly, monthly charts. So when you understand that your power lies in writing institutional entries and institutional exits on future stocks, crypto, forex, options, mutual funds, ETFs, commodities, metals, if the instrument has price, alpha Fibonacci system applies. This morning I'm on call with a student in Saudi Arabia. Did you know that in Saudi Arabia you're not allowed to short the markets? Let me bring to your attention very important institutional and retail chart. This is institutional chart on oil. Shock or not? How is it possible war in Ukraine, Abu Dhabi standing with Putin, but oil selling off despite endless bullish news on oil? So here's oil. Let's go back a year ago and see what alpha Fibonacci system spelled out. This is September 2023. Let's look on August 1st, 2023. This is how you're testing the system when you know far in advance, no matter what the oil news is, no matter what the global events are, you are not buying 85, you're monitoring for sure. If you buy oil, you're excited about reversal zone. Here's oil months later. So many times oil comes out with bullish news. So how is it possible oil in free fall? Wow, shock or not, complete collapse. Bullish news on oil don't mean a thing. Market reset with alpha Fibonacci system. It's a puzzle I keep solving and building every day. 20 years later, it's flawless. All I ask you is to make an effort. What is so important about this level? This is oil on September 10th as alpha Fibonacci system identified as a key buy point. This is micro chart, retail chart. This is institutional chart. Here comes bullish rally from 65. Student in Saudi Arabia ecstatic, buying oil and various oil stocks at the bottom again and again and again. That's the power and precision. You know where to buy, you know where to sell the markets. You're trading all markets as intelligent, strategic chess. What was so powerful last week on November 6th as oil news tomorrow in Trading Bootcamp that it's not too late for you to join? Last week, we had extremely bearish news on oil, but alpha Fibonacci system spelled out to buy, not to short oil. November 6th, let's go to the news, shall we? This was oil news a week ago. And again, I love bringing major news into the trading room and my students. This is how you ultimately testing all systems. This is November 6th, 2.1, extremely bearish number on oil. So how is it possible? Oil skyrocketing? Of course. And again, let me bring to your attention system a day before the news. News November 6th, here's system on November 5th. Wow, you are very well prepared, you understand not to short into this level. After bearish news, oil skyrocketing. That's it, pure and simple. Bold pink line identifies the end of the minor trend. And this is what played out on micro charts. So when you understand the power of this, you stop gambling, you stop speculating, you start trading all markets as intelligent chess. What do you see on oil 5-minute chart? It's exactly the same as euro, correct? It's identical level. It's exactly the same as US dollar. All the same. When you recognize it, you can trade any instrument you choose. When you focus on pure price and alpha Fibonacci for exits, everything changes forever. And that's oil in the last 2 years and last week with major news. So when you trade with rules, this is a rule-based system with precise entry, stop, and target. Everything changes completely. Let's take a look on Amazon, shall we? As market is flawless, alpha, Fibonacci chess. Are you trading with rules, with a proven system? If the answer is not, it's not too late. Do you remember catastrophic sell-off on Amazon 2022 when Amazon collapsed 65%? Alpha Fibonacci spelled out the collapse and also spelled out alpha Fibonacci buy point. There is no safe haven in Amazon. Safe haven lies in you and your intelligent, limitless brain. So here's Amazon skyrocketed from 86 until, my goodness, 209 now. 180 is a key level on Amazon. If it remains obeyed, there is no crash, no sell-off. Correct? That's it. The sell-off prior election was spelled out as we were monitoring response at this level. No speculation, no gambling here. Ultimate precision only. So if you want to trade Amazon or Nvidia or oil or euro or pound or US dollar, of course you can use charting on Meta stock. Absolutely. Of course you can use Fibonacci retracement tool on Meta stock. Absolutely. Traders do this all over the world on Meta stock, on stocks, on Forex, on commodities. Yes, of course. You also have additional option if you decide to day trade futures. Alpha Fibonacci trading software specifically to day trade futures is available for NinjaTrader 8 platform. So here we go. This is multi-market scanner on Dow Now. This is how alerts show up. So as I'm teaching currently in the trading bootcamp, if you are emotionally stable and you're obsessed with financial markets, enjoy. Day trade with ultimate precision. You remove speculation, you remove gambling, you day trading futures. If you are emotionally and financially stable and practicing on regular basis. But if not, you use system long term, as traders do all over the world. Pure and simple. This is software for Ninja 8 with trade recognition software. Show you entry, stop, and target. Can you stay in your lane when you drive your car? If the answer is yes, you can day trade futures. Green light, you monitor for long. And if institutions buy, you buy. Rules are met, take a trade. And if it's a short from the bold red zone, enjoy when you sell that top. And when you see multiple alerts, it confirms power. More the alerts, more the power is present. Single alert constitute weakness. Pure and simple. This is Dow futures long. A straight collapse from reversal zone. RZ means identical level. As you saw, except no software on this chart on US dollar, on Meta stock. No software on this chart on Nvidia. No software on this chart, but it's identical reversal zone. You simply insert proprietary levels on Meta stock and trade. You do not overcomplicate trading. If you make a personal decision on what's appropriate for you to trade, gold future, of course, you can. In summary, Alpha Fibonacci trading system identifies precise entry, precise stop, precise target, all instruments, all platforms, all time frames. You make a personal decision on what you will decide to trade. So again, from Stu, listen to her podcast. What a legend, trading it all. Cyril coming to the bootcamp in the middle of the night in Australia, 2-3 o'clock in the morning. Harvard of trading education, priceless. Carlton brought so many friends to the course. Patrick, Carlton's friend, keeps sharing that his success rate improved drastically. And that's what traders share all over the world. Ken, legend. Again, his daughter gave me this card. And that's the reason I say no to Goldman. Pure and simple. Husband bringing his wife non-stop. And this is a very important email. What does it say? I'm enjoying it truly a lot. Tom from New Zealand. As he says, I feel like I wasted 17 years going down completely wrong path. So this is the moment that can change your trading forever. This is the current events that are playing out now. We are in the middle of trading bootcamp. So what's essential to recognize when you come to the website, Trading Bootcamp is being recorded. So if it's not too late to sign up, we have only one spot left. We have 3 more days left. The value of the bootcamp, $27.77, included at no cost, with private mentoring, with group course for all platforms, or you have an option to also include software for Ninja 8. But if you do not day trade futures, option 1 and 3 appropriate for you. Trade meta stock included in every option. Software is never, ever, ever a requirement. It is only to day trade futures. So please review all the information on the website and take a look on this very important source, our YouTube channel, being updated as we speak, where you can view thousands of videos over the years. And if you would like to learn so much more about our students and their performance, simply review students' performance page. Because if these traders can do it, so can you. This is the words that I keep hearing time and time again. You developed holy grail of trading. All you have to do, make an effort. Tomorrow in the bootcamp, George will be speaking from Moscow. He's trading on platforms and instruments I never even heard of. He's trading stocks when he's not stressed out, being in the middle of the global conflict. He's trading futures. If you like to trade options, use meta stock for charting, and Richard oncologist retired trading options. Of course you can. And again, traders coming to me after trying 10, 15, 20 years, and all of a sudden seeing markets in such simple, clean light. Brad Legend tried for 20 years prior until he came to Fibonacci Trading Institute. And that's our global story. And that's our global journey. And that's the reason I wake up 5 a.m. 5 days a week. That's it. So when you come to the website and you review all the information and you have any questions for me, simply pick up the phone and call. US 925-257-4298. I promise you, I love to speak with you. I do not like writing long emails. And again, if you want to hear from our traders, our podcast channel can tell you all you need to know as traders from 14 to 80 plus year old sharing what they trade. And when a hedge fund manager bringing his 14-year-old son to the course, and his son can trade the system, so can you. But father and son trading different instruments. 5 new podcasts this week recorded. So please review all the information and recognize final chance to sign up for Trading Bootcamp, value $27.77, will never, ever, ever repeat again. I dedicated this Trading Bootcamp to US election. And again, if you sign up with the invitation to the trading room, when trading room will reopen sometimes next week, you can ask and view the system in the live markets. That's it. So again, this event will never repeat again. We have 3 more days left. It's being recorded. When you sign up, you will receive recordings to what played out during trading bootcamp. All the details on this page. So thank you, traders, so much. It's been my joy and honor being here with you today. I hope I'm not gonna lose my voice as I've been teaching so much today. 1 second, let me see the question. You learn the course where to place the stops. It all depends on the instrument you choose. 80,000 levels. Yes, I record it. You can contact me. Yes, and yes, and yes. Yes, it works on MetaStock. I have responded to that. Any other questions, please do ask.
I think you got them all. I don't see any in Utah either. Peter wants to know if it'll work with options trades.
Of course, yes. So when you come to the student's performance, absolutely, as we discussed, this is the levels option traders use. Timing extremely important on options. So you know far in advance where to buy the bottom on NVIDIA. If you know where to sell NVIDIA and where to scale out, this is journey of Richard, oncologist, who came to me. He was losing so much money on Tesla options. You can listen to Option Traders podcasts, absolutely. Richard retired trading alpha Fibonacci system on various stocks with options. You can hear multiple option traders and see option traders performance on our website. Excellent, excellent question. Podcast where you will find.
We've got the chat, the link in the chat, and Greg, if you don't mind, will you put the link into the YouTube as well?
Yes, absolutely. This is the YouTube link. Yes.
Oh no, I meant into our YouTube channel. We're simulcasting it to YouTube, but Greg, if you could grab the link and put it over there, I'd appreciate it. With the YouTube, I can't just paste it into chat. It has to be from the MetaStock account. So.
Got it.
Alla, thank you. Best place. What would you recommend? You've done several links here. What would you think would be the best place for somebody to get started? Would it be the testimonials page or the bootcamp for graduates and students? Which one should we send?
I think you just start from the home page. Okay. On top of the home page, when you come to the home page, the top paragraph summarizes what you can do. So if you join us today, you start trading precise institutional alpha Fibonacci live system for day in position trading, which absolutely includes MetaStock. And you have option with group of private mentoring session. But again, let me repeat, this event will never repeat again, as I dedicated this trading bootcamp to US election and trader psychology while we dissecting every single day multiple trades from micro to macro charts. And we have graduates of the course stopping by and sharing their stories. George from Moscow will be speaking tomorrow live in bootcamp. Sue, Pablo, Ken spoke on previous days.
Very good. Okay. Well, thank you very much, Alla. I appreciate your coming in and spending some time with us today. It was great to have you.
Amazing, Jeffrey. Thank you so much for having me.
Of course, anytime.
Any questions? I live and breathe what I do. Please simply pick up the phone and call, or send me an email with your phone number, and I promise you, I will reach out. Thank you, Jeffrey. Thank you, traders. Have a fantastic afternoon. Bye-bye.
Thank you, Alla. Goodbye.
Bye.
Go ahead and do this real quick. Go ahead and show my screen. And let's go ahead and just kind of go through. Go ahead and turn on my camera again. All right. go through kind of the sponsors. Really appreciate everybody. We had a great session today. Vince Vora came in. He talked about his very popular plugin, the Vora Victory Method. We talked about Wendy Kirkland's AST Trader. What else did we talk about today? Anyway, lots of really good specials, lots of really good add-ons all day long. You can take advantage of those if you go to metastock.com/promo. Before we kind of talk a little bit about, before we go, I want to say thank you to AAII. You can find out more about AAII at aai.com. They've been in business since 1978, offer all kinds of really cool stuff. They grade stocks. They have an active investor division. They have all kinds of courses. AAII.com. Oops, I unpaused the YouTube video. I want to say thank you to Stocks and Commodities. You can find out about Stocks and Commodities magazine and subscribe at traders.com. If you haven't yet, go over to thetradersforum.com. It's someplace where we get together. It's a partner site for Metastock. We get together, we talk about trading ideas, we learn about technical analysis, we have guest interviews, we have a great community that we're building, we're growing. We just started it. Come and join us at thetradersforum.com for all that really cool stuff. It's a great site, and it's free to join. Special thanks to Trade Thirsty. You can get their free income generator top ETF report at tradethirsty.com/free. Thank you to the CMT, cmtassociation.org. And of course, we're Metastock. So we talked about a lot of, how Metastock can help you find and identify trades, test strategies, figure out what works well, all that kind of good stuff. You can go right now, get some information about Metastock, sign up for the extended trial, take advantage of all of the bonus offers that we've talked about. Metastock.com/conf-promo, Metastock.com/sales-chat, or 800-882-3040 if you have any questions. We'll be happy to answer you. We'll be happy to hear from you. Great software. You can start scanning stocks, playing along with us tomorrow if you want. Give it a go. There's a reason it's been rated so highly for so long. Tomorrow we've got another great lineup. Come in. We hope to see you there again tomorrow. Thanks for being here. Thanks for being part of the conference. If you're watching us on YouTube, make sure to like and subscribe. Stay healthy, stay well, take care of yourself. I'll see you tomorrow.